Good morning.
Driving in the U.S.
Welcome back to Squawk. It seems his headline making an interview with Elon Musk. He talked about his time working to cut federal government spending. He recently pulled back from that effort. While Musk was at DOGE, U.S. Agency for International Development became one of the faces of the severe cost cutting. Now, Musk famously posted on X that his team spent the first weekend of February feeding USAID into the wood chipper. Here's how he addressed the agency in yesterday's interview.
First of all, any program in USAID that had any semblance of merit was retained and folded into the State Department. So, and if there's some exception to that, we're all ears and we'd love to look at it.
After starting the year focusing on DOGE, Musk now saying that he plans to be at the White House a couple of days every few weeks to help the Trump administration.
Musk also confirming Tesla and the plans there to have robo-taxis on the streets of Austin, Texas by the end of next month. In an interview with CNBC's David Faber, Musk said that Tesla is hoping to bring the self-driving taxis to Los Angeles and San Francisco after Austin with a careful start and then rapid expansion after the initial start. He also talked about potential partnerships with other automakers.
There are a number of major automakers that have talked to us about licensing self-driving and are very much open to that. I think the more we demonstrate the capability of self-driving, the more that they will want to license it, and we're happy to help.
And Mr. Musk has been known to make some outsized prediction when it comes to his technology. He said he expects there to be hundreds of thousands of self-driving Teslas on the U.S. on roads by the end of next year.
Meantime, Apple approving the return of Fortnite to the App Store. We talked about this a little bit yesterday, now allowing the game to return 5 years after it was removed. Apple had kicked off its devices, or kicked it out of its devices, I should say, back in 2020 after Epic Games updated the popular game to take payments directly, cutting out Apple's in-app payment mechanism. That kicked off a years-long legal battle. Last month, the judge ruled that Apple wasn't allowed to charge a commission when apps use a link for web payments. Now, Epic resubmitted Fortnite to the App Store, but Apple had been dragging its feet on the app review process. Apple now in the process of appealing the latest court ruling.
NVIDIA CEO Jensen Huang saying that U.S. export controls on sending AI chips to China have cost American companies billions of dollars in lost sales. Huang making those comments at a conference in Taiwan. He called the Biden administration's AI diffusion rule a failure. It aimed to slow the sensitive chip export by dividing countries around the world into three tiers, with China blocked entirely. The Trump administration, though, meanwhile, is considering changing those rules. Wang said that because of the U.S. controls on chips, AI researchers in China have been forced to use local technology. All right, you ready, Court?
Tell us.
Target. Apple's first quarter results. Courtney Reagan joins us now with more. She's fast.
Yeah, I'm very fast. So, looks like a pretty disappointing performance from Target for the first quarter. Revenues, $23.85 billion, missing the estimates for $24.27 billion. Adjusted earnings come in at $1.30 per share. It's unclear if this is comparable to consensus. We think it is, but there's this favorable litigation settlement, pretty large actually, that analysts most likely were not expecting. Comparable sales fell 3.8%, much worse than the 1.9% expected drop. Digital sales did grow 4.7%, driven by same-day options. Target is lowering its sales guidance to low single-digit declines compared to consensus for 0.3% growth. It's also cutting and widening its earnings forecast for the year between $7 and $9. Now, on a media call, Target CEO Brian Cornell wouldn't say definitively if the retailer had raised prices due to tariffs or would in the future. He did say Target has many levers and mitigation strategies it would employ first, raising prices as a, quote, last resort. Chief Commercial Officer Rick Gomez explained mitigation should offset the majority of tariff pressure, but added the retailer would adjust prices if necessary. Now, Cornell called out, quote, ongoing pressure from discretionary categories, 5 consecutive months of declining consumer confidence, tariff uncertainty, and the reaction to its upgraded DEI program that's called Belonging as drags on the quarter. Traffic and transactions both fell. Margins were compressed from higher markdowns and higher cost of digital fulfillment. Valentine's Day and Easter, that did drive sales, and that limited Kate Spade collaboration was the strongest in a decade. Cornell said, quote, we're not satisfied with these results. They're focusing on factors within its control. Target is setting up a new program led by its COO, Michael Fidelki, that's tasked with moving faster and accelerating growth, or re-accelerating growth rather, in the business. And Christina Hennington, as well as Amy Tu, are exiting their executive roles as a part of that move.
Can I just tell you how fascinating it was, not just to watch you speak about this so that we understood it, but if you watch the stock as it was going, I mean, this is like algos. First, on the original back of the news, I don't know if you saw it, it was like up 5%.
Then down.
For a hot minute, it was like up 5% because the algos must have been reading the initial headline, probably with this legal settlement in there, I don't know.
In their favor, yeah.
Then it moved into the red. Now it's back, it's now back up 3%.
Yeah,
or
but
2%. And I know it's early.
No,
but
I'm not saying that. I'm saying, you know what the high was?
Oh, yes, life is relative. I'm not.
No, it was 260. This thing is sold out beyond belief.
Yeah.
This is that was only a couple years ago. That was in 2021. This thing is battered, beaten, bruised. Shareholders are, they're crying uncle. I don't know what they'd have to say to get this to go down more at this point. Think about that. What, 260? Is that?
Oh, you just think this is like you can't fall off the floor situation.
Exactly.
Okay.
That's all. I mean, 260. Think about it.
Isn't that a great phrase, by the way? I should give credit. It's my mother-in-law.
Did do what?
You can't fall off the floor.
No.
Yeah.
I like that.
No. But and in the same period, same business, right? Sort of. Walmart. Look at that stock.
Yeah, and we've sort of asked these questions too to the Target executives, and they're like, look, we don't know Walmart's business like we know ours, but we do know that our discretionary categories are much larger than Walmart's, and so that can account potentially for some of this, and we know those categories have been pretty soft.
Can we talk tariffs for a second?
Yeah, please.
And just the articulation, communication.
And the language very precisely from some of these
So
retailers.
we have Lowe's this morning. We had Home Depot yesterday. I was saying Home Depot got all the headlines it could possibly want. At least if there's an audience of one in the White House, which was to say, effectively, we're eating the costs and it's not going to get passed on to customers. I'm not sure that that's actually accurate.
Exactly. And they were very careful in repeating the same phrase. We generally intend to maintain pricing across our portfolio.
Right.
Very careful phrasing, because I think if they are unable to do that, they would like to keep pricing. And yes, they have done all of these mitigation strategies and diversified their supply chain, but hasn't everybody else?
Right.
And that was just sort of my question.
Well,
Home Depot still imports about half from other countries. Now, they say in 12 months, no one country outside the U.S. will represent more than 10%.
Right.
But if they import 50%, and Walmart is only importing a third, and they're bigger, and also do all these strategies, yet Walmart says we can't absorb it all. How can Home Depot? That's just...
Right.
How does the math...
Okay, so I haven't lost my mind.
No.
Okay, what about Lowe's?
So Lowe's, when I looked at that release, they did not really say anything.
They said nothing
about the tariffs.
That's what I was looking at right now.
Yeah. So the call is at 9 a.m. So we'll see what they have to say. But the analyst community had thought that tariffs would likely hit Lowe's more than Home Depot. They didn't say anything.
And they affirmed their guidance.
Yeah, and to be fair, Target doesn't really mention tariffs in their release as well. But luckily, as a member of the media, we were able to get through to them and
Right.
get some more clarity on the bigger picture things that are not included in that release right away, so we can give some context to the numbers so that those stock moves can be more accurate.
There we go.
Looks like there might be a trapdoor to the basement in your floor.
You can fall. You
Might be-
can fall off the floor apparently.
There's a thing called like floor time, where apparently if you lay on the floor, it's supposed to like reset your body and it's like relaxing.
So that's what this is.
Floor time.
I don't think it's relaxing though. in
No,
this
but
case.
I'm just thinking sometimes you like to just like lay on the floor and just like
I do like to. I like
I
to
do
sit on the
too.
floor and lay on the floor. I do. Not. I don't want to sleep on the floor.
when I'm playing with my kids, I like to lay on the floor. It's
Yeah.
kind of like I don't know. Anyway,
Not good for the neck.
Basically, like, if you like to lay down anywhere, the floors is, if you don't have you don't put it as a futon or something. Yeah, laying down's nice. Because
Supine is better
life
than
is, life is
than
hard.
everything else.
what's the yoga pose where
Life
you
is
just lay
hard.
there? It's a long word. So
Look at me,
It's my
don't look-
favorite. It's my
Don't look at
favorite
either
one.
of us for
Don't-
yoga.
It's my favorite one. You just lay there.
You might see guys walking around with yoga mats, and I just, okay.
They're very flexible.
Who are? Yoga guys?
Yoga guys. Our former colleague Tyler Matheson, big yogi,
Really?
did wonders for him health-wise.
Maybe
Wow.
that's my problem. Because I'm not flexible.
I want to be like Gumby. Okay, coming up, the FAA will cap the number of flights coming into Newark Airport in New Jersey following a series of tech outages. We're going to bring you the details about that and actually what it means, because there's more to this story. Plus, as we head to a break, a look at yesterday's S&P 500 winners and losers.
AI meeting agent.
Good morning and welcome back to Squawk Box Live from the NASDAQ market site in Times Square. Checking the futures, this is about as bad as we've seen this morning. The Dow Jones now indicated off about 400 points. The S&P now down about 45, and NASDAQ down 170. One of the problems for the Dow, United Health, falling sharply after a downgrade by HSBC. It's 140 points, or 130 maybe, of downward pressure on the Dow. This morning, Dom Chu's going to have more on that story at the top of the hour. And is that it? Down 50% yet? It's working? I think it must be close, isn't it?
Getting close if it's not.
From its highs, let's see.
What do you got there?
I'd have to go backward. Just this year. I don't even have to go back. 630 is the high.
Okay.
$630 a
go.
high
More than-
in the last 52 weeks.
Meantime, for those travelers, this is a big story. The FAA now capping the number of flights allowed into Newark Airport following technology outages and a staffing crunch that led to delays and cancellations. 28 planes will be allowed to arrive per hour between June 15th, when construction on a runway is scheduled to be completed. Outside the construction period, arrivals will be capped at 34 per hour. The interim limits take effect immediately and run through October 25th. So this is a long period of time, including departures. That brings down the traffic to 56 flights per hour. That's down from more than 70 that the airport had been handling during peak periods before the FAA began slowing traffic. United had already taken a number of its flights off of its schedule, so the disproportionate impact at this point is likely to impact a lot of the other airlines. It may still impact some United flights, we'll see. And then, of course, the question is, does this make the situation hopefully safer? Which is to say that before there was, less time for error, if you will. Now, if you have a lot less flights coming in, this idea that the radios have stopped communicating with, from the tower to the planes, that apparently happens. I couldn't believe it. This is not like specific to Newark. This happens all over the place. The problem is that a place like Newark, when you're landing, 70 planes an hour, there's not a lot of time to, fix the situation in those instances.
People that are in charge would say, yes, it's safe to fly into Newark. They would have said that at 70, and they would say it now with 14.
It's safer.
That's the question. And we shouldn't overstate it because there hasn't been
right
anything happen at Newark. But we'd like safer. Now, is 40 safer than 56?
I think it has to be, right? Because
I don't know, but is it overall though? Is it safe?
If I told you it was 2 an hour,
my God,
you'd say
that's
that would invariably be
That's
safer.
from that movie. Is
right?
is it safe?
But it was 2 an hour, it'd be safer, right? Because
Right.
they'd be spaced out and like super spaced out.
Right. Well, 56 sounds better than 7, but sounds like a pain, and you just have to take that into account, I guess, when you're traveling, booking places. I mean, can they do it? Did we need 70 flights?
I think that yes, because now
Or the demand.
the flip side is prices are going to go up materially, and the prices for flights out of LaGuardia, out of JFK, out of Philadelphia, all that's going to go up. There's no question. We'll talk more about that and so much more. We got a lot more from CNBC's big interview with Elon Musk. Mr. Faber speaking to him about what he had to say about Tesla's value, which fell hard earlier this year, but it's rebounded quite a bit. Squawk Box returns in just a moment. An update now on a story we just told you about earlier. Bloomberg now saying its systems are returning to normal operations. This is after an outage on its terminals earlier this morning. A spokesperson had said that the terminal functionality is being restored. That outage forced the UK, the United Kingdom, to extend the window for an auction of government debt. So it's actually having an impact on liquidity, operations. I mean, there were banks and firms that were kind of freaking out.
Right. Someone fixed it. Can you imagine if they called you in?
To
Or
fix
me?
it?
Yeah. Here's what's happening. Andrew Roth Sorkin, fix this. It's me, 10 years from now, it's still going to be like that. Right? After I reboot, you got anything after you reboot? Got anything?
Just turn it on, turn it off.
Oh my God. Now I turned it off. Stack. Sorry. Elon Musk. Shoot. Okay. Elon Musk and Tesla have faced backlash this year for Musk's cost-cutting efforts at the Department of Government Efficiency. Speaking with David Faber, CNBC's David Faber yesterday, Musk attributed Tesla's recent sales decline to a need to retool the company's manufacturing process.
We did a massive global retooling of all the factory lines for the Model Y, which is it's a majority of our vehicle sales is the Model Y. The Model Y is the best-selling car on earth. Really, the best indicator of the forward value of the company is the share price, the market cap, and that's very strong right now.
Join us now on Tesla, Elon Musk, and much more. Tim Higgins, Wall Street Journal business columnist and a CNBC contributor. Tim, it's good to see you. Do you think that Elon was hesitant to say, yeah, my work with Doge and my closeness to President Trump, that's not what it was? It was really just, sort of retrofitting the manufacturing that caused some of the downdraft. Is he just... He just won't admit that part of it might be that?
It seems like it, right? Especially in the past, he's talked about how there are sides out there who are against Tesla because of his politics. It seems like the math is equaling that. But hey, let's give him the benefit of the doubt. Without a doubt, the factory changeovers is always an issue for a car maker when they go through that. But typically, a lot of car makers, especially in the U.S., they plan for those things. And the market, I don't necessarily think, was expecting the effect that we saw, right? So clearly there are people out there who perhaps were Tesla supporters, Tesla buyers, who have pulled back, and that's without a doubt. I'm in San Francisco, you see those bumper stickers on Teslas that says, I bought this before Elon went crazy.
Well, if there's stickers that say, I used to be blind and now I can see because of Neuralink, he's an amazing guy, and the stuff that he's accomplishing is so beyond the pale. Can he move beyond this phase in terms of public opinion? And I mean, he's got certain people that love him that didn't used to love him, but a lot of people that used to love him don't love him now. Can he have everyone love him again at some point, Tim?
It's hard to imagine that everybody's going to love him again just because he's so divisive on all sorts of different subjects. But I think you hit at this very kind of core of it. One of his powers is that he inspires a lot of people to think about the future that is possible, that sci-fi excitement, whether it's traveling to Mars or fixing real human issues such as being paralyzed with Neuralink. So these are very exciting things, and he's spending his time trying to do it. And when you get back to Tesla and what he is doing now, really kind of this interview was so interesting. It was almost talking about a reset. If he's putting the kind of the on-off button on kind of the Tesla experience for the year, because he's telegraphing to the investor that he's back. There's a huge challenge ahead that could change kind of the conversation about the company, and that is the rollout of the driverless cars, of robot taxis. This is a game changer potentially for Tesla if he can execute, if he can pull it off.
It is science fiction, and then all of a sudden you read some of it's already happening, which is crazy with Neuralink and some of the thought control. But the latest thing with almost going around the eyes and having some other receptor even superior to the eye, that's sending signals to the visual cortex or whatever it is where you see sight, that could actually be superior to the eye. And obviously this is probably, we won't live to see something like that. Then maybe you will. But this kind of stuff, it's way out in the future. But that's where I'm thinking. 50 years from now, Elon Musk might be back to, Thomas Edison. Just 100% of the people.
Absolutely. These kinds of advances are perhaps what his legacy, most likely what his legacy will be if he's able to achieve them, without a doubt. The book isn't written on his entire career. Will this be a subchapter of politics? Perhaps, especially if Tesla is deploying humanoid robots, as he talks about them being the biggest product out there. If we all have our own R2D2, absolutely. The question and the challenge for Elon Musk for the past few years on some of this stuff is implementing, is executing.
Yeah.
He's talked about driverless cars for a very long time. Now is going to be the time to see if he can do it.
Well, rubber meets the road, and then you just would say, well, what would you rather have? So it says, nah, we're never going to be able to do that. Or I'm going to do it 2 years before it actually happens. Probably you want the dreamer and the person that exaggerates more than the person that says it can never happen, I guess.
Well, you hit on this interesting point here. Tesla, in a lot of ways, what he has done is he's got a startup mentality here. He is betting the company on this kind of technology. There's not a huge lineup of vehicles in the pipeline that we know about. The product is stale, if you will. Yes, the Model Y is getting something of a refresh, but there's not a hot new vehicle that we're expecting that really could move the metal like we've seen if they are not successful with driverless car technology.
Tim, my real question about this is the 10 cars that he rolls out, and then the 20 and the 30 and the 40 in whatever sort of successive order this goes. Do you think it's going to be a glide path, or do you think that we're going to learn, there'll be headlines throughout, and that we're going to be sort of grappling with how their ride-hailing technology works relative to Waymo? I mean, how does that? What is your sense of how this will actually go in practice?
I would imagine somewhat messy. If you look at how these programs have launched in the past, they're slow. It's complicated. What we've learned from watching Waymo, the Alphabet's driverless car taxi program that is operational, that is taking paid customers in places like San Francisco, Los Angeles, Austin, 10 million paid rides. What we've seen from them is it's a huge operational lift. It's not like putting a Roomba out into the world to go do its business. There's the cleaning of the vehicles, there's the charging of the vehicles, there's the operation behind to make sure that they're working. If they run into issues in the real world, people have to deal with those. It's super complex. And that's the kind of thing that I'm interested to see how Tesla is going to be addressing.
All right, thanks, Tim. Tim Higgins. Oh!
It is.
Coming up, Amazon shareholders are set to meet today. Just ahead, the biggest issues the company's facing. We're going to talk to an analyst. Squawk Box. We'll be right back.
Download the app.
It is 7 a.m. now on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan back in the house, in the chair no less. Gary Diller was sitting in your chair, by the way.
He was right here.
In the chair.
Like he was here.
Felt a little uncomfortable about it. I'll tell you, it's true.
Honestly,
You know, Becky's off today. She's gonna be
should
back
I feel
tomorrow.
uncomfortable now?
I mean, you don't have the cooties. Among today's top stories, the House Rules Committee meeting early this morning to try to move President Trump's reconciliation package forward. The meeting starting at 1 a.m. Eastern time. It's still going on. I don't know if they're drinking Coca-Cola, coffee, Red Bull. What do they do? We're going to bring you any developments as they happen and whether any of them take a nap. Meantime, Politico reporting that Apple CEO Tim Cook spotted at the White House yesterday where he met with President Trump. No word on what they discussed, but last week President Trump said he told Cook he doesn't want Apple to shift production from China to India and urged him to pivot to the United States. Had a little problem with my friend Tim Cook. You remember that? That was the line.
You're doing it.
I'm doing it. Yeah.
Was it awful?
Wasn't awful, but it wasn't very good.
There are people that do it really
well. We should actually get one of them, like on our payroll, so we can just anytime we need to insert some.
Mr. President? Yeah,
Yeah.
ask him. Like,
Shares, it would just be fun.
Have you seen the baby? Remember the little,
That was a
like
little-
a 2-year-old? Yeah, AI.
Shares of
Pretty good.
VF Corp lower right now. The company posting a slightly narrower than expected loss on revenue that missed estimates. VF Corp now sees a wider than expected operating loss of $110 million to $125 million in the third quarter. The company says it's optimizing its sourcing to limit proposed tariff headwinds and accelerating production and shipments to the U.S. during the 90-day tariff pause. And let's just hope it is a pause.
All right, checking the futures this morning. They're sharply in the red, but not 400 anymore on the Dow, and United Healthcare isn't helping. Let's get to Dom Chu with a look at this morning's pre-market moves. Have you worked on a Trump impersonation at all? Can you do that, Dom?
I don't think
the
I
likes
can.
of which
No,
you can, but you don't want to.
Well, no, I mean, I think I can try to do anything. I don't think I'm very good at it. You know,
don't do it.
In
Don't do
essence,
it. I'm not going to either.
I could attempt it, but I'm not sure that the viewership or listenership of our program would be appreciative of the impersonation quality that I would have.
Oh, the quality itself. Okay.
All right, so let's first of all talk about what you just alluded to, Joe, Andrew, about United Health and the impact on the Dow. So the rebound in shares of United Health are kind of, maybe it's running out of a little bit of steam this morning. Shares are down roughly 6%, due in part to a downgrade to a reduce or sell rating from a hold over at HSBC. The analysts there are saying that growing medical costs for policy risks for its pharmacy benefits manager and health services company Optum, right, could spoil the stock's recovery. The team there lowered its price target on the stock to $270 from a prior $490. That's a 16% implied downside from yesterday's close. So UNH is a bit of a drag here on the Dow this morning. So we're talking roughly about 150, 160 points of the 370 so points you see on the bottom of your screen for the Dow's implied open is just United Health shares. So to Joe's point, UNH is a bigger drag. And then you got shares of Palo Alto Networks lower by almost 4% at this point after the cybersecurity company beat on both the revenues and profit side of things for its report, but reported a weaker than expected gross profit margin. Sales climbed 15% from a year ago, and CEO Nikesh Arora told our own Jim Cramer last night on Mad Money that artificial intelligence has quickly become the main driver of his company's business. So Palo Alto Networks down about 3.75%. And we'll finish with the big retail earnings of the morning so far. Of course, Target shares lower after it reported weaker than expected revenue and same-store sales. The company is also lowering its sales guidance due to low single digits declines compared to the consensus for a 0.3% gain. The company said weaker discretionary spending, uncertainty about tariffs, and backlash to the rollback of its diversity, equity, and inclusion initiatives hurt its business. Meantime, Lowe's shares higher by about 3% after it reported a beat on revenues and earnings, and revenues were just roughly in line with estimates, though, actually. The company is also sticking by its full-year forecast, growing sales from home professionals, and those pros are contributing to its particular success. So Target shares down 2.5%, Lowe's up 2.5%, and that's the balance of the retail headliners this morning, Joe. I'll send things back over to you, my President Trump impersonation.
Yeah, you can't. Don't. I know a lot of the. Usually he'll say the likes of which we've never seen. He says that a lot. I can do it, but I don't say it like him.
Have we heard him use huge recently, like YUGE, huge to huge. I haven't heard that in a while.
And he says big league, and people say he's using the word bigly.
Big league. You know, funny story about me, and not to make it all about me, but when I was a kid, one of my nicknames was Big League Chew, like the gum, right? Because my last name was Chew. And,
That's not bad.
Yeah, there you go.
That's not bad. All right, Chew, big league.
Yeah,
Chew.
thank you very much, guys.
You're welcome. So we're going to keep asking everyone that comes on whether Google is going to be around in 5 years, and they have reason to be worried. My question to you is, you know how...
You saw the AI stuff from yesterday.
That's what I mean, but you know how everybody gets supplanted in technology because the new kids on the block are 25 and they're smarter and better or more, I don't know, they work 20 hours. Can Google stay in the game? Does it have the technology to compete with the leaders in AI right now? And will it? I mean, because I don't use Google anymore. I don't need all those little, I got to pick which one that gives me the right answer.
So to me, the Google story is slightly different. I think Google is clearly around and clearly will be doing quite well. I mean, I think if you saw some of the stuff they're doing in AI, their AI project is probably as advanced, if not more advanced, than just about everybody else.
But they're just changing their search.
The question mark is the search piece, which is the way search has always worked. They've had a monopoly on that kind of business, and how does that all change? And the other question is whether all these large language models affect their commodity businesses. Meaning the Google one and what OpenAI is doing, and what Anthropic's doing, and what Perplexity's doing are all in the same
Do they need?
kind
Are
of
they
category.
are they collating the Google searches in the first place so that the people paying for the words that are in the Google searches, they have to keep doing that for even Perplexity to get the info from Google?
Well, right now, by the way, people aren't realizing Perplexity, OpenAI, Anthropic, their business model is totally different and is not as good a business model yet as Google, right? Because what they're doing is charging you, the customer.
Right.
There's
Instead of
not an
people.
advertising, a real advertising component yet. And the question is, when that happens, how does that change the business? We'll see. I don't know.
Just, I don't use Netscape that much anymore. I don't use Novell. They're all gone.
You're calling the end of Google right
No,
now?
I don't know. I'm asking because I don't use it when I need anything anymore. I never Google anything anymore.
But that's because you've become a Perplexity person.
I'll use your chat
GTP now?
I use that too. Sometimes it thinks longer. Maybe it's better because there's more thought into it. Yeah.
Coming up, what to watch at Amazon's big shareholder meeting today. Stay tuned. Squawk Box returns after this.
driving in the U.S.
Amazon's annual shareholder meeting set for today. Shares of the company up about 15% since Andy Jassy became CEO. Joining us right now, Scott Devitt, Wedbush Securities Senior Analyst. Good morning to you. What are you watching for? What do you want to learn today?
Good morning, Andrew. So I'd say three different areas of focus. First, on the cloud business, Andy talks quite a bit about the fact that 85% of compute is still done on-premise, and so there's a significant opportunity for the cloud business to grow that market share over many years. And then he's also mentioned that the opportunity in AI within cloud is tens of billions of dollars of incremental revenue on top of the business, and so I'm sure they'll talk extensively about the AI opportunity. In retail, you're going to hear them talk, quite a bit about the Prime business. The amount of items that are qualified for Prime is something like 300 million. I think there's tens of millions of items that are delivered in the same day or next day. Almost 2/3 of the top 60 metros in the U.S. show up same day, next day. So a lot of conversation around pushing that retail business forward. And then finally, this advertising business, which is now a $65 billion high margin business, probably some conversation around that as well.
In terms of the tariff piece, we've been talking about Target this morning, Lowe's, obviously Home Depot. Everybody in the wake of Walmart's, I don't know if it's a faux pas, but maybe it's just being transparent. Say, hey, we're going to be raising prices. By the way, Andy Jassy told me on this broadcast, I believe, about a month ago, we're going to be raising prices. Of course, there was a bit of a slapback to Walmart when Doug McMillon made those comments. What do you think we're going to hear in that regard?
So Amazon's model is a little different than Walmart in that 2/3 of the sales come from third parties who set their own prices. So Amazon uses its first party business, to help drive competitive pricing, but a lot of the decisions are made outside of Amazon. And so the marketplace in general is a price following marketplace. So if others hold price firm, I think you'll see merchants on Amazon be forced to hold price firm. If Walmart tweaks pricing in some areas, you'll see Amazon prices rise as well.
Scott, I want to thank you for joining us this morning. We're looking forward to hearing what Amazon has to say, and I'm sure we'll talk to you about all of that and so much more soon. Thank you.
It was like a slap down before Walmart. Remember by the
That
press
too.
secretary? He said
Well,
it was
it was
un-American.
Well, because it was a miss, but there was a
Right.
It
It was on a
misreport.
small part of Amazon's business.
But they weren't even doing it.
They weren't, but even the notion that on that small
Right.
part, on the cheap stuff that they were doing it, they got
Right.
huge blowback, like immediately. It's unbelievable.
From the White House.
From the White House.
Meantime, coming up, what the bond market is telling us about the economy and the Fed's next potential move on interest rates. We'll talk about it after this.
AI meeting agent.
Welcome back to Squawk Box. Check out the treasuries this morning. See the 10-year now 453, almost 454. For more on the bond market, let's bring in Jerome Schneider, head of short-term portfolio management at PIMCO. I sort of saw it this way too, Jerome. The market impact from Moody's is relatively limited, but tells us once again, 37 trillion. Boom, nothing being done in terms of deficits this year, last year, next year. That on the one hand,
Yep.
so that's eroding the fiscal outlook, but bonds are cheap. But then right after you say that bonds are cheap because there's growth concerns and inflation seems like it might be under control.
Yeah, for investors, they have to contextualize the conversation. Yes, we've been saying at PIMCO the fiscal outlook has been daunting for quite some time.
Right.
So the Moody's announcement was very limited in terms of practical implications. But for investors, rationalize the bond market right now. The income generation in the bond market is a positive. The real returns after inflation returns are about 2%. So even if inflation is a little bit higher than expected, bond investors should still get some expected real returns after that fact. And more importantly, the volatility, the growth uncertainty that is prevailing in the market, that's not necessarily going to be leak into the bond market at this point in time. So the income generation available in the bond market is actually pretty exciting at this point in time, something we haven't seen in almost 2 decades. And so put it in the big picture, it's a place to look, an island of tranquility amidst the volatility that's out there.
Growth concerns can be positive for interest rates, obviously.
Right.
Until they become, growth concerns turn into something worse, where then you start worrying about defaults and things like that.
Right.
But as long as you don't get to that point, growth concerns can be a reason to own bonds.
Yeah, we're forecasting a recession probability of about 35% at PIMCO, and that's sort of come down over the past few weeks, clearly. But that real-time calibration suggests that there's not serial defaults. It's simply a slightly harder landing than expected, a low-growth environment. That should be expected. So right now, the calibration is a Fed that's probably going to be a little bit more pensive, a little bit more elongated in terms of cutting rates and adapting to the market. Inflation might be a little bit higher than expected than their target over the next year or two. That's to be expected. But at the same time, put it all together in terms of the risk opportunities. The bond market is really a place where you can look for assurances that in the front end, you can get 5 to 6% type of returns with high quality assets and diversified portfolios. It's not necessarily a place that has a lot of volatility given the broader market uncertainties with growth.
You still sound like you're saying, make me chase, oh bother, but just not today. Yeah, I mean, 37. We got major problems, and no one in the right mind long term would want to be in fixed income.
We just spent a week talking about some of those major problems out in California, and those will not be resolved today or tomorrow. But in the longer term, we will have to deal with.
In the longer term, we're all dead?
Well, no, not necessarily. But we're going to see that start to be priced. Well, we haven't found the pin.
None of us are getting out of here alive.
Right. So, but we are starting to see that being priced and rationalized in the market. So I don't want to be dismissive that markets are recalibrating in that sense. But we will have to take into account higher inflationary expectations. And the practical implication for most investors is let's rationalize what higher inflation rates do to overall portfolio allocations and prepare for those environments. What used to be a 0 to 2% inflation rate might be a 3 to 4% inflation rate. And so advisors, allocators...
Because of our problem, that 37 trillion.
Well, we're structurally changing the economy in many ways.
When is the Fed going to cut?
So we forecast 2 rate cuts this year, beginning in September, and you probably have a little bit more elongated. There's factors that come in, obviously more data dependent, that perhaps push it into later this year.
Really?
And then when you get into 2000,
what would push it? Good growth or higher inflation?
The inflation factor is really important.
From tariffs.
And not necessarily just from tariffs, but you're seeing, again, the market or the economy recalibrate. It's not necessarily until you see job weakness and unemployment rates approaching 5% that you necessarily see the Fed come into action. And so that tension, that focus on inflation, the focus on price stability, Joe, is key and essential for the Fed.
So you said they will cut, so 5% is coming in unemployment this year?
No, not necessarily that quickly, but it's going to you're going to see an erosion in the job sector from robust job growth at 200,000 to something less than 100,000.
Okay.
So that will happen.
Okay, I mean, you're head of short-term portfolio management, so this is what you do.
We live and breathe the Fed. We're focused on capital preservation. And
short-term. Short term.
Well, we see-
Long term, we're all dead. You said it. You already said that. Thanks, Jerome. Thank you. Actually, you said we weren't, and then I was optimistic for a second.
We're optimists in the bond market. You found an optimist.
Either we get to singularity or I'm going to pray. One of the other. But something's going to work. Thank you.
Thanks.
Okay, coming up, a new epic adventure, Universal's latest theme park, about to open. More than 50 attractions from Harry Potter to Super Nintendo World. We're going to talk to the head of Universal Destinations and Experiences about the grand opening next. As we head to a break, today's Affleck trivia question: who are the 2 longest-serving CEOs of a publicly traded company? The answer when we come right back. Welcome back to Squawk Box. Now the answer that it is Affleck trivia question. Joe, did you get this one? We're not going to show it yet.
I thought it was Buffett.
I'm not going to tell you yet. Okay. Who are the 2 longest-serving CEOs of a publicly traded company? Ding, ding, ding. Joseph Curtin got the first one. Warren Buffett of Berkshire Hathaway, and Steven Schwartzman of the Blackstone Group.
Who's much younger than me. So it must be a pretty big difference. I mean, Buffett, it's in the 60s, wasn't he? In the 1960s? And now
1960s, yep.
And now it's 2025, I got that right?
Mm-hmm.
So Blackstone wasn't even founded in the 60s, I don't think.
Blackstone, I believe, was founded in the late 70s, early 80s. Steve is now, I believe, 78 years young.
78.
I always remember because his birthday. Steve, you know why? Valentine's Day.
Oh, is it?
Steve is born on February 14th. Every year I remember it.
Henry Kravis has a much better birthday.
What's that? Oh, it's your birthday?
January 6th.
You guys share a birthday.
January 6th. The Mooch, too. And Eric Trump. And Norman Reedus from Walking Dead. Universal.
It's a special day in American history.
January 6th. Anything else happened that day? Nothing. Let's not go there. Universal officially opens the gates to Epic Universe tomorrow. Its most ambitious theme park yet. And the first major new park in the U.S. in more than 2 decades. Joining us now, Mark Woodbury, Chairman and Chief Executive Officer, Universal Destinations and Experiences. I want to come down, Mark, and I think we were thinking about coming down, and then we didn't. But then, in preparing for for talking to you today. I'm blown away at what is available down there. You need to tell us, and this can be, I don't even need to know financials. This could be one big commercial as far as I'm concerned, because there's 4 different things, and the first one leads into the other 3. Or can you explain it?
Yeah,
It looks
sure,
amazing,
yeah.
and it looks expensive, that's for sure.
Well, look, I wish you were here, but thanks for having me. It's a fantastic day. Tomorrow we grand open Universal Epic Universe. As you said, the first major theme park in a quarter of a century here in Orlando, and we opened the last one. So this is spectacular. Universal Epic Universe, 5 themed lands. Each one of those worlds is almost a theme park within a theme park. Celestial Park is right behind me. That's kind of the center hub of the entire park. And from that, you enter these 4 different themed worlds through a portal that take you into a whole nother place that's beyond your wildest imagination, based on the greatest intellectual properties we could put together. How to Train Your Dragon, Harry Potter, Universal Monsters, all reinvented, and Super Nintendo World, an entire interactive world based on Nintendo properties. So it's really spectacular. 50 different experiences, 11,000 hotel rooms at our resort now. So it's just a transformational moment for us. You know, we have a fantastic destination here already with 3 existing theme parks as we have it. And adding this 4th one really makes us the destination of choice, and an entire full week vacation for visitors from around the world and for families for generations to come. I mean, these are really, long-term deals, and we're super excited about tomorrow.
Think about the IP, and just growing up, and I Disney sort of had I don't know, they seem to be ahead in terms of IP, but then when I was reading, I don't know, the Nintendo thing, I like it, I like playing those games. But Frankenstein's monster, I mean, I forgot that was Universal, to be able to have that IP and make a theme park, that has the greatest werewolves, Dracula, the stuff I grew up with. Universal is not, and then you add in Harry Potter. I think you might be passing Disney at this point, Mark, in terms of IP that I love.
Well, I like the sound of that a lot. Universal Monsters, all reimagined. This park is the most technologically advanced thing we've ever done, and we've done some pretty advanced things in our time. The advanced robotics that bring those characters to life is a 9-foot Frankenstein that walks out into the room. The main attraction in that Universal Dark Universe Monster World is just spectacular, and it's getting rave reviews. And you mentioned Harry Potter. It's our 3rd Harry Potter installation in this resort. So if you're a Harry Potter...
If you're a Harry Potter, hold that thought. We might be able to get him back.
Do you think that there's something going on with Harry Potter? Do you think that's just it?
Oh, I think he's back. Thank God. Yeah, I don't think he got some kind of a spell or something from Bob Iger.
I was thinking.
From Bob Iger.
I was thinking about Iger. I was just thinking he might be...
Shut this guy up, quick. No, but Mark, you can continue, but there will come a day where if you think of theme park in Orlando, it might not, that fellow with the ears might not be the first thing you think of anymore.
That's our hope. Our goal is to grow our resort to the full week vacation destination. The great thing is that all ships kind of rise with the tide in a way. So we'll be able to grow the market, and we'll grow our share of the market in the process.
So Mark, if you had to design all this stuff in the inner workings, we were talking about that earlier, you couldn't do any of that. You're flying at 40,000 feet, or do you know how? I can't believe the way some of the stuff that the technology that goes into it. You must be mind-boggling for you to see it all, come to fruition under your tutelage.
Yeah, it's an exciting process, a fascinating journey from a blank piece of paper when you start imagining what you could create. And in our case, it was creating something that was both complementary to our existing resort, but also extraordinary, not just for the things that we've done in the past, but for the entire industry. And that's kind of the ambition that we had going into it. And I think the results will show everybody how that was executed. So, just a fantastic process, super detailed, an amazing team behind it all. So, yeah, great.
So you already been on everything? Are you going to do it tomorrow? And what are you looking forward to most? Which ride?
No, I've ridden them all multiple times, and you have to break them down into, the big thrill rides, or you're just over the top, fantastic.
No, I want the scary ones. Not scary where I think I'm gonna, if it stops, someone's gonna come up on one of those things attached to me and remove me upside down from like 400 feet. I don't, not that kind of scary. I want werewolf scary. I think.
That can happen. You can get them both. You can get that thrill that you just spoke of, and then you can get the werewolf on top of it. And you're also showing pictures of the fantastic shows that are part of this experience. We have a couple really Broadway level experiences from a show standpoint that are not, historically characteristic of our parks.
Right.
So Epic really brings that to life in a way that that is really unprecedented.
Great. Well, thanks, Mark, and good luck tomorrow. Congratulations, and looks awesome. We need to plan a trip down there.
Please do.
Yeah, we will.
Thanks for having me, guys.
Yep.
Kind of got canceled last
Cancel culture. Squawk Box coming right back. We're not doing cancel culture on this show. We'll be back with a lot more in just a moment. Welcome back to Squawk Box. Take a look at the futures right now. Dow off about 330 points. NASDAQ off about 109. The S&P 500 off about 31 points. We got a lot more coming up on Squawk this morning. Secretary of State Marco Rubio now threatening sanctions on Russia if there's no progress on making peace with Ukraine. We're going to get into geopolitics, risks for the markets, and all of that after this. Secretary of State Marco Rubio saying the U.S. will impose new sanctions on Russia if there's no progress on a peace deal with Ukraine. His remarks followed President Trump's 2-hour phone call with Russian President Putin in an effort to try to resolve what has turned into be a 3-year conflict between, of course, Russia and Ukraine. Joining us right now is Derek Chollet. He's the managing director and head of newly launched J.P. Morgan Chase Center for Geopolitics. He's also a veteran of the Clinton and Obama administrations, working in both the State Department and the Pentagon. Good morning to you.
Great to be with you guys.
We should say their first report is out today. It's called Helping Clients Navigate Global Challenges. Your boss, Jamie Dimon, made some comments just 2 days ago at the Investor Day, just about how challenging things are and how perhaps, I don't know, he seemed to indicate he thought maybe the markets were a little too sanguine about these risks.
Well, I mean, we are at a time of tremendous risk, tremendous uncertainty in the world. It's really hard to think of something in the recent decades where we've had this much uncertainty, and that's why Jamie has asked me to start this new center at J.P. Morgan Chase to focus on geopolitics to help our clients navigate this incredibly uncertain world.
So here's the tough part. If you look at a chart and you mapped wars on top of a chart, you wouldn't necessarily know it. Meaning you'd think that, when there's a bomb that goes off or something that happens, invariably the market should be tanking and people should be freaking out. Invariably over time, it looks like a blip if it looks like anything at all. And so I'm always curious how an investor is supposed to actually not just understand the risks of what these things are, but invest around them.
Sure, and that's our job, is to try to help clients mitigate the downsides and realize the upsides. And there's so much going on in the world at the same time. What we're trying to do is help them navigate through all of this uncertainty, to distinguish between what's important and what's not, and to try to seize the opportunities that are out there. Because amidst all the downsides, the bad things that are happening, I still do think there are great opportunities out there.
Not with Putin.
No, perhaps not with Russia, but I think in the Middle East, as the president showed last week.
What about Syria?
I think Syria could be. I thought the president was smart to lift sanctions and give those guys a chance. And I mean, Syria has been such a trouble spot for so long. I wouldn't want to bet on it being successful anytime soon, but I think there's potential there.
Netanyahu's still got our backing, or questionable?
Well, the U.S.-Israel relationship is bigger than any two leaders, right? And of course, Prime Minister Netanyahu has had difficult relationships with pretty much every U.S. president he's served alongside, whether it's Clinton or Bush or Obama or Biden or Trump. But I think clearly, Israel is right now trying to figure out its way forward with the current administration. Very, very close relationship, but at the same time, the president's trip last week sent some signals to the Israelis that I think are troubling.
Can I ask you a theoretical question? In your view, is the Golden Dome actually possible?
I think technically it's going to be very, very difficult. I think it's a worthy goal, and it's something we should.
Can you imagine if that was lifted from? We have an atomic clock going to zero and we're like at 11 seconds.
Yeah,
because
that's right.
There's thousands of nukes. That some of them could be. Who knows?
Chinese developing hypersonic missiles, which could hit us.
If we actually had something that would. Putin wouldn't have nearly the juice he has right now.
Look, as I said, I think it's a worthy goal. We haven't seen a lot of specifics on how it's exactly going to work, and I do wonder whether the technology is going to be there. One of the papers that we've released today is about defense innovation and reform and the opportunities there.
Iron Dome's one thing.
Absolutely, yeah.
But for the United States and Canada,
Israel's the size of New Jersey, right? And Iron Dome covers a state, size of New Jersey. United States is a whole different.
What is the cost of the Iron Dome?
Oh, it's over 100 million, total.
I said 5 over 10 years, 500.
But the Golden
Dome
is going to be.
No, but that's just over New Jersey. That's what I'm trying to.
No, it's T. No. And it'd be I think it'd be up in the T's.
Absolutely, yeah. And this is also something we're going to have to work with the Canadians on, because in terms of the radar coverage,
unless
would you have to, maybe Mexico too, or no?
Yeah. No, well, I think Canada, because of the trajectory of missiles, you use Canada. So,
in terms of opportunity, you say you see opportunity.
Yeah.
So the investor class that's listening to you talk about all these risks, where is the quote-unquote, what are they supposed to be doing?
So look, I think defense is a big opportunity, because the U.S. is going to be spending more on defense, whether it's on the Golden Dome or modernizing our military. I think Europeans are going to be spending more on defense, and there's going to be opportunities there. I also think, just in terms of regions, the president showed last week the tremendous opportunities in the Middle East. One of the reports we're releasing today is on the Middle East, and I think that the dynamism we're seeing, particularly in the Gulf, is remarkable, and it's something that is they're going to do it whether we're part of it or not. And I think it's a huge to the U.S. advantage to be part of it.
I didn't hear what you said last week about the 5.2 trillion that Trump's talking about. President Trump's talking about that he's gathered from the Middle East. How much do you think is real? How much was already done? How much do you think finally happens?
I don't know.
Are you cynical? Are you cynical?
Cynical or professionally
Doubtful.
skeptical?
Professionally skeptical.
I think it's our job to be professionally skeptical. I think every journalist and investor's job is to be
But everybody's human, and we all. I think certain things are highly more skeptical in different areas than you think. We disagree on what we are highly skeptical of. So
do I think that there's $5.2 trillion?
How much is really coming? Don't answer, because you.
I don't know. I don't know the answer.
I think a few trillion.
By the way,
yeah,
even if it's a few trillion, that's a lot.
That's a lot.
So let's not.
Well, it sounds like you're almost positive about this then.
By the way, anything more than zero is good.
Okay, good.
I mean, unless you're picking something up,
all right.
we don't know
Well,
about that
I'm
part.
happy to hear that. I'm happy to hear you're saying that. Derek,
Thank you for coming in. Come on
thanks,
back.
guys. Okay,
Let's do this
absolutely.
more often.
Yeah,
Thank you.
thanks.
Congratulations.
have you seen this? You've seen the show. You understand?
Yeah.
Okay. So you're comfortable.
Anytime.
All right. Good. Coming up, check out Target shares right now. Retailer reporting quarterly results, and the CEO says price hikes would be a last resort in the face of tariff uncertainty. We'll get into the report and the CEO comments with an analyst next. Squawk Box is coming right back.
Insurance.
If you were watching earlier, there is a basement, Andrew, apparently. Target shares are lower. What was it? What's the expression?
The phrase is you can't fall off the floor.
Can't fall off the floor.
And you're suggesting there's a trapdoor on the floor now.
Trapdoors was apparently, we didn't notice
There's
that.
a basement.
It was a $260 stock. It was a $260 stock. Do we? Okay. First, I'm going to tell you they're lower. The retail reported weaker than expected revenue and same-store sales, and also lowered its guidance. I asked for a 4-year Walmart versus Target, and hopefully we can take a quick look if we have that ready, because it'll have the cumulative percentage gain or loss for the two. I think it's absolutely staggering. You made it, right? Okay, here it is. So Walmart's, I'm surprised that isn't the exact time I wanted it, I guess, from. See, if we measured that on Target from late 2021 or maybe 2022, think about what that would show. It would be down, I don't know how much. It probably, you've got Walmart up 133. I would say that Target's probably, I don't know, I'm not going to estimate, but that would have shown it better than a 4-year chart. But it's been absolutely insane. Michael Lasser, UBS equity research analyst. You've been recommending Target in that period, Michael, and what do you tell clients if you have been?
I knew I was going to get floored, Joe. What we are saying is that while you cannot put a positive spin on the first quarter results, the risk reward for this stock is squarely tilted to the upside. If you take the low end of its updated guidance, which is $7, right now the stock's indicating $95 in the pre-market, that means it's trading at 13.5 times. The broader retail index is trading around 16 times. So Target is trading at a 15% discount to the broader retail index. I don't think you can argue that Target is 15% worse than other retailers out there. Yes, it has had a host of challenges in the last few years. But with that being said, at the midpoint, it's going to earn $8, which is pretty consistent with what it's earned in the last few years, showing some level of consistency. So bottom line is downside is limited, upside is significant here if it can get it right.
That shows a little bit more there. So one stock down 40. Are they totally different businesses, Matt? What do you attribute those numbers to? One stock up 150% and the other one down 40%. Does the one have a bad hand 3 or 4 years ago? One of the company?
There are
great hand.
Yeah, the way we would state it is two things. One, there are differences in these businesses. One is a consumables retailer that has a general merchandise business attached to it. The other is a general merchandise retailer that has a consumables business attached to it. The mindset of the consumer is different in how it thinks about those businesses. And second, one has executed at a pristine level over the last few years in Walmart, and the other has executed not well and has really significant room to improve its execution and double down on its strategy. Because that's the other thing. Others have caught up to Target strategy. Target strategy was all about being differentiated, unique, surprise and delight. Now you can find surprise and delight as a consumer in a lot of other retailers.
So you've got it at a level where you can buy it, where if they were to execute it, if they were to fix whatever, what were they, inventory concerns? They closed Canada. I don't know, they did do some woke you go broke stuff, obviously. I don't know who bought those bathing suits that had little pockets. I don't know what the hell that was, but they've done some stupid stuff, right? What would you fix?
I think they need to do two things. One, execution needs to improve. That is inventory forecasting, customer service in the store, having the shelves stocked properly. Retail is a very low switching cost industry, meaning that the consumers can simply press a button and find an alternative place to procure goods. That, as a result, every single time a retailer needs to effectively serve its consumer in order to hold on to its customers. So it needs to do a better job of execution. And two, it needs to double down on what made Target special and unique in the past. For instance, this past quarter, it noted that its partnership with Kate Spade was its best effort. It needs to do that more often and have the reason to go to the store and buy at Target more frequently for the consumer.
Yeah, because it had it going there for a while. It was everybody loved it. Logo, the experience, and I don't know, lost its way. At least for shareholders. Michael, thank you.
Thank you, Joe.
Okay.
Coming up, AI's impact on how we currently search the internet. This is what we're talking a little bit about before. The CEO of Cloudflare was going to tell us how zero-click searches are disrupting the internet's business model. That stuck up more than 100% just over the last year. You don't want to miss this conversation. Come on right back as Squawk Box rolls on this morning. Welcome back to Squawk. Our next guest says that zero-click searches, where users are finding answers directly on search engines and AI summaries, are killing the internet's business model. Joe and I were actually talking about this earlier. Matthew Prince is here. He's the co-founder and CEO of Cloudflare. Good morning to you. It's long been described as the blue link economy, as in you go onto Google, you put the search in, you get all the blue links, you click on one, and Google often makes money if you hit one of the sponsored ones. You think that that whole economy is effectively going to be going under here?
Yeah, Andrew, I think that the economy is for sure changing. The best data that we have on this is if you look back 10 years ago, essentially for every 2 pages that Google would crawl, they would send CNBC, anyone who was creating content, 1 visitor for that. The rate that Google crawls at hasn't changed, and yet 6 months ago, the rate was now up to 6 pages scraped for every 1 visitor, and it's accelerated that now it's actually 15 scrapes for every 1 visitor. And what's changing is not that fewer people are searching the internet, it's not that Google is scraping more, it's that more and more of the answers to Google are being answered right on Google's page. That AI box at the top of Google is now absorbing that content that would have gone to the original content creators. And that's the good news for content creators. If you look at OpenAI 6 months ago, it was 250 scrapes to 1 visitor. If you look at it today, it's almost 1,500 scrapes to 1 visitor. And what that means is that if you're making money through subscriptions, through advertising, any of the things that content creators are doing today, visitors aren't going to be seeing those ads. They're not going to be buying those subscriptions anymore. And that means it's going to be much, much harder for you to be a content creator.
So Matthew, one of the questions that I have is the economics of this shift when the user starts to pay. So for example, I'm a subscriber now to ChatGPT. I think I'm a subscriber to Gemini. Actually, I've got a subscription, I believe, also to Anthropic. But I'm in an unusual and blessed place to be able to pay for these services. Longer term, how are the economics of these businesses going to work if there is no advertising and if things are not being sent back to other people?
Well, I think there may be advertising. The advertising might show up in the AI companies, but you're reading that derivative content. You're not reading the original content. Imagine that, I went and said, I'm not going to watch CNBC anymore. I'm just going to ask ChatGPT, what are all the interesting
Blasphemy.
things?
Blasphemy.
Don't even say it as an example.
As an example, but that
don't even say that.
Okay, so but then the question, and by the way, you're right on. As a content creator, and that's what we do for a living, there is a fundamental question about whether these services or others ultimately should be paying for some kind of access to this information. And then the question is, what does that business model look like, do you think? And is there any chance of a model ever even being created, or are the tech companies, like they have in the past, moving so quickly that there's really no opportunity, and by the time something gets settled in court 10 years later, the horse is out of the barn?
I think if the answer is court, then you're right. The horse will be out of the barn. But I think the answer can be actually technology. You can use services like Cloudflare, and this is what we're working with the largest content creators to do, to say, you can't access my content if you're an AI crawler unless you pay me for that content. And that's exactly what the future has to be. The fuel that runs these AI engines is original content. So that content has to get created in order for these AI engines to work. And if you look at the most thoughtful AI companies that are out there, they understand that they have to pay for content. Someone like OpenAI has actually done content deals with a lot of people, but they can't be the suckers. They can't be the only ones paying when their competitors aren't. So what content creators have to do is restrict access to content, create that scarcity, and say, you're not going to get my content unless you're actually paying me for creating that content.
Some people had looked at those OpenAI deals and thought that was just sort of a way station, sort of something to sort of get over the hump. There is going to be a day where you might be able to remove the content creators completely. I know of a number of sort of, I wouldn't call them news organizations, but sort of news organizations that think that they can sort of cobble together the news, if you will, from not even news content creators, but maybe even, and this is what I think Elon Musk to some degree thinks is possible, to be able to create it off of something like an X, and what you think that means.
Well, I think in that case, so first of all, I actually am much more optimistic about the future of content creators. I think if content is just sort of randomly strung together, quick hitting, headline first content, the stuff that has sort of driven a lot of the web over the last little bit, I think that is going away. But original content that is actually highly valuable is, I think, going to be more valuable in this future. I'll give you an example. I live a lot of the year in Park City, Utah. I'm a skier. I care enormously whether it snowed more on the east side of the mountain or the west side of the mountain if I'm going to go out skiing. And I pay for a service that's actually going to tell me that. If I'm going to use an AI engine, I'm going to pay for the AI engine that actually has the exclusive access to that unique content. And for that content creator, that weather forecaster that is there doing the hard work in order to generate that content, for someone like you who's doing really unique, you're the hardest working guy in the financial press, like that's the sort of thing where I think AI companies are going to value that content. They're going to be willing to do deals for that content, but it has to be something where there is exclusivity, where you don't do that for everyone that's out there, and then you actually restrict the access for some of those, for any of the AI companies that are not paying you for the original content you create.
God bless you. You have an invitation to come back any day you want.
I'm
We're in a fourth chair at the table here.
3:32. I get up at 3:32, fella. Although you do, I don't. I go home. He doesn't. But what do you think? Is he in a career building stage? Is that why you think he's like that, Matthew? What do you attribute it to?
I'm just going to get an AI agent to do it for me.
No, it's too late. Too late. I don't want. I'm at a different point. Definitely. Like, if they're asking me to go out to Seattle for like 4 hours,
right?
I have a family. Man. You're ready, aren't you?
Depends what the ask is.
Okay. I don't think. Yeah, we're different places, aren't we?
You've already made it.
Matthew, thank you.
You got to the top of the mountain, you're skiing down the mountain.
It depends on the east side or the west side, depending on where the snow, is that what he just said? Where the snow is, east or west, right?
Sometimes there's better snow on one side of the mountain than the other. Yeah.
Sometimes that's true.
Trying to find the powder.
Right? And sometimes the grass is always greener on one side of the pasture. It's 8 a.m. on the East Coast, and you're watching Squawk Box on CNBC. Joe Kernan, the slacker, along with Andrew Ross Sorkin, the ambitious climbing Becky, is off today. Where's Becky? He's going to have to get back here quick for Matthew. Among today's top stories, the House Rules Committee meeting this morning to try to advance President Trump's reconciliation package. Speaker Mike Johnson has said he wants a vote as soon as today and not later than Memorial Day weekend. Meanwhile, the DOJ has opened a criminal investigation of former New York Governor Andrew Cuomo. Criminal. The New York Times reports Republicans accused him of lying to Congress about decisions made during the pandemic as a governor. It has to do with the nursing homes or something? Or?
Yes, but I will say, everyone tries to make everything political.
Yeah.
The new sort of political theory is that Republicans actually think he could win.
Yeah.
And they would like to dethrone that prospect.
Really?
As mayor. Because they are trying to protect. I'm just saying, in the same way that everyone had these other crazy conspiracy theories.
Presidential. I mean, the Democrats could use someone right now, a national leader. They could. AOC is leading all polls.
We've always talked about what this goes to, like. I don't know the answer. Is it weaponized? Is it not weaponized?
No, I know.
But all of these things become sort of.
What's your opinion? I have a pretty good opinion of Andrew Cuomo.
Oh, I have a pretty high opinion of it.
That's what I mean.
Yeah.
So that's what I think Republicans should worry about. Because right now, Democrats have a wasteland. Right now, I'm sorry to inform you may differ on that, but AOC's at like 24%. The next closest is an 83-year-old socialist at like 6%. That's scary.
I'll show you something scary. Take a look at the futures right now. The futures right now off about 300 points. I don't know how scary it is, but it's not good. NASDAQ down about 125, 126 points. The S&P 500, for those on the radio listening to us, off right now about 34 points. I want to get straight over to Mike Santoli. He's at the New York Stock Exchange. He'll tell us how scary or not it really is. What's going on, Mike?
Yeah, Andrew, I wouldn't call it scary, but definitely softening up a little bit. Actually, no net progress in the S&P 500 this week. We did have that kind of attempted sell-off early on Monday after we got the debt downgrade. We rallied back to the flat line from there. Actually, the open today is going to be right around 5,900. That was the low from Monday morning. Now, we came into this week probably thinking plausibly that it was time for the market to take a breather, back off a little bit perhaps. It was up 23% off the lows. Bond yields are creating a little bit of a headwind here. We do have the 30s, treasuries above 5% again this morning. Global bond yields higher. And we sort of maybe used up the benefit for now of that de-escalation with China. So where might we go? I would look to the, around 5,700 is where we bounced into that China news. It seems like a logical place. Maybe we get back there. Yesterday it was interesting after we had the David Faber's Elon Musk interview, and then Tesla started to roll over. The whole market kind of did take a leg lower. It was almost as if it was being held in place by the prospect you might get a pop in Tesla. Do want to take a look at some of the rate-sensitive parts of this market. That has been pretty conspicuous weakness in home builders right there, and it's not been able to get out of their own way. This is a residential real estate REIT or ETF. So basically, it is more geared toward rental housing and self-storage and things like that. That's held up better, but new construction obviously has been really pinched by where rates are right now. That's been a weak part of the consumer sector. I want to point out the volatility index too, because it has been beneficial that you got this big spike up into that tariff tantrum panic, and now we're down below 20 again, which is kind of the normal range, but it has hit this floor. It hasn't really been able to get below 17, 18 in this leg, and that used to be sort of the upper end of this range. And I'll point out today, VIX futures are expiring. Sometimes that can mean the market can get a little bit more choppy and volatile afterward. It happened in February, so it doesn't necessarily mean scary things, but it means you should be aware that it wouldn't be surprising if the market did whip around a little bit, guys.
Mike, I want to thank you for your smart analysis on just about all of this stuff. We got a headline for you we want to bring you right now because we've been watching shares of United Health this morning. Take a look at the stock again. Right now, the stock falling This after being downgraded by analysts at HSBC. Separately, the company responded to a report from The Guardian that accused it of secretly paying nursing homes thousands in bonuses to try to help slash hospital transfers for ailing residents. That was the allegation. In a statement, United Health saying that the Department of Justice interviewed witnesses and obtained thousands of documents that demonstrated factual inaccuracies in those allegations. It said the DOJ declined to pursue the matter after reviewing all the evidence during a multi-year investigation. Nonetheless, the stock off close to 5%. I mean, this has just been, like a straight ride down here. You mentioned earlier, I think we're off about 50%.
Yeah, it was 650 was the high, but
from the high.
That's come back a little based on what they just said, I think, hasn't it?
Well, it's interesting because if you remember, there was a story over the weekend that said there was a big investigation into the CEO and what they were doing. Of course, Andrew Whitty had left. Then they said, well, that's not true. Maybe that original story was actually maybe referencing something related to this. I don't know.
Tough period for and it's the biggest. It's a huge
biggest
provider of everything that I don't know where we should be headed. Obviously, you can feel like you just use Medicaid because they're not going to cut that. Coming up, Deputy Treasury Secretary Michael Falconer on the president's tax policy, tariffs on China, and much more. And check out crypto prices this morning. Bitcoin hitting 108,000 earlier in the session. That's the highest level since the inauguration, almost an all-time high. Might have been a little bit above that. Today, a new SPAC coming to the market. We haven't had one of those in a while. I'm focused on fintech, led by Bitcoin bull Anthony Popliano and Bausch & Lomb CEO Brett Saunders. Really? Join us in a bit to talk about all of that. Squawk Boss will be right back. Rules Committee debating the reconciliation bill and what's a critical step before it can reach the floor for a full vote. Join us now, Deputy Treasury Secretary Michael Falconer. He is also the acting commissioner of the IRS. This is a case study, I think. Michael, in what it takes to get one of these across the finish line. We've seen it. We've seen the Democrats try to do it, and reconciliation is unique in what it takes. Are you singing an optimistic tune about who's getting whipped and whether the president was effective yesterday?
Absolutely, Joe. I mean, you think about where we're at now compared to where we were at in 2017, and what's really remarkable is the ongoing unanimity of the Republicans. So, you know, in December, till December 2017 to get the Tax Cuts and Jobs Act over the line, we've already got a budget reconciliation bill done, you know, the joint resolution in order to unlock the reconciliation process. We're now looking to have the bill on the floor of the House later this week. We expect to take it to the Senate. And so we're making remarkable progress. We always knew that with these tight numbers there were going to be negotiations all the way down to the end, all the way until that bill passed. But we continue to make remarkable progress, and it really demonstrates the leadership that Speaker Johnson, that Chairman Smith have been providing, and the fact that they have been working on this probably for about a year now.
The expression that don't let the perfect be the enemy of the good, you always have to use that, and obviously between Democrats and Republicans, they're split, but between Republicans on one side and Republicans on the other side, there's a lot of, it's fractionated at this point, and you're asking both sides, the SALT side and the people who want deeper cuts, you're asking both of them to swallow quite a bit, and my point earlier was, you know, when you finally get all three branches of government and you have a chance to do something, when you're worried about who's going to win in 2 years, that's all you're ever worried about. It makes it almost impossible to govern.
Joe, we are going to get this bill over the line. There are going to be negotiations down to the very end that reflects the fact that we are a big tent party, that there are a lot of different people in this party that have different types of outcomes they want to see come of this bill. This is the major piece of legislation that we're going to see come out of this Congress. And so we see representatives looking to get as much as they can for their to implement the policies that are going to best help their part of the country, their districts. And so we always knew coming down to the end that the president and the secretary and the administration were going to have to weigh in to get this final bill over the line. But we are going to get there. And as you said, we are not going to let the perfect be the enemy of the good. As Reagan used to say, if you'll offer me 80%, I'll take it and I'll come back for the other 20% later. But we are going to get this bill passed out of the House this week, get it over the Senate so that the president can sign this. Because remember, what is the alternative? The alternative is a $4.5 trillion tax increase at the end of this year. The alternative is for all of the investment incentives that are being negotiated, things like bonus depreciation extensions, factory immediate write-offs, R&D tax credits. Those things will go away. We'll see a doubling of the standard deduction. We'll see increases in rates across the board. Nobody wants to see those things happen, and that's why we're going to make sure that we get this across the board by the end of this week out of the House.
Mr. Secretary, do we need to believe that the policies will spur so much growth that we can be less concerned about spending cuts? Because there are Republicans that look at the way Medicaid is administered and what happened, the way it came about under Obamacare, and the number of able-bodied working adults, not working adults, that are able to benefit much more, disproportionately much more than pregnant women or disabled individuals. And it needs reforming, but it's not going to happen again. Because as you say, the enemy of the good, that blah, 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 this is an opportunity to do something on that, and don't you think it's being missed again?
The president is working as hard as he can, and the administration is working with him to see that we enact the greatest amount of spending cuts that we can get. Ultimately, we have got to get 218 votes in the House, and so we are working to see where we can identify waste in those programs, ongoing fraud and improper payments in those programs. This also doesn't include all of the work that DOGE is doing on the discretionary spending side. This administration is committed to finding ways that it can increase the efficiency of the government, that it can reduce improper payments, and thereby reduce spending. We are going to continue working with the House to see where there are the votes to enact the greatest amount of reforms in some of those programs that you mentioned that we can get.
Would it be optimistic to hope that we can come in at well below $2 trillion this year, next year, the year after, or are we just stuck with that given the impossibility of doing anything about it.
The president submitted his budget to Congress recently, and you saw that we are putting ourselves on a track to getting towards a balanced budget. We're going to continue working every day with the House and the Senate to see what kind of reforms, both in mandatory and discretionary spending, that we can get them to enact. But we are committed to getting the fiscal situation of our country back under control. The Secretary has indicated that his goal is to work with Congress and the administration to get down to a 3% of GDP deficit target by the end of the 4 years. And that because we know at the end of the day, we do not have a revenue problem. It is spending that is out of the norm historically, and that's where we really need to go after getting the budget under control.
It just seems like, the difference between Republicans and Democrats, Republicans blow out deficits with a lot of spending, and they would say Republicans do it with a lot of tax cuts. And there are some tax cuts here, and without the commensurate spending cuts. So I just think, once again, we're back to being dependent that some of these growth projections, which some people might say optimistic, they need to come through, but you're confident they will.
We are confident because, again, if you look back at the first term of the Trump administration, the combination of tax reform, of unleashing American energy dominance, and of the deregulatory environment that we created, we saw 3% growth in 2 out of the 3 pre-pandemic years. We saw the debt to GDP ratio stabilize over that time period, and we think that we had a low inflation environment, we had enormous job growth, we had record low unemployment rates. We believe that we can get back, by re-implementing the policies that we had during the first term, that we can get back to sound fiscal policy, sound economic outcomes like GDP growth, like low inflation. We can once again realize the golden age the president has promised.
As acting director of the IRS, do you wish you had those 80,000 additional agents? Did we need those 80,000? Is that a way to maybe narrow the spending gap, or do you feel confident? Hopefully, you're not like some of the air traffic control. We definitely need more of those guys. Do we need more IRS agents?
We don't need more agents. What we need is to get the IRS modernization project done. As I have said, for 35 years, the IRS has been 5 years away from being modernized. We are not going to say that in the 36th year. We have accelerated the work towards a modern API infrastructure on top of the existing IRS systems. We are building new functionality on top of it. Joe, let me give you an example. We right now have 6,800 people that do data entry. We are going to take that activity and we are instead going to use modern scanning technology, modern AI, in order to read those documents in through the IT infrastructure rather than employ people to do it. We currently have the same number of call center people on December 23rd as we do on April 14th. We do not have a people problem at the IRS. We have a systems and management problem at the IRS. And so by making this system more modern, more in line with what people get from their financial institutions, we are going to be able to improve privacy, improve customer service, improve compliance, and we are going to get we're going to be able to better target pockets of non-compliance and use our audit resources more effectively.
Mr. Secretary, though, can we just talk about this? I've talked to a number of IRS officers over the years who've been involved in audits and things like this, and they all talk about if you really want to get at the big money, that you have to be able to do 2 things. One is genuinely audit, frankly, some of the wealthiest in the country, for better or worse, mostly with S-corps and other kinds of things like that, because otherwise it's sort of hard to find what's really going on. And then you need to have individuals, humans, who can actually go back and forth with those people to collect the money and or otherwise go to court to try to collect the money. That requires people. That's not a computer problem.
It requires both. So one of the things you need to do is identify where there are pockets of non-compliance in the first place. And by digitizing the returns that come into the IRS, we are going to be able to use modern analytics and modern AI to identify where those non-compliance issues are coming from. And then the second thing is, yes, we need a well-trained set of compliance individuals that are going to go out and review the returns that come in. A lot of the reductions that we are looking at are by improving the IT systems, improving the automated customer service, having a better online experience. We are not going to need as many people in the back office processing of returns and of providing human customer service. That's where we're seeing a lot of the reductions take place. we are still going to have people out in the field making sure that there is compliance when we, through analytics and through some of our modeling, identify where non-compliance may be occurring.
For basic taxes, meaning folks just on a straight W-2, there's long been an effort made, and in fact there was a trial program going on, I believe, under the last administration, to effectively make it super easy online, and H&R Block and all of the other accountant TurboTax people were against it. Would you like to make it super easy so that you could literally just file a postcard if you could for those folks who don't have complicated returns?
I would like it to be as simple as possible, and so we are constantly working with Congress to see where we can simplify. I think one of the most unreported stories about the 2017 Tax Cuts and Jobs Act reform is that instead of about a third of the American people itemizing, it's down to about 10%. So in the process, we made it much simpler for people to file because they're not having to do their Schedule A deductions and go through all of the itemization. So as we simplify, as we do things like keep a standard deduction that is doubled, we are able to greatly reduce the burden on most taxpayers.
But do you think there's a way to make it super simple? I mean, by the way, my taxes should be relatively simple. I always look at the thing. I like to think I'm a smart guy. It's complicated. My accountant tells me this is how it is, and I go, oh, okay, that sounds about right to me. And then I sign the thing, and I hope I'm doing the right thing.
Yeah. So
I think most Americans feel that way.
I would like to see what we can do, continuing to work with Congress to move even more people towards realizing the standard deduction. At the same time, we want to make sure that we create incentives in our economy to work more, to invest more, and so we do have a complicated economy that we need to reflect in our tax filings, but for the vast majority of the American people, we are working to make it simpler. And so in addition to the government itself providing what you're referring to, which is direct file, there also is a program out there called Free File. We are working to make it easier for the American people to who have very simple returns to file their returns in an online fashion. In fact, I'll be attending a conference later today talking a lot more about how we can improve the digitization of the filing system so that we can make it easier for Americans to comply.
But we've taken a lot of your time. We had maybe 2 months, Mr. Secretary. Appreciate it. Secretary Faulkner, thanks for your time this morning. All right, Scott, watch you right back. And low shares are now up almost over 2%, right at 2%, reporting better than expected result, backing full year guidance. Stock up almost $5, still well off at some of its best levels of the year, but making kind of a nice little comeback. Up next, are we in a SPAC revival? Anthony Pompliano of Professional Capital Management and Bausch & Lomb CEO Brett Saunders are going to talk to us about their new SPAC listing and much more. We'll come right back.
Go with TimberTech. Welcome back to Squawk Box News this morning. Anthony Pompliano is here, and he is taking a blank check company public right here on the NASDAQ. It's going to list under the ticker PCAPU. Joining us right now, first on CNBC, is the man himself, Anthony Pompliano, CEO of Professional Capital Management. And they're saying SPACs are back, sir. So this is a SPAC. SPAC's got a bad name, though, I was going to say, and we're going to talk about all of this in a moment, but I want to bring in one other member of this partnership of sorts, Brent Saunders, who we haven't seen in a long time. Brent, Chairman and CEO of Bausch & Lomb, is special advisor to this special purpose acquisition company. Good morning to you as well.
Good to see you, Andrew.
So take us sort of back. What is this SPAC going to do? And most importantly, why are you pursuing this now? Given there was a lot of hesitation about SPACs, obviously it's sort of the last vintage of them, and what's the difference?
Yeah, look, I've got a very large audience online. Bankers have been pitching me for the last 5 years to do a SPAC, do an RTO, do whatever kind of public market mechanism. And frankly, I didn't see the demand from the private market. That all changed about 6 months ago. I think part of it is that there was some political change. There's a regulatory change specifically in financial services where I think people see it as a tailwind, not a headwind anymore. And then I also think a lot of companies that were started between 2015 and 2020, they're now reaching the maturity point where they can be a public company. And so based on that inbound demand that I started to see, I called Brent. Brent and I have been friends for several years now. He's a shareholder in our investment firm. And I basically said, look, you're the best guy I know at doing this. You've got the most experience. He's done $300 billion of acquisitions. And I said, help me figure this out. And we decided to do it together.
So Brent, what kind of stuff would you want to buy? Just to sort of give us, I know you're not allowed to say a specific name, but sort of in the vein of.
Yeah, so look, I'm an advisor. I think that Anthony has consistently demonstrated a forward-thinking approach to investing in transformative technologies and fintech, and I think our focus, or Anthony's focus, is really going to be on fintech, financial services, and looking for places where he can really use his media presence to amplify the visibility of the potential target. So it's a really nice combination, and someone I just have great admiration for, and someone I thought I could help with a lot of hard-learned lessons over 17 years of being a public company CEO.
In the most transparent way possible, explain the economics for the sponsor. And I just want to context and caveat this by saying one of the reasons why I think SPACs got a bad name during the last vintage was because a lot of the sponsors made an enormous amount of money, but unfortunately the shareholders did not. Yeah. And I don't think that everybody fundamentally understood exactly how the economics played out for everybody.
Yeah, it's a great question. I think there's two major points here, right? The first thing is a lot of the reason why SPACs got a bad name is because people basically were doing public venture capital. They were buying companies that were losing lots of money at high prices, and they were crossing their fingers and hoping that those companies grew into the valuations. Some did do that, but a lot of them didn't. And so naturally, if you put a company that's losing a lot of money at a high valuation in the public market investors are smart and they hammer the company. I think what we're really focused on is being super disciplined and buying a cash flow positive business that still has all the right criteria that you want in terms of high growth potential and good team. But if you do a good deal at a good price, it doesn't matter who the sponsor is. The company should do well in public markets, and that's ultimately what we're trying to do.
But how much will you make?
Yeah, in terms of the economics, the way that this works is the sponsor at different price points is putting capital in at different share prices. When it prices at $10 a share, right. If the share price obviously goes up, everyone, including the shareholders, makes money. Now, if the share price goes down, the sponsor can still make money. But I think that one of the things that Brent and I both have looked at this is, for me, the capital that I'm putting at risk here, right? Our investment firm is putting millions of dollars into this, and so we've got real skin in the game in terms of that. But I'm taking huge reputation risk with this. And so one thing that I've been very clear with folks is I cannot be a SPAC sponsor that does a deal, sells the shares, and goes and does another one, right? But my reputation's on this. I've got to be able to not only go and do a good deal at a good price, I also have to be able to help build that company for the long run and create shareholder value. And so it's really the reputation risk, I think, is probably the biggest thing that I'm most focused on.
Just straight on the numbers. Let's say it's $10 a share.
Yep.
You capture, let's not forget about it going up. Let's just say it stays at $10 a share. Mm-hmm. You capture how much of that?
Well, if you think of how much money, so we've put $5 million into the, us and investors, $5 million into the risk capital of that. That obviously today is $50 million as the pricing.
So you're 5 of the 50.
Well, $5 million is what was invested in terms of that. Now, our investment firm didn't do all $5 million of it, but we've put a significant amount in. And then from there, if the share price goes up, obviously we can make money. If the share price goes down, obviously we can lose money of that. But I do
Are you collecting 10% of the business? Or are you collecting less than that? Let's just.
It depends on the size of the business that we go and we buy, right? So if you go and there are deals that I think people have done where they've tried to buy, more than 50% of a company. There's deals that people have gone and they've said, hey, I want to actually just buy 5% of this business. And so we've got a $250 million SPAC. What's interesting, I think, is when we went out,
Shouldn't you be able to just? I'm sorry to push you on.
No, go ahead.
Shouldn't you be able to say if it's a $250 million SPAC, and the price doesn't go down, and just to stay static, you should be. I think you should be able to tell the audience right now, I will own X amount of that $250 million.
Well, the way to think about the $250 million is going to go to buy another company, right? And at that post-transaction equity ownership. Right. We don't know how big the other company is.
I understand that. Of the 250, how much of that would therefore go to you?
If I could interrupt, I think the issue is it's hard to pinpoint that because you'll raise a pipe, you may dilute yourself again.
100%. I'm saying let's say there's no pipe. I just think people need to. Look, I think one of the problems that people have with SPACs or that they don't understand is they don't understand the economics because the answers. And I agree, they're complicated answers, but I think we should be able to break them down in a very sort of simplistic way and say, okay, assume there's no pipe, assume this, let's just assume there's $250 million, that's what we have. And we can say if it's 500, it's a different number, but we should be able to, and by the way, I think that one of the disclosure and transparency issues for all of these SPACs is there should be a chart that says to the investor, if it's this, it's this. If it's this, it's this. So we have some ranges, and people understand how much of the business you will ultimately capture. Is it 20%? Is it 10%? Is it 5%? What are we really talking
I think,
about?
to be fair, Andrew, there will be some range, whether it's 5% or 15%. You won't know till you do the deal. And to be fair, at that point, it is disclosed to the investors. And the reason you tend to do a PIPE is to bring that transparency and negotiation with the other investors. And that is the time you actually know the economics. Launching the IPO of the SPAC, it's almost impossible to tell you what the economics are till you actually do the deal. And frankly, if Pomp doesn't do a deal, he loses all his money.
That's true, yes. Let me ask you a separate question. Okay. One of the other sort of issues around SPACs has been that there are these forward projections, right? Forward projections is something typically in an IPO you historically couldn't do. A lot of companies were making, because it was a merger, they could claim they were buying the company and then tell you what they thought the business was going to be worth 3 years and 5 years later. Having said that, the sponsor typically was not attached to those future. They didn't have to. It wasn't like they were vesting on the 3 and 5 years. They were oftentimes, depending on the transaction, I want to say in the fine print, but you really had to read pretty carefully and do like your own math and understand, okay, if it stays at this average, within 12 months, they could be out.
Yeah.
What is your plan as it relates to whatever deal you do in terms of how long you're in?
Yeah, so I think if we take a step back here for a second, we went out with a $200 million SPAC. BTIG, which was the exclusive book runner on this deal, told us yesterday that there was approximately $1.8 billion of demand. So approximately 9x oversubscribed. And I think one of the reasons why a lot of these institutions, in my opinion, are excited about this is because we're very focused on being disciplined on the valuation of the company that we buy. We think that there are some unique advantages that we bring to the table where companies will want to transact with us at a very fair valuation. And then on top of that, again, it goes back to I'm going to be involved in the business moving forward. This is not a do the transaction and walk away. Right. And so anytime that you do that, obviously I don't want to buy a company that sells me, the sky and all of a sudden doesn't deliver on it. And so I do think that there is a potential economic misalignment if people are just doing this to essentially bring companies to the public market and walk away. I think a huge part of going back to what are we trying to do here is this idea of discipline. Being disciplined on the company you buy, being disciplined on the valuation you buy, and then also being disciplined on the idea of trying to build an actual business post-transaction.
Should we anticipate the kind of business that you'd be interested in buying has something to do with the world of crypto, given that that is considered your expertise, or do you think that the expertise or the sort of genre is very different or larger?
Yeah, look, we're very interested in financial services. The reason why I use the term financial services is basically the new digital world and the old incumbent world are all merging. And so if you look in the public markets, you have companies like Robinhood, a very fast-growing segment is crypto. If you look in the private market, you see a company like Kraken who's adding U.S. equities. And so every exchange eventually, I believe, is going to end up having public equities, crypto, et cetera. And I think that you're going to see that payment processors, asset management, et cetera. And so we're not necessarily going out saying we're going to go buy a crypto company. We're not saying we're not going to buy a crypto company. I think what we're looking for is kind of the broader financial services. And right now, most financial service companies, they're touching crypto in some form or fashion. But if you want to be successful, you got to be able to operate in both worlds, we believe.
Good luck.
I'm
sure we'll be following your progress. We'll be back. We'll talk a lot more about it. Brent, don't be a stranger. I feel like we haven't seen you in a long time in person. Come on in one day.
I actually will. I'll take you up on that offer. Thank you.
Please do. Thank you. Great to see you.
Okay. Bye-bye.
All right. See you. NVIDIA CEO, meanwhile, Jensen Huang says U.S. export controls on sending AI chips to China have cost American companies billions of dollars in lost sales. Huang making those comments at a conference in Taiwan. He called the Biden administration's AI diffusion rule a failure. It aimed to slow sensitive chip exports by dividing countries around the world into 3 tiers, with China blocked entirely. But the Trump administration is considering changing those rules. Huang says that because of the U.S. controls on chips, AI researchers in China, that's my only imitation of the president.
China.
Yeah, you did a good one earlier, right? China. Forced to use local technology. Meanwhile, you were right, Pump, about gold moved and usually Bitcoin lags a little and then moves even further. We're back to 107. What's next? Come on, give me a number.
I used to
don't look. Don't tell me look. Give me a number.
I used to be
150.
I used to be very, very confident or excited about the fact that we were going to get to a balanced budget. I have lost a lot of that confidence, and so I think we're going to continue to see a devalued dollar. I think that'll be great for Bitcoin, gold, and many other assets.
We in an extended uptrend here, or if things turn back down, risk asset wise, does Bitcoin go back down at this point?
I think that there is a psychological shift that occurred after April.
So it's not it's desynchronized from that. Decoupled from risk assets now?
No, I think that you had a psychological shift in independent kind of retail investors where they basically said to themselves, I've been trained to buy the dip. Institutions have some of the lowest exposure to U.S. equities that they've had in a while because they're playing, kind of these very intricate games of using all these different measurements. And retailers just said to themselves, listen, it's not going to matter over 5 or 10 years. I'm going to continue to buy these assets. Right. And I think that Bitcoin will be a big winner in there.
Okay. Anytime you bought it, and if you didn't sell it, I mean, it's back to where you're like Michael Saylor is now the, master of the universe. So to come, and I had to ask you, you're here, right? I almost forgot. Because we were talking about the SPAC so much, but he's Mr. Orange Pill. Still to come, Elon Musk walking back some of his comments on the chances of AI annihilation. I don't think they mean AI. I think they mean annihilation of us from AI. Plus, the latest from Washington, D.C. with Congressman Ro Khanna, from the tax bill to prescription drugs. We're coming right back.
Means everything. Welcome back to Squawk Box. In February, Elon Musk said that he thinks there's a 20% chance of human annihilation by AI. Yesterday, in his interview with David Faber, he walked back that comment. Take a look.
I feel like we're in the big bang of the intelligence explosion. Like we're watching we have courtside seats to the Big Bang of intelligence explosion. One thing's for sure, it won't be boring.
No.
So if
you
this,
don't seem to be saying there's a 20% chance of annihilation as often anymore.
I think we should always consider that there's some chance of a bad outcome to try to protect against the bad outcome. We don't want to be complacent and say that everything's just going to be fine. There's no chance of a bad outcome.
What do you think?
I think that one of the most fascinating genres in science fiction, I forget the guy's name, it's Thing or something like that, is all about in the future it's only machines. We're long gone. We're long gone, and they're doing everything. And the other thing I'm immediately think of is Kurzweil and the singularity, and when machine learning is 1 billion times more powerful than the sum of all human knowledge, we have no idea
what's going on.
What that means.
But Poulter Jones was just with us 2 weeks ago, and he made that point, if you recall, where he said he was at that event, conference with I think 4 super famous AI experts, all of whom were asked to vote on whether they thought there was more than 10% chance that something horrible could happen, and like all 4 hands went up, and so I think it was more than that actually. If I go back to the video, and when I talk to people in that world, they all think that. So the question is it 10%? Is it a 20% chance? And then, given all of that, what do you do about it?
If the machine's going to be so smart, is there any way that as humans we can build in a safeguard? They can get around it, I'm sure. It can get around whatever a sentient thing is, but there are volumes written in the future where all science fiction is, we're not even in the picture, and it's all not machines, but whatever it is. This is getting very...
Well, I have another question for you, a very philosophical question.
No, that's what, yeah.
It's about your level of satisfaction. Most humans get great satisfaction out of doing things, producing things. You write something, and you feel great satisfaction out of writing it.
Too hard.
No, writing is hard. But will you get the same satisfaction out of prompting it to write the thing? Meaning, and maybe to say it's a tool. So if you're a great prompter, you will get great satisfaction of what it produces. I don't know. Or will you think that it was like a ripoff because you did one thing and it did the other thing? And what does that therefore do to
when you don't have to do the thing you're talking about, and you suddenly all of your time is freed up to do whatever it is you don't have to do because they're doing it for you, what are you going to do?
I don't know. And what happens if you actually like what you do?
You're toast.
I'm toast because I like doing the work.
That's what I mean.
Oh, I'm done. Yeah, no, it's going to be a real problem.
I think I'll fare quite well.
I think it's going to be good for Netflix.
With less to do.
That's what I think.
I might get down into, double-digit handicap. Toyota announcing last night that the top-selling SUV in the United States, the RAV4, will be exclusively offered as a hybrid beginning in 2026. It will eliminate the gas-only engine option. Last year, the company sold more than 475,000 RAV4s. About half of them were hybrids, believe it or not. Toyota didn't disclose pricing, but the current RAV4 hybrid starts at about $37,000.
Let's get a check on shares and Target this morning. We've been watching this all morning lows as well. The retailer reported weaker than expected revenue. Same-store sales also lower, and it's lowering its sales guidance to low single-digit declines compared to the consensus for 0.3% growth. CEO Brian Cornell would not say whether the retailer has or would raise prices due to tariffs. I think in the wake of some of the slapback on Walmart from the White House, you're seeing a lot of companies sort of try to stay silent on that issue. The stock down this morning, though, for those who are not looking at the screen, it's off about 6.5%. We're going to break down some of the early moves in the market right after the break.
www.ecb.com.
Shares of Phillips 66, they are lower. Reuters reporting that activist investor Elliott Management has won 2 board seats in its proxy fight. Meantime, Alphabet-owned self-driving car Waymo detailing some scaled-up operations. The company's co-CEO telling CNBC that Waymo cars have now taken 10 million trips, with the number doubling in the past 5 months. The number of paid trips includes rides in Austin, Texas, as well as Phoenix, Los Angeles, and San Francisco. Earlier this week, Waymo won approval to expand its robotaxi service to more parts of the Bay Area. And of course, we heard from Elon Musk just yesterday saying that they're going to begin robotaxis in Austin, starting with 10 and trying to scale from there. So we're going to keep our eyes on this whole new world.
Overnight committee meetings on President Trump's big, beautiful bill still going on. We're getting reports this morning of a deal on the SALT deduction, $40,000 cap we're talking about now. Joining us, talk about the budget talks, Elon Musk and more. I don't know, Congressman, you're here, you're there, you got places to go, people to see. We don't have enough time to talk about much. Ro Khanna of California, whose district is in the heart of Silicon Valley. I don't even know, since we have so little time, I don't know where to start, Ro. I would say, number one, we're going to have a demagogue-free zone. You're not going to say grandma's getting pushed off a cliff because of Medicaid. You're not allowed to say the tax cuts are just for rich people and corporations. And I'm not going to bring up Biden's cover-up of everything that's all we're talking about on the air. This is what I was thinking about, Ro, because you are in the place where all technology recently has been happening. It's amazing. We're the darlings of the world in your district out there. For example, this article talks about in Germany, the market cap of Apple is bigger than the entire German stock market, or Microsoft. And they try to say why? Because investors over there are deeply entrenched in a risk-averse business climate, strict labor laws, stifling regulations, and a small pool of capital. Europe is exactly where Democrats would like to take us in terms of business regulation. Why are you still a Democrat?
That's not true, Joe. I mean, come on. My district is $14 trillion of wealth. Apple, Google, NVIDIA, Tesla. But a few things that created it, which I think some of them you'd agree with. Major spending in universities. I mean, it was Unix developed at Berkeley. Stanford led to a lot of commercialization. Of course, the risk-taking and venture capital, but also a combination of immigrants and investment in human capital. That's the secret sauce, and we should be in a bipartisan way working towards it. Look, one place, I don't want to get into all the Medicaid, we're going to disagree on the tax bill, giving more tax breaks to millionaires than working class families. But one place maybe you would agree is we shouldn't be taxing university endowments. University endowments. Let's not tax that.
All right. I see where we can agree on a few things, and like I said, we're going to have you back, Ro, because the Medicaid stuff.
Love to.
The Medicaid stuff, I don't think that's helpful. We got $37 trillion. We got to keep funding things, but the private sector is where the real progress comes. So I want more private sector.
But do you not have a problem with the deficit? What about the deficit on this? $3.8 trillion more on the deficit spending. It's not a revenue with their tax breaks.
It's not a revenue problem. It's a spending problem. We only got 20. This is where
it's both.
Okay.
It's both. You know that.
Now I got to thank you. This is so.
We need more time. We need more time.
I'm sorry, Ro. This is like right in the middle.
No, it's my fault. I was in a hearing too. I appreciate it.
Well, you're doing real work. We gotta go.
Want to thank you. We'll see you in person hopefully soon. Make sure you join us tomorrow. Squawk on the Street begins right now.
I think we should always consider that there's some chance of a bad outcome to try to protect against the bad outcome. We don't want to be complacent and say that everything's just going to be fine, there's no chance of a bad outcome.
Elon Musk yesterday talking AI during his interview with our David Faber. We'll get a lot more on that in just a moment. Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer and David Faber at Post 9 of the New York Stock Exchange. Futures under some pressure as bond yields rise again, 30 years back above 5. Watching this House budget try to work its way to a full vote on the floor. We'll see. Our roadmap begins with lawmakers on the Hill meeting in the very early hours of the morning, still debating this hour as Republicans try to get that tax plan forward.
slew of big retail names were out with earnings this morning. That includes Target, Lowe's, and TJX. What their results are saying about the health of the consumer. And Elon Musk made plenty of headlines yesterday. It was a two-part interview, robo-taxis and then humanoid robots, the future of AI, part of our later conversation. Also, of course, the damage done to Tesla's brand.
Let's begin with the markets, and a day after the S&P did snap that 6-day win streak, some of the market kind of pivoted around the timing of David's interview.
Yeah, look, I think, first of all, congratulations, David, because this man is a man who is very defining for what we're doing, both politically and for all, for what you were talking about in terms of autonomous. But I do want to point out that until this bill's done, Carl, the bonds are going to go. Bonds are going the wrong way. Now, I know this sounds strange because it's what the new world is, but you have to go to these the chats to find out what's going on. And if you read the Grok, which is by far the most thorough, and that's why I bring it up because of you, it's we're nowhere. Now they're going to do something, but Grok says basically this is a great thing for the rich.
Is that what it says?
But it has every detail. I mean, the other guys are like, hey, listen, I'll try to catch up, and I'm trying to get to it. You know how personal they are about how bad they are?
Yeah.
But I bring it in as a segue to you, because I just think that in the end, this is how you find out things. And we are in a situation, Carl, where this bill, it better have huge growth, because, man, it's going to cost us a fortune. 3.6 trillion over the course of...
Over 10 years.
Yeah, yep. And I just believe it when I read through what the websites.
Well, it tried to get through rules last night.
Right.
So far this morning, Chip Roy, Massey, and the chair of the Freedom Caucus, Andy Harris, say their no's.
Yeah.
So it's going to be...
with the $200 silencer break from the 1934?
Excuse me?
What? Did you read that?
No, I don't know what you're talking
about. Our country has always had a $200 issue for if you want a silencer, and it gets rid of that $200 if you buy a silencer. This is true.
Okay.
Well, I only mention it because the granularity is about trying to buy every single vote imaginable, which, by the way, that's why I say as long as this thing is going on, you're going to see interest rates go the wrong way because they have to buy and buy and buy. And
that said, Jim, since April 7th, the long bond is up 40 bips, and the S&P's up 7%.
Yeah, because the S&P changed, the formulation changed to what rallied. A lot of Mag 7 came back. They moved things. And by the way, the industrials, it looks like the industrial companies were able to do things to mitigate. And let's not forget, you've got huge companies like Home Depot, like Lowe's, that have mitigated. It doesn't seem to be that much. And David, if you want inflation, I guess you could say that Walmart's trying to mitigate. I thought Walmart's doing a very good job.
Yeah, I mean, a lot of this is yet to come still in terms of the impact of tariffs, what it's going to look like in these stores when it starts to hit. That is just the very beginning.
Right.
And in terms of what it will be, what it will look like with regard to price hikes, or the lack thereof, perhaps, if the administration is successful in sort of its pressure campaign in some way, that all the retailers eat the price hikes, which seems highly unlikely at this point. But to Carl's point, and to where the focus, to yours in terms of where the focus may be, even if we get a bill, I do wonder. You've had Scott Bessent, the Treasury Secretary, almost every appearance talking about concern around debt and deficit, percent of GDP in terms of our deficit, something like 6.7%, not going down. Part of the conversation I had yesterday, at least the first part with Elon Musk, was all that effort you did with Doge, what did it really amount to?
No,
not much of anything when it really comes to making a difference to something also Musk has talked about so often as being an existential threat to this country, namely that as interest costs continue to rise, and by the way, with a 10-year at 4.5, it's not getting any better.
No.
You're talking over $1 trillion in interest costs, one of the largest single costs in the budget, other than entitlements.
Well, I think that the tax break, except for the ultra rich, is not as good in many ways as if interest rates were to go down.
Right. Which is one reason why you will continue to get, one would expect, the president jawboning the Fed and anybody else who listen in terms of rates need to come down.
I mean, look, we have this temporary thing for tips. That's not in the permanent. I don't know. I mean, I don't know who buys what. I don't know what that gets. Democrats are allied against this thing.
Well, and then you've got a very small group, but influential group, or potentially of Republicans in blue states who want to keep their seats, who are on the SALT tax, which apparently now is going up to a
$40,000 for as
cap
of 8/20
an income
tonight.
level. Maybe they've been now, maybe some of them are on board, but you can see the headline there, whether they back it. So to your point, Carl, it's still unclear whether and when they're going to be able to get to the necessary consensus.
But they need everybody. They're talking about the targeted tax breaks for gym membership. They're talking about bringing back the tanning business, which had a tax order. And
Of course, need to bring back the tanning.
The House GOP tax bill reconciliation process includes a provision to eliminate the $200 tax stamp on firearm silencers, also known as suppressors, which has been in place since the
By the way,
National
it has
Firearms Act
happened, Carl.
of 1934.
It has now happened. He's reading Super Grok on air. It's basically
no white genocide.
Now AI is now just a part of what we do here. Soon enough, you will be replaced.
Look, that interview was seminal, and it was existential for everybody.
Well, we didn't even get to. Of course, time is always the pressure with Elon because you could talk for hours, but we didn't even get to sort of deeper concerns that he may have in terms of society, in terms of what we do. And Andrew was referring to this earlier. What represents meaningful work? What is your purpose? If in fact, even if he's right about the likelihood that we're going to actually have abundance and it'll be a good outcome, not annihilation, it's still sort of unclear what we all do. Other than, I guess, this is now the new Jim. You're going to waste that brain that you got? Really? One of the greatest brains ever right there, and you're going to waste it reading this stuff?
And Jensen wasted on ChatGPT. He goes some deep research. Look, the world's changed, okay?
It has.
I'm not going to go to our viewers with something that's not authoritative. So I go to every one of the systems, including Gemini, but I do the $20 Gemini, I've done the $250 a month Gemini, which I think has no traction. Okay, just so you know.
So are you on board, by the way? This gets to yesterday, of course, with the I/O conference and Google and the stock ending down.
I am in the Ben Reitz's Melius skeptical camp because it's too expensive.
He called the technology stunning this morning.
But for $250 a month,
yeah, he said I'm paying the $20. Yes.
Yeah,
you're talking about expensive though. The stock is not expensive. It's like 16 times.
It's not expensive because the plan may not work.
As we take a look at Musk and the the transportation.
That's not
Secretary.
you. Get rid of that.
No, that's not me. I don't know. But we're talking about Google right now, or Alphabet. Yeah, there's Tesla. Are we?
Right.
Yeah, What? There's Alphabet.
Yeah. But David, okay, so
I'm looking at the Reitz's note, as you are as well. And it's Carl's point, stunning innovation.
Yes, but stunning innovation. But then next paragraph says, look, I don't know if it's going to work. Do you see that? These tools were awesome. Yeah, okay, ahead of Adobe. But they did say, look, it's a little too expensive. Go down the ladder. Monetization of AI and search is all that matters. I want to give David a heads up. Again, he thinks that this doesn't matter, so I'm going to caveat by saying that. But right now, in the completely super grok world of fantasy,
yes, tell me.
This is good news. The
Please,
top 1% would see average tax cuts of $61,000. Ah! There we go.
Yeah.
That's what this is
about.
about.
That's a high five. Thank you.
That's what it's about. The highest, the rich people get the best.
I just,
the rich are not like you in the.
It's not going to be hard to replace you with a simulation. So, to the extent you're just going to be on air reading Super Grok, it's like, what
how do you keep up with the bill? It's 400 pages. Tell me how to keep up with it.
Nobody
Before Grok, I had no idea. Go to some of the others. Just says, look, I haven't had time to look at it yet. Look. Should we get some hack senator up here who's going to tell us some lie? There. I said it.
But you don't
people feel.
You don't believe the Penn-Wharton analysis, which basically agrees with what you just said.
No, I like the Penn-Wharton analysis. I'm just saying that if we don't tell this, I have no way to get. I believe Grok when it says that the rich people get this big tax break. I don't know. Maybe it doesn't. This is not there yet.
No, understood.
But and can I just go back to what you said about me and Grok for a second?
I'm just kidding.
No,
you know that.
No, I'm not kidding about this.
Okay, tell me.
I have never in a million years, well, never the 70 years I've been playing, been able to get minute-to-minute analysis of what's in a 400-page bill. Now, it may not be perfect, and I know that, but I think this is amazing. I don't think this is... Can they replace me with it? Jensen showed me a replacement of me, right down to my accent. It was perfect. It was
By the
perfect.
way, all right, Grok obviously is XAI. That is a Musk
That's why I'm
company.
doing
He and I
this.
did. We'll have this later in the show. Talk about demand for GPUs and how many they're going to need in terms of actually being having the compute
AMD
to continue to fulfill Jim's
Do you
wishes.
think I'm doing this because you
No,
did
no,
it?
no. I'm just
This
trying
is-
to. But there's another
This is
part.
segue to you.
Understood. And there's another part of the business, obviously, that Musk oversees at Tesla, of course, which also relies a lot on AI, self-driving, and what that will mean for the company. He and I obviously had a long conversation
I'm
about
here.
the potential brand damage he's done and the significant decline in sales at Tesla. But he comes back, as you might expect, with autonomy and robotics. Take a listen.
The only things that matter in the long term are autonomy and Optimus. Those overwhelmingly dominate the future financial success of the company. As for Q1, we had a global factory changeover for the Model Y. So there's a new version of the Model Y that came out, which required a factory shutdown across the world. Model Y is the #1 selling car of any kind on Earth.
Number one in the world.
Number one in the world.
Right. I watched your presentation during your last, right here, I think, during your last earnings.
Right. It's the number one selling car in the world. So, we can't make cars if the factories are retooling. So the right time to retool is the first quarter, since generally that's when the least demand occurs. But we've seen a major rebound in demand at this point. I feel comfortable.
You have seen a major rebound in
Oh, yeah.
demand. You really believe you have seen that?
Yeah, absolutely. I mean, look, for most people,
right?
I mean, when you buy a product, I mean, how much do you care about the political views of the CEO, or do you even know what they are?
Well, in the case of Tesla, people conceivably care. He certainly has potentially alienated any number of the customer base. So if you take a look at EBIT, I mean, just in terms of doing the research, sometimes we don't focus. In 2022, they were doing twice the number they are right now of EBIT. But he's got people focused on robotics and autonomous. And yesterday, of course, we spent most of that first interview talking about the robotaxi introduction in Austin, which is going to be very important. And when he came up with that million number, Uber stock went down as well, because that's seen as a potential
Well, we
threat.
had underneath, we had Tesla not buying Uber. We had that for underneath.
Yeah, I mean, that wasn't right. That was the second, just because it was something that sort of kind of kick around with him. Obviously, I don't think people expected that would be the case, but there is a concern that perhaps on the Uber side, they're going to come up with an app. He said that shouldn't be difficult for us. We're going to have no problem coming up with an app. And if he is right in his projection that there will be 1 million cars on the road, let's call it by the end of next year.
You seem skeptical about that. I just am pointing it out.
Well, he's been saying it since 2016,
Right.
so...
Yeah, I mean, in 2019, he was talking about 2020, and I brought that up to him, and he knows that, and obviously you got to say the same in terms of his expectations for the Optimus robot. I think, it was an interesting conversation, the second one we had, in terms of the challenges, ultimately, in training all of those robots and what that will mean, but there's a lot of focus on Austin, and he did answer a lot of the questions there.
David, I felt that his larger, without saying it, concept was that the interstate's going to be open. The president's going to grant the interstate.
Yeah.
And so we're going to go from New York to Boston on the interstate. That's what he was saying.
He did bring up an important point, which is you can't have a patchwork of state rules. You need the federal government there. That's one reason why the Transportation Secretary was visiting yesterday, Sean Duffy, because you are going to need a broad set of rules so that you're not dealing with, well, Maine's got one thing and New Hampshire's got a different one, and on from there. Massachusetts and Connecticut, so yes.
It's going to be an interesting test of states' rights, given what the Senate's doing right now regarding Californian environmental rules.
Yeah, it really is. It's a states' rights issue. But not Waymo. That's not a states' rights issue, right?
Well, they just crossed 10 million trips.
I know, Waymo is out there operating and doing, I mean, listen, again, it's 0.06% of all rides. Let's just put it in perspective.
I put your whole interview in perspective.
Thank you.
Because I put it through Grok.
Did you? What did Grok have to say?
It doesn't acknowledge you.
Doesn't.
Remember
No,
that?
Grok.
Remember when ChatGPT did?
ChatGPT doesn't acknowledge me. Grok does.
Oh, that's good, David, because you do exist.
It's unclear. You exist, David. Don't worry.
For now.
When we come back, we'll talk some tariffs and the consumer. We'll get a closer look at the retail earnings today from the likes of TJX, Lowe's, and Target, which is a big story. Take a look at the pre-market. Not far from session lows right now. Squawk on the Street's back in just a moment.
not slipping. It drives perfectly. Yeah, just very, very occasional. And I don't even know if it's a slip. Just, you know, you come to a stop. It's when I drive just a little bit different, not a complete stop and then deal with the gas or anything like that, or it changes gears, there's no slippage at all. Just when it's, I come to like a real complete stop real fast and then I go ahead and give a little bit of gas, it feels like it slips a little bit. That's the only time it doesn't move very often. Just when I'm driving straight. Yeah, he told me $400. Somewhere here. Okay, thank you very much. I'll do a little more research and figure out if I need to do that. I'm gonna be doing a lot of driving there. It's gonna be back and forth soon, like 6 months every day. No calls, just a couple hours a day on the highway. Okay, thank you very much, sir.
Busy morning for retail earnings. TJX with some mixed results while they do keep their full year guidance despite tariffs. Lowe's reaffirming its outlook, reporting a beat on the bottom line. And then there's Target, a revenue miss, cutting their guidance. Brian Cornell says raising prices to offset tariffs would be, Jim, a last resort. Comps down almost 4. Last year down 3.7. Inventory up. There's not much good here except for maybe a div hike.
Well, Target's
right, but Brian was very upset.
Oh, this is Lowe's.
Wanted to do much better.
What is it?
Recognizes
Target. Oh, well, if it's Target,
that his prices might be too high, has to discount more. I
They're full of
still
crap.
think the .com's doing better. They invited other companies in, and they're not going to charge a fee. But yeah, this was just a look. Let's just call it. This is a bad quarter. Now I know when I pressed him,
they always have a bad quarter. Shoplifting's their problem, and wokeism.
Was, and I just went back and asked about the conference call that they just did with reporters, and again,
They used to pump the heck out of. Good morning, retail traders. They used to pump the heck out of Target, and then it went woke. And ever since then, it's just been nothing but pathetic. Oh God. They'll probably jump on this dip, knowing fat cats. Yeah, 20-day low. CEO says price increases are the very last resort. What's that? Yeah, I can hear you. Good morning, sir. Oh, just got in.
So watch this pre-market low, 59.05 on ES.
especially, it's in the middle of the sell-off. 1 minute RSI is overheated, not 2 or 5 yet.
Yeah.
It could have enough RSI left to push back down to that PM low. But it has bounced at some point. So I think we're going to push the PM low, come back up into this 59.20 support, or now it's a resistance zone. And that's going to tell us how the day's going to go.
We've had one hell of a climb on this thing here in the past 20 days.
Yeah, if it rejects this 59.20 43 zone, it's not going to be a great day for the bulls.
No, I got 5904, 64.
Well, 5905 is my pre-market low, so
Yep.
it's going to be a support zone for right now.
Yep, I agree, 100%. And then we got a gap on the 1 hour. So if it gets to be a nasty day, 57.96. But that, I don't know, that might be hard to believe. That was just like 3, 6, 7 days ago, a week. Are you a mechanic, Funky?
I am not.
I'm not.
I know a lot about cars, but I'm not a mechanic.
Yeah, I'm debating on if I need to go get my transmission fluid changed.
How many miles?
120,000.
You ever had it changed before?
Not that I know. I don't know. I haven't owned that many miles. I bought it with 116,000.
If it hasn't been done, I would not do it.
God.
If you don't do it regularly, like every 50,000, 60,000,
Yeah.
then you get a bunch of metal shavings in the transmission fluid. And
Yep.
when the transmission gets so old, those shavings are the only thing that keep it held together. So when you change the fluid, you flush those shavings out. I've had it happen on 2 different cars. Once they flush those shavings out of the transmission fluid, then it starts slipping.
Yeah, I'm hearing that story. And you can't check the fluid, see what color it is, because it doesn't have a dipstick.
No, and you're really not gonna see how many shavings are in there by checking it.
No. But you could tell at least the color. If it's a dark color, you probably wouldn't want to change it either.
At 120,000 miles, if you don't know, I'd leave it alone.
Yeah.
Is it starting to slip or act funny or anything like that?
No, it only slips if I drive it kind of weird. Like, I come to a complete stop real fast, and I give it the gas without it. That's the only time. It don't slip during gear changes or anything like that.
Yeah, I'd leave it alone then. Because if you flush if it's starting back funny and you flush those shavings out, then you might as well just bury it.
It really doesn't, it drives great. But only on a special occasion, like if there's a car in front of me and all of a sudden I stop it real fast and then I give it the gas. That's the only time I feel a little bit of slippage.
Yeah.
The only time. If I'm stopped and I give it the gas, I don't feel it. If I had a complete stop on a slow down, or I just kind of idle to a stop.
What kind of car is it?
Oh, it's a 2017 Passat Volkswagen. I brought it into a mechanic a while back to change the oil, and they did a rundown on it and was saying, well, you need to change the struts, you need to change the transmission fluid, you need to do something else, and I changed the back brakes. So I went and had the back brakes looked at. They were just fine, and took it to my other mechanic, my major one. He said the struts were fine. Just that annual 120,000 mile change. But I don't know. I don't know the history. And when I bought the car, I know the people that owned it. It was pretty nasty. It wasn't clean. They cleaned it, but I could tell before they cleaned it. Whoever owned this car never cleaned this car once.
Is
I think so. Yeah. Yeah.
1.8D.
Yeah. It's a good running car. I mean, it runs fast. Got great gas mileage.
Yeah, I'm just reading about the transmission now.
Oh. Yeah, I'm watching videos, and some say do, some say don't. I can't check what color the fluid is, so I don't know what color the fluid is. Let's get on. We got a few more minutes left, 3 more minutes. You got Funky's assessment of the market, 5909, somewhere around there, 5905.
5 on the ES.
Yep, that's what I got. Give or take a few cents.
That would be pre-market low.
And that's a pivot point also on the 7-day. So we've already tested that once. And actually, you know, if it did get nasty, 59.20, head and shoulders. 59.21.
That hourly EMA cloud looks horrible.
I mean, I got stuck in it yesterday on that last part of the day. I traded it perfectly all day through. About 7 trades in that last one. Not the last one. Last one I made it all back plus. I mean, they read to $2,000.
Yeah.
But a dip. It was a never forgiven dip.
Yeah, that dip was ridiculous.
Yep.
It even tricked me. It hit one of my support zones and then paused. I was like, oh, okay, we're going to bounce the support. And then it just said, no, sir.
It hit mine 3 different times. And I had it on and I said, jeez. And then it got so far out of the money where it wasn't going to recover. And I bought it close to the money at first, and I figured I had a good chance, but it was a bad trade. Here we go.
All right, there's your 9 tap on the 5.
It went below mine, 5904.
This 5920 ES zone is resistance.
The options ain't cheap.
All right. 5922.50 on the ES. That's going to be your 63 on the 5. This one turned down. It's going to turn down there. Right here.
I think if we break over 464, we might have a chance.
Big handle. Jesus.
Yep. 5940s.
Yep. It got to the top of my resistance zone. Pulled.
We'll see if we come back and retouch at 04 or break the 10, 59.10.
We're getting way hot on the 1 minute RSI here. Drops in 59.50s at 355. Drops in 59.50s at 355.
And I got a pivot point right around 07.
We're just sitting here dancing right on top of my resistance zone.
Yeah, here we go. Let's see if we come down and touch that 04 again. Then I'll jump in. We got a tweezer bottom if we can respect a higher low.
Where you got tweezer bottom 1, 2, 3
The first two candles.
on the 1 minute?
Yeah.
Okay.
Right about now.
Yeah.
Here we go.
We're tapping the 200 on the 1 minute right now.
Yep, I grabbed some 59.40s at 360.
Gotcha.
With a tight stop. Oh, shit.
Starting early.
Yep.
Alright, if you missed the entry point he called out, pretty close to it, yeah.
Okay, we're retesting that one more time here. This should break out now if it's going to. There it is, 360 again. $59.04.64 hold, baby. We were within just a few pennies on the body of that candle, about 30 cents. NVIDIA had a little pop. Met my support. $4 on my calls here. Oh, what did I just see there? Yeah, that's a major resistance at 59.10, a little bit above it. We're at 59.10.81.
Yep, it's struggling to break my resistance zone on ES too.
Yeah. It should have done it right there. Ah, come on. Break it. 59.10.81 is what we got to get to. If anybody took the trade with me, go ahead and be happy with $40. But I think we're going to go up and double top. Might get about 30, 40 more bucks out of it.
He might keep going up. That last 5 minute had a huge bottom wick on it. You're at 63 on the 5 right now.
Yeah.
If you wanted to scalp, I'd take it there.
Oh yeah, that first candle. 2 hammers. 2 sledgehammers, what I call them. We're going to know the faith of it right now.
Yep, I might scalp them again here in just a second. The 2 minute is pushing towards the 63.
We went back and touched that 59.04.64 just now. That's a major.
$2. I was being greedy.
Yeah, that's a major support level. That's on the 5 minute. Well.
The way it keeps rejecting the top of the orb, though, I'm not super convinced they won't come back and try the bottom of the orb.
Yeah. Here's my order chart. There it is.
Because the orb will be set in 3 more minutes.
Yep, 59, 10, 12. We're at the 9 on the 1 minute. Let's break it. Again, you know, this is an exit idea, but I'm going to hold on here. I think we're going to break it. There's 59.10 right now. That's it. I mean, time to escape. If it's going to do it, it's got to do it now. We're squeezing between the 9 and the orb. If not, this is your exit idea. I'm going to sell 2 of them here at 410 and leave 1 on the table. And then if we break that, I'll go ahead and add them back on. 410. We got 59, 15, 70 next. There's 430. Shoot. 440. There's. It's almost worth selling them there. Bingo, baby. What are you wrong about? Oh, the debt? Oh, the tax bill. Well, I think if we just extend the tax bill, we'll be fine.
Good Lord, at the open interest on the 58.75 puts. God. 15,500.
Yeah. So your orb's established itself.
Yeah, it is.
I'm thinking about selling this last one, but I know if I sell it, we'll pop and hit that 59.14.
Yeah, the 1 minute and the 2 minute don't look bad to me, Jim. The 1
No.
minute has not broken below the 21 yet. So
No.
it's holding the EMA cloud.
And we're busting past that 59.10.81, which I called a real solid resistance. There it is. Break it. So if you're still in this trade, take some off the table. We got a, it's almost a dragonfly right there. An inverted Hampton, you know, a little bearish candle here and bearish candle there. There's 410 again. There we go. Break it.
I'll get back long if I see a 9 touch on the 2 minute on this. I'd like to see it pull back and retest the top of this support zone that used to be resistance.
I was debating on selling my last one here, but I just have a feeling. It's 1, 2, 3, 4. 4 times we've retested that orb on the wick.
Yeah.
And we're so close to the 21, so you know it's kind of like a.
There it is. Now your RSI's hot.
Yep, 430. So you're at the 21. There's another exit idea. $450, baby. Now this kind of gives a permission slip. Say we could go higher. I'm gonna go get my tea ready. I still got one contract here at 450. I mean 360. Now that I start trading with this orb, that orb now becomes a solid support. So we're squeezing now between the 21 and that orb. So
ES is dancing around top of the orb.
Yeah. So this is a major. Go ahead.
What I don't like is that RSI is so hot right here.
Yeah.
I think you're gonna have to have like a 9 touch on the 2 minute.
Well, we just hit 480.
Your 1 and your 2 minute RSI are hot right here.
It could get hotter.
I mean, you can get 5 hot, and that's when I usually reverse. Like if I see 1, 2, and 5 all hot at the same time, I go ahead and get a reverse.
I think we can go a little bit higher. There's $5. Yep.
You can take ES all the way to pre-market high of 59.43.
490, baby.
So ES could run 10 more points. definitely getting some put.
I'm going to sell some right here.
All the RSIs will be too hot.
Yeah, I'm out. 520. What do you think about that, Sheba? And Richard? There's a major support right here. Your orb on the 1 minute. On the SPX.
Yeah, I mean it's on the edge. But I see why it bounced right there now that I backed the chart out. That was exactly where it bounced. Is the 5 minute 200 SMA on the S.
Yeah. You know what? Right now you've got the body of the candle on the 1 minute respecting the 9 EMA. So that still stays very bullish for now. And it had a tweezer top for the through the pullback. There's a 410. I should have grabbed him. They were at 410 just a second ago. And scalped him for another $100. Mr. broke the orb on the 1 minute and pulled back to the 200 here. Meta's up 340. And PLTR pulled back to my support, I think. Pretty close to it. This morning. Tesla. Okay, we're back to $4.
Mm-hmm. Yeah, I'd like to see ES retest this 59.25 zone.
And I have, for some reason, got 59.26.41 on here from yesterday. And that's a real nice pivot point. That was a pullback we had into close yesterday.
Gotcha.
Okay, right about now, we're on the 21. On the 1 minute, the SPX. I got to hold here to stay bullish.
I got a little bit left. ES is coming down to 63 on the 1 minute.
And the VWAP on the SPY is at 589.55. 3 black crows right now on the 1 minute.
Yeah, I like the long end against 59.25.
I'll grab some here at 370.
There it was. What a bounce.
Yep. 370.
$40 in a couple seconds.
I got 60 right now. 70. And go ahead and scalp it. You got your 1, 2, 3 resistance coming up. Now that's 3 black crows with a triple top. So I'm out at 340 from 370 in 1 minute. Less than a minute. To 4.
You got a really good pull down on Oclo. For those of y'all that trade Oclo, you're testing the bottom of the orb and your RSI's hot, so might not be a bad place if you want to grab calls on Oclo. Master is testing the bottom of its orb too. They are both breaking down.
Mm-hmm.
Oclo's bad breaking down. Master at least held its orb.
Oh God. Shit.
Jesus.
$5, 620.
Yeah. Good trade.
Yeah, I love it.
It's going straight to that free market high.
Something.
That's where it just pulled back to.
Perfect. Well, it must just, some news just came out or something. It's, yeah.
You got Oclo and Master both turning now.
Hot rod, diggy dig do. All out at 580 on that baby.
It's a nice little $210 scalp.
Yeah, it was. Plus the getting out. I had 3 of them. I sold 2 of them at 440.
Master's already come up $2.50 since I called the bottom all day.
Yep. It's a good go-to trade, like you said.
And you're $3. God, I don't even know what those contracts moved in $3.
SPX now hit the 63 on the 1 minute. Now, 3 black crows. I'd say I got lucky, wouldn't you, Randy? I'm the luckiest man in the world, I think, what Randy says. So I want to describe what we have here. 3 black crows with a gravestone candlestick with a huge engulfing inverted hammer. And this thing just, I mean, $6. I went, bam. So everything on here looks a little bit bullish. And all we got to do is break, all we got to do is break 5920.83. And we move up to the 200. Take that CNBC.
I want to get in it, but I'm not going to chase it. I think it's midway through a run.
Yeah, you want it to pull back to the triple top break. And that's right.
Pull back to the orb.
I
don't think it will.
I think it'll pull back to 59.1637, the SPX. That's where I'm going to set me an alert. Right on top of them crows, too. So I got 2 confirmations. Triple top and the top of the crow.
Let's see what you're talking about.
On the 1 minute.
So about right here.
Yep. Right about here. Just triggered it. To stay bullish. $4.50. 1 contract. Come on, you idiot. Don't ever chase a breakout like that. Let it pull back. Like Funky said, you don't chase. You don't have to chase. And put some more lotion on my body here.
It puts the lotion on its skin.
Ladies, I got real soft arms. Vegas always said I had a feminine side to me because I was so sentimental. Come on. Yep. So it's retesting Bug, you nailed it. Give me the bucket. Put it in the bucket, Michelle.
It puts the lotion on its skin, or it gets the hose.
Silence of the Lamb was a good movie.
Mm-hmm. It was. Anything with Anthony Hopkins is a good movie. Oh, we're gonna get a top of the orb.
Yeah. That hurt.
Nice.
Looks to me like I'll end up adding here. That's where I got in at 360 down here, and they're at 370 right now.
Yeah.
I didn't want to break the 63. You can see that body of the candle. So I'm going to add a couple right here real soon. I'm going to go make my tea, and then I'll add. There, I better add first. Michelle thinks serial killer when I put lotion on my skin. Watch it. You're pushing it. Okay, get ready to add. Right about now, third crow. Let's do it. 340. $350 and $450. I got 3 of them. Another 3 black crows with a tweezer bottom. Do-do-do-do-do. Come on, you dingbat.
If anybody got those offload calls, you should be good too. You're coming up to the 200 on the 1 minute.
Average 384. Now you're dealing with a bunch of fat cats that are still bearish in this market and pissed off because they didn't get this bounce. So they're going to try to do everything they can to bring it back down. Not counting today, but just where we are. So, you know, I'm just trying to say be careful. We could still see some more good selling so they can get back in it. They always like to see things retest. And they look at it as a daily and weekly, long term.
This definitely looks like one of your snakes on the 1 minute on the S.
Yeah.
Am I wrong? Like, I've been trying to figure out what you're talking about with snakes, but it looks like what I think you're talking about.
Let me see here.
1 minute on the S.
Yeah, let me look.
That kind of goes up, down, then up and down again, but then smaller.
Yeah, like gravity.
Like it's coiling up.
Yeah, so like here in the last 10, 15 minutes or?
Mm-hmm. Yeah.
No, you can't really. It's not enough time. But this morning, you see how we broke out? We had the snake. We had a.
Pictures live real quick.
Yeah, I'll go ahead and I'm gonna draw it up here. So there's your snake this morning, and right at open we had the breakout. Thing bounced up. We had a 1, 2, 3 breakout, then it pulled back off the 200 right there. So now we're just stair stepping now. But that was your pullback right there, right at open. We had the breakout from that channel. Here it's just been too short, so we're creating a flag, a symmetrical flag right now, which means it's getting ready to do something here real soon. So right now you got like a symmetrical flag.
I mean, there's your break there. And it was getting ready to pull.
Yep. Oh, let me see where we are here. I've got to keep an eye on my trade.
Contracts aren't moving great, though.
Yeah, we're bullish as could be right now. You got to break the double top. 59.3686 on the 1 minute. If that breaks, we'll go higher.
Well, you're testing the 200 SMA on the 5 minute on the ES right now. You're bumping up against it right now.
59.3697 is what's got to break. And that's a beautiful spot. If you look at the 3 minute, the 2 minute, and the 5 minute. The 5 minute, you got the 200 SMA to break. So the 5 minutes really the hard resistance. At 59.3697. I'm at 390 right now on mine.
Yeah, that's what I was saying. Even with this big pop, the contracts didn't move that much.
No, it won't probably until after it breaks 36.97. You got snake, breakout, pull back, boom, into a symmetrical flag, into a double top.
Good deal, Yankee. Let me see where your resistance is. You're coming into a resistance zone right here. If you have multiple contracts, I might scale.
Uh-oh. That's the sound. We're about to launch.
I would jump in these CRWV calls, but not with the freaking, even the 5 minute RSIs up in the 90s. Those things are so overcooked.
Oklo bounced up there on a double, triple bottom.
Mm-hmm. That's what I called out a while ago.
Okay, we need you to make.
Hey, everybody in this room should have made some pretty good money today already.
Jimmy has, but now I'm just worried about this one. About 120 bucks.
BBAI is running. For some reason, everything on my watch list is red except for that and CRWV. And BBAI hasn't been moving for the past 2 weeks. I was trying to wait for it to get back down to around the 290 mark, and I was going to buy 1,000 shares of it.
We're back to that 59.10.81 right here. Hmm. 2.90. Crowd's going wild here at the sports arena. I'm going to go put salt on my steak. I forgot to salt it last night. Or should I? Yeah. I wish I'd have salted it. Come on, man. We need you to do something here. Back in, you suckers.
Here's your little pullback on your CRWVs. That an RSI pullback. If you wanted to get into those 105s, might do it here. See if this 2 minute holds to none.
It's a major pivot point.
black crows on the 2 minute. You got a 9 tap. You got a tweezer bottom. I mean, that's a pretty good setup in my opinion.
Yeah, this is.
To jump in the 105s.
Yeah. What about the orb? We're close to the top of that. Or we just. Let me look at the orb.
I'm on CRWV. I'm on this other one that everybody's on that had the NVIDIA news the other day. It's been running all day.
Oh.
Was waiting for a pullback. That looks like a good opportunity to jump in the 105s if you were waiting.
CRWV.
Yeah.
Oh God.
God, look at that stick. Yeah, I'd say that was a good entry point. Jesus.
I'd be a little scared jumping that.
I'm an actual wizard. Back over to ES. What are you doing, ES? Oh my God. We went all the way back down to that support zone?
Yeah.
And I missed it?
I didn't.
I should not have been watching that.
Yeah, I gotta wait. I can't jump in that thing so high.
Okay. We're about to tap the 200 on the 2 minute.
Not being very friendly. I'm gonna go salt that thing real fast and I'll be right back.
At the 200 on ES on the 2 minute right now.
Well, we're back to a double bottom. Just got to respect this. I hate to do it, but I'm going to.
That's what I was telling him. So right now on ES, you're on the 2 minute, you're sitting on 200. So, and it hasn't lost 200.
Yeah, let's hope I did right. $283 average, 284.
Which ones are you in?
The 5940s.
Gotcha.
Gosh. But it sucks.
You getting there?
Yep. See, now you got a snake. New one.
Mm-hmm.
Jesus Christ. It's not being very friendly at all.
No, it's not. Good news is you're still in a support zone. The bottom of the support zone on ES is 59.20. If it pushes past there, you're going to the bottom of the orb, though.
Yeah, I don't want that.
But it's still holding the 200 on the 2. It wicked below it a couple times, but it's holding it.
Yep. And we've had support on the 1 minute for 6 minutes.
You're down 95%. Have you ever considered selling?
No, I can't.
That's no.
$3.
You're down 95%. Have you ever considered selling?
No, I can't. That's no.
You're down 95%. Have you ever considered selling?
No, I can't. That's no.
And we're back at the orb. Let's squeeze this baby out of there so I can have my steak, because I'm going to eat lunch after this. Damn. So we got the snake breakout, pull back. Someone said yesterday I had composure on YouTube. Good morning, Seamus, Newcastle, Robert, and S. Right now, Jimmy's down on these things. He was green.
MSDR's running. Aqua's breaking out of a resistance zone, so it's going to run some more. God. Yeah, if you jump in those Aqua calls when I called them out, you are freaking golden. You're up $2. We're back down here touching the 200 on ES.
Yeah. Where my slash ES go? What the hell is that?
I do not like the trend line on the 2-minute on ES though. It's definitely lower highs.
Oh, let's see.
She's about to dump.
No.
I hope not. You're at the bottom of your support zone right here.
We can drop a lot more.
Oh, if you lose the support zone, you can go to the bottom of the orb.
Yeah, I got 215. $6 more bucks. Always clean. Oh, God. AMD's out of support. I don't know if it'll hold. I'm still in these suckers. It's definitely bearish tent going on here now. Speaking of pressure, do my morning check. And then I'm going to cook my steak. But I like to get out of this trade first. It's 260.
You're at top orb on the 1 minute on the ES, so this is resistance.
Yeah.
You have multiple contracts, I might scale.
Yeah, I got a few. Three white soldiers right there. Jimmy's not liking this. Was the machine messed up or what? Peppolini's showing cleavage, so it should be a good day. We came back and retested the support level with a hammer on my SPX. Break it. Now, to the fourth reading, it read right. 117 over 88 with 76 heartbeats. After I saw her cleavage, it went down. You'd expect a man's heart rate to bounce, blood pressure to bounce. Michelle, you got anything to say about that? $265, baby. Let's go. We broke to 63. We have 3 white soldiers. Now I'm almost even. There we go. Break it. 320. Oh, should I sell? That's the question. Or are we going to have a big bounce to the 200? Come on, man. I think you know what's best for you, James. $3.20. The crowd's going wild at the sports arena. $3.20. Come on. Continue the upward climb here. I'm just hoping right now that we're going to get a little bit more. You can do it. Hope is not the way to trade, though. There it is, 330. Come on. I think you know what to do. More cleavage, Peppolini, please. $340. Now, you're at a double top, double top, double top, double top. That is nice. I'll take that. Out at 350. $370. Come on. Fuck yeah. I can't tell you how happy I am. $380, come on. I'm gonna take it. Oh yeah, go! Now's your exit idea. Do the smart thing. And I had a lot of money in that one. Anybody in that trade with Bobo? Did you get out? Retail traders, may I help you? Is this Brandon? Yeah? 10%? Man, you watch me like a dog, man. How about watching your son for a bit? I heard he's $14 million in debt. Yeah, you got prostate cancer. I know, I feel for you. You're a pain in my ass too. You were for 4 years. But I do appreciate you making me a lot of money and teaching me how to trade the sneaky snake. Yeah. Yeah. You still want 10%. Even at this late stage? You're in debt also? Okay. Well, I'll get it to you by tonight. And 10%, I had 12 contracts at 384 and sold them at 350 and 380. So that'd be a pretty good chunk for you. Yeah. You're welcome. Sorry about that interruption. $4.20. Bingo. Hunter is my friend. And so is Brandon. Give me back the bucket, Michelle. Put it in the bucket. I want my hand lotion back. Please put it in the bucket. You do what I say. put the lotion back in the bucket. What do you think about that there, Funky?
I am doing a remote control session with a customer, but I'll go ahead and give you an A+, even though I never saw it yet.
Oh, okay. Would you give me one of them sessions? I'll take one. How about that, ladies? One-on-one. Snake breakout, pull back, boom, to the 200. I'm in this other room, kind of. That's called an inverted hammer. That's bearish. I don't know how long it'll last, but that tells you to get out of the trade. You understand? Sit. Say yes. Somebody say yes.
Yes.
Very good.
Yes. Yes, Dan. Yes. Mm-hmm.
Yeah.
I'll close going back to the 63. Might have another opportunity to go along with it.
Jesus.
Holds the 63.
Now I regret getting out. $5.
But make sure it holds the 63 because it could come down and hit the 200. It's already done that once today.
Jesus. Oh. All of a sudden things got a little foggy.
It's going for a pre-market high, that 59.43 on ES that I called out this morning. Just tapped it.
Can you believe that? $5.70. I sold them the last one at $5. I hate it. 620.
I don't see any resistance left.
No.
All the way for another 46 to 72, so 26 points. It's my next resistance zone on ES.
Boom, shakalaka!
This son of a gun could run.
Boom, shakalaka! Boom, shakalaka!
Damn it.
There had to be news. There's no effing way this scandal was real. This scandal's insane. This is not technical trading. This is bullshit.
I can't believe how much I just left on the table. No. God.
It's about... Shit. There's no way it'll make it to that zone without pulling back a little bit. It's got to breathe because RSI is way too hot on the 1 and 2.
I left.
For RSI to get hot on the 5.
Oh. I'd made $6,000 on that trade if I'd have held them. $6,003, 6, 9, 12, 15, 18, 20 minutes. Yeah, 300%. Jeez. Time for a big fat steak. I left 3,000 on the trade. Who's the best trader out there, Michelle? Answer it the correct way. Who's the best trader out there?
If I ever get the psychology right,
Yeah.
it's going to be dangerous. Like the technicals, the entries, I can freaking smash. It's the holding the damn contracts that is my biggest downfall.
I think that's everybody's biggest downfall. I've been working on it for 21 years and I still can't get it right.
Oh God, don't.
I've been getting the entries nailed them every frickin' time almost. Magnificent, wrong answer. Richard, give me an F. I've fooled the fat cat so many times. Ugh. Okay, I got an A plus. That's good. Whew.
Okay, now all the RSIs are too hot. Take a big picture, but see if I can find something. Oh, we got freaky yesterday's lows right here at 59, 50, 69. This might be a spot where it turns, or at least takes a breath.
Okay, we're coming back down for some profit here. Get ready. Off the 9 for scalpy poop. So we had 3 white soldiers out of the snake. 2 of them, then 3 of them. So that's called stair stepping. I knew this was going to be good after them, but I didn't think it was going to be that good. That's why I got out at the 200, but shit. All out. So I'm going to go in there and clean my skillet out and cook that steak and make a salad and have the same thing I had yesterday. The salad contains 2 radishes, half a carrot, half a cucumber, feta cheese, and black olives, an Italian dressing with a ribeye. And I'm going to go in there and I'm going to take a paper towel. That salt is to pull out the water in the ribeye. And I'll tap it with a paper towel and then I'll throw it on the skillet. But it took me 6 ribeyes to finally get it down to perfection. And tonight I'm going to try a fillet. Or tomorrow. Go get a fillet tonight. Still debating on getting that transmission. That's the toughest decision I ever had to make. I hate to fuck up my transmission and have to get a new one by changing the fluid. So I'm going to call a Volkswagen guy.
Well, of course, he's going to pay you to flush it. It's fucking money for him.
Yeah. If it was my car, I'd probably had it done already by 3 times at least. At least to the 30 to 50,000 mile range.
I wouldn't. See, my wife, we bought a brand new Hyundai Santa Fe, and they recommended doing the first one at 40,000 miles. So yeah, we took it in 40,000 miles, did it. Some bitch broke a week later.
Oh my!
I do not flush transmissions. I run the bitches until they just blow up, then I replace them. But I've never had luck replacing fluid in a transmission ever. Whether it was a new car or a 100,000 mile car, it just doesn't work for me.
I've never done one.
Do it on my truck.
I've never done one either.
I'll let them replace the brake fluid, all that other shit, but don't let them touch the transmission fluid.
Yeah. I don't think I'm going to either. I've never done it. That's why like you said, I've sat and listened to YouTube all morning about it.
I'm telling you, dude, once it gets to so many miles, those metal shavings that are floating around in that transmission fluid are the only thing letting those gears make contact.
Yeah. And I don't know. I can't test it. If I had a dipstick and if it was red, I'd go ahead and do it.
There you go.
We got the 21 coming up, and that's the first soldier right here. So that's 1 support, 2 support, 3 support. I'm going to grab one here at 620. There's $7. There's $100 right there in less than a minute. What do you think about that, Charlie?
A plus, Timbo. A plus.
$7.30.
But my port size will not just let me randomly grab a $600 contract.
$7, $7.60. $7.20. That'll buy us dinner. There it is, $6.50. Dang it. No, I sold some at $3.80. I sold some at what did I sell them at? $3.50, $3.80, and $5.
And your 5940s are $8.70 now. $9.
Dadgummit.
Jesus. That's what I just finished saying. God, if I could just hold the contract.
$280 on one contract in 3 minutes.
You're pushing your luck, little man.
I think so. So let's talk about this. This is a strategy too. You got 3 white soldiers. You have a lot of momentum. So they'll pull back. There's your first support. Let's draw this out here so you can see it. So they always, once you have that third soldier, we pulled back, and then it breaks out, and it pulled right back to that first soldier right there, third soldier. Come on. And if that didn't hold, I would have waited until the second one. And that would have been off the 200. So I went ahead and grabbed one just for spite. So that reminds me of a song before I go to lunch. I saw this guy in concert with Irish Dement. I used to sing this song.
Home is where your couch and your Wi-Fi are. And with free 2-day shipping, you can order your Wi-Fi.
He's passed away with COVID.
Irish, you sing these songs like you know them, you know? Well, I knew somewhere in the record I was going to have to get around to writing one. So this one here, I actually wrote it for a movie. I was in a movie last year. I guess it's coming out around Christmas, and me and Billy Bob Thornton play brothers in it, and Andy Griffith is our dad. That makes me like Opie's stepbrother. So Billy Bob asked me to write this, or to write a song for the ending of the movie, and I asked him, I said, I don't understand when you write a song for a movie. I said, are you supposed to talk about them or not talk about them? I said, because sometimes I go to movies and a song comes on, it's like your alarm radio went off in your hotel room, I said, what the heck's that song doing in here? So Billy Bob just said,
Billy Bob Thornton.
So I just went and wrote this song here, and kind of based it loosely, real loosely, on a couple of characters in the film. It's called In Spite of Ourselves. She don't like her eggs all runny. She thinks that crossing her legs is funny. She looks down her nose at money. She gets it on like the Easter bunny. She's my baby, I'm her honey. I'm never gonna let her go.
Well, you ain't got laid in a month of Sundays. I caught him once and he was sniffing my undies. He ain't real sharp, but he gets things done. Drinks his beer like it's oxygen. But he's my baby, and I'm his honey. Never gonna let him go.
In spite of ourselves, we'll end up sitting on a rainbow. Against all odds, honey, we're the big door prize. We're gonna smack our noses right off of our faces. There won't be nothing but big old hearts dancing in our eyes. She thinks all my jokes are corny. Convict movies make her horny. She likes a ketchup on her scrambled eggs. Swears like a sailor when she shaves her legs. She takes a licking and keeps on taking. I'm never gonna let her go.
In spite of
Well, he's got
ourselves.
more balls than a big brass monkey. He's a whacked out weirdo and a love bug junkie. Sly as a fox, crazy as a loon. Payday comes and he's a howling at the moon. But he's my baby, I don't mean maybe. I'm never gonna let him go.
In spite of ourselves, we'll end up sitting on a rainbow. Against all odds, honey, we're the big door prize. Oh, we're gonna spank our noses right off of our faces. There won't be nothing but big old hearts dancing in our eyes. There won't be nothing but big old hearts dancing in our eyes. In spite of ourselves.
Thank you very much. In spite of ourselves. Okay. 3 Crows off support. That's a triple bottom. So you got 3 black crows with a triple bottom off the third crow. When you're at this stage, though, you've got to be real careful and make it fast, simple, and it's not bullish until it breaks the 9. Now that you're under the 21 and the 9, you're still bearish. So you run it to the 9 and get out real fast, unless we break it. And then your resistance levels is going to be right here, right there, and a double top at the end of the stage. But you got to break the 9, and you're squeezing right now when you're between the 21 and the 9 on the 1 minute. So 59.32, 59.34, and this one right here. You see where we stopped right there on top of that third crow? Each one of them is a resistance level. And if you break this one, you're pretty much going to run up and hit this here head and shoulders. And they'll stop there, pull back, or it's going to break out and do a double top. But that's like, you got to think fast scalp, because you're still squeezing and you don't know if it's going to drop down here and hit the 200, hit that second crow, which is more apt to do right now, because Jimmy's getting ready to go to lunch. The market maker won't be here. At 59.23. Markets closed on Memorial Day Monday. Short week. Thank you, Parge. These things are 560. If I wasn't so hungry, I'd take this, but I'm going to wait and see if it comes back and hits that support level, that second crow. You got a wall right here. So I'd almost take it if it come down and hit this here 263. Now Funky looks at the S/ES in different time frames. Right now in the 5 minute, we're still holding the 9. We've got the 21 on the 3. The 2 minute, we're holding the 21. So it'd be off this here this double top break. And then on the 1 minute, I'd be looking at the 63. I'm going to set an alert right above that 63 on the 1 minute. $59.24.66 is a rough number. You always want to set it above where you think it's going to hit. Many times I've sat here and waited for it to hit the exact number and it'd bounce above it. So you always want to set that alert above where you think it's going to be, where you think it's going to pull back to, and start your positions. That way you don't miss anything. You start small and then you add on if it does pull back. But we have a wall. We also have the 50 crossing the 63, which 50 SMA crosses all three of them others. That 30 would be a good start. The 5940s. There we go. I might just go ahead and jump in this thing. Prepare ye in the name of the Lord. QBTS they're talking about. We got earnings coming out or something? D-Wade, President and CEO of Potential Growth Drivers.
Computers. For those customers, they need more control over more of the operating parameters of the system than is possible through our cloud service. For those customers, we're now opening up the opportunity for them to purchase systems. Our significant revenue jump in Q1, we reported $15 million in revenue, which is a 500% increase year over year, was due to our first system sale. And so we're quite excited about that system sale opportunity now opening up for us.
All right, and I don't know if there's an acronym, but when you say quantum computing as a service, it made me immediately think QCAAS, which it probably already is an acronym within your world. I'm curious to know, okay. So,
I heard $60.
Kudos to you all on that revenue milestone, especially the jump quarter over quarter. You saw shares surge significantly this year. I mean, you all are seeing shares up, at my last check, more than 90%. So looking ahead, when you think about the next big milestones for you all, what does the next 12 months look like for D-Wave?
Yeah, so obviously we continue to focus on developing more powerful quantum computers. So now that we've announced the general availability of Advantage 2, we are working on Advantage 3. And we're actually quite excited about that technology as well. That will be for the first time ever what we call a multi-chip system. So up until now, we've always increased the size of our processors by putting more qubits on a chip. With Advantage 3, we will now start interconnecting chips to grow the size of the processor much more rapidly. And then, of course, from a go-to-market perspective, we will continue to focus on growing our quantum compute as a service business. And yes, we call it QCAS, our QCAS business, as we bring on more customers solving more interesting problems. And finally, when I talked about that supremacy result, one of the things that we have recently published a paper on is the ability to use that computation to actually create an entirely new type of blockchain architecture based on quantum proof of work rather than the traditional proof of work. And what's so important about that is as blockchain becomes more and more important, this could result in a very significant reduction in electricity consumption. For example, if Bitcoin today was based on quantum proof of work rather than classical, it would be consuming about 1,000 times less electricity to do the mining. So that's potentially an interesting new application area for us, but it's still very early days.
All right, Alan, thank you so much for your time. I learned a lot today about quantum computing. That's Alan Barrett, President and CEO of D-Wave. Appreciate your time.
Thank you.
You got it. Coming up next, the Disruptors. George Sillis joins us to preview earnings from Snowflake. Those are due out after the close. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Going to make my lunch right now.
I'm Diane King Hall, live from the floor of the New York Stock Exchange. Time now for the Disruptors. Joining us for Insight, we've got George Sillis, Senior Markets Correspondent here with today's company.
CRWV really took off.
That earnings coming up. George, talk to us about the expectations coming into this.
Well, I think the expectations coming into this are obviously quite high for the quarter. I mean, if you just consider the value proposition for Snowflake's technologies and their partnerships with major customers in the data center space and the hyperscalers. The whole value proposition behind their technology has always been the decoupling of storage and computing, and that's sort of an agnostic separation that a lot of major customers really appreciate. And so they've been getting traction as a technology. But the other side is the valuation, which I'll explain in a second. That's always been sort of a hang-up for Snowflake in terms of continuous movement of the price to the upside. But if you look at the quarter they're about to report, it's actually quite good in terms of the estimates. They're estimating 22 cents a share on an adjusted basis. Now that's higher by 50% compared to the 14 cents the company earned last year for the same quarter. Sales are also expected to be quite robust, up 21% to $1 billion versus the $828 million last year. And the other thing is their remaining performance obligations are estimated to be 31%. That's an important figure because it gives you some context as an analyst in terms of the revenues that have already been committed by companies but haven't been paid. So it gives us more visibility to the ongoing revenue streams, which again manifest into cash flows and in earnings on an ongoing basis. And the total customer count is expected to also increase by 17%. But the number of customers that spend $1 million or more per annum is expected to increase by 24%. So these numbers are quite high in terms of expectations. But the only problem with Snowflake, and if you look at the price action this year, it looks good. I mean, it's higher by over 20% year to date. It's recovered nicely off the lows, but in the last 3 years, it's really been stuck in a trading range because even accounting for the forward estimates and earnings for the business at around $1.16 for the full year, it's still trading around 160 times this year's earnings and around 160 times next year's earnings. So with EBITDA growth at around 29%, it's trading around 4 times that EBITDA growth, which again, one would say maybe that's a little bit rich in terms of valuation. So irrespective of the expectations, and even if they hit them and guide higher, the stock may not necessarily move as high based on those positive reports. And obviously, you could move to the downside based on a negative report, just because the valuation is still relatively rich. And that's really been the hang up for the stock.
Great point. So then what's the approach for an example trade, George?
Well, looking at the stock, this is a very volatile one around earnings, especially because you're dealing with EPS numbers that are quite low relative to the price. In other words, you're dealing with a stock with already high multiple, so you expect volatility is what I'm trying to say. You look at the market maker move, expectation is 1 standard deviation move around 1650. So I'm not going to play a direction here, and I'm going to place a trade much like our yesterday's trade on Palo Alto, which is working out for us. And I'm going to structure an iron condor credit combo with 2 days expiration. So we've got Friday's expiration here. And I'm going to sell 1.5 times the market maker move on the high side and about 1.2 times the market maker on the low side. So I'm giving us a little bit more extension here and room to play. So I'm going to sell the 205-210 call spread. That's above the current price, and then below the current price, I'm going to sell the 165-160 put spread. And so altogether, this would earn you about $1.50 a share or $150 a contract. So that's your maximum gain. The best position for this trade is by expiration on Friday for the stock to be below 205 and above the 165. Since you're earning $1.50, your break even is going to be the 206.50 and the 163.50, and you're in $1.50, but your max risk is $3.50. So you're getting a return on risk about 43%, which is quite good on a trade like this. But that risk only occurs at max level if the stock blows out above 210 or below the 160. So we're giving ourselves a lot of play in this trading range because even if the numbers are really good, the stock may stall out because of the valuation compression, which is probably necessitated in the name like this.
Okay, earnings coming today after the close. That's an example trade for Snowflake and Iron Condors, their approach there. Thank you, George. That's our George Tiller, Senior Markets Correspondent. Coming up next, time for our 360 round. We'll dive into earnings from Toll Brothers and discuss the outlook for home builders moving forward. We'll be back after this break.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Welcome back to Trade 360. Time now for our 360 round. We're diving into Toll Brothers after earnings on a Tuesday. For that, I want to bring in our panel. We've got Don Nesbitt, Senior Portfolio Manager at FM Investments, and Calvin Butts Jr., General Partner, East Chop Capital. Thank you both for being with us today. Calvin, I want to start out with you. So Toll Brothers out with their most recent results. They beat expectations. on both the top and bottom line. EPS 350, revenue coming in at more than 2.7 billion. So that looks good, at least for today, and you seeing shares move higher. But what does that tell us about, I mean, the state of the home builder has been difficult. What's your takeaway?
It is difficult. It tells us a couple things. Luxury buying is still active. I think that the drop in contracts and the backlog tell us that the market is cooling. And, builders are shifting from chasing growth to more of a disciplined approach, right? So they're focused more on higher margin projects. They're focused more on cost savings. They're looking at how they buy their land more strategically, maybe in volume, and they're limiting their spec home building.
Okay, higher margin products. That makes sense, I guess, in an environment like we have now. Don, I'm curious your take on what you saw with regard to Toll Brothers and what it indicates to you about the home builders.
Thanks for having me, Diane. And I agree with Calvin. He made a lot of good points. I think one of the major takeaways is the unexpected strength of Toll Brothers in the luxury market, which has held up a little bit better than the lower end. It's also an indication of the consumer. So we know that the mid to low income consumer has been having trouble. This confirms, though, that the upper middle income consumer, because these homes are $1 million homes, so you have to have some net wealth to be able to buy these. But they're doing pretty well despite what we saw with the market sell-off. So these consumers also are less interest rate sensitive and more wealth sensitive. So interest rates have less effect than stock market valuation.
Okay, interesting. You make good points, Don. There, and we've seen a little bit of a recovery in shares of Toll Brothers. When I look at Pulte as well, D.R. Horton, but they're certainly trailing the broader market. What do you think about kind of the headwinds that are still facing the housing market? You still got high mortgage rates. We got new data showing that mortgage application activity declined again, and you see the pattern with interest rates. They're still high.
They are, and I mean, what you're seeing is that the housing market is softening. And I think what we're seeing with the high interest rates are folks are concerned about affordability, they're concerned about their jobs, the economy, and being able to forecast locking in these interest rates.
Okay, Don, I'm curious to know your view in terms of the direction of the housing market. Are we in for another 2006 kind of situation?
Well, I think the report from Toll Brothers, they're giving pretty good guidance going forward. Regarding interest rates, I think that's something in the housing market and the broader financial market that we all have to get used to. We're not going to be seeing those 3% mortgage rates or 4% mortgage rates of the past. But if you go back into the past and you look at the booming 90s, for instance, mortgage rates were somewhere between 6.5% to 8.5%, probably at an average around 7.5%. And the economy did fine, housing did fine too. So it's just going to be a readjustment throughout the system.
Calvin, I'm curious to know what you're seeing with regard to where the bite of tariffs is being felt most with home builders.
Yeah, I think for us, when we look at, say, luxury vacation home portfolio, it's the finished goods section, it's the appliances, it's the cabinets, it's where we're putting in appliances and some of our luxury or mid to high end homes. We're seeing the tariffs have an impact, which are driving cost increases for us.
So driving cost increases, does that put any pressure on the luxury buyer and kind of put any resistance in that, or is the luxury buyer just doesn't care about these costs?
Well, it depends. I mean, it's a balance. I think we're seeing builders offer more incentives now, offer upgraded packages, trying to help offset. I think the buyers still want the luxury goods, so they're getting their savings other ways by looking for mortgage die-downs, looking for closing cost savings, etc.
Don, I'll give the final word to you. We've got about 30 seconds left for your final thoughts on what we may be missing when it comes to the housing market.
Well, I think we've summarized a lot of what we've seen out there, and I think as you go forward, the problem is going to be on the more starter homes. There is a housing shortage in this country, and a lot of that has to do with the starter, because housing affordability is out of reach for many of the first-time buyers.
All right, well, that's our conversation there. You guys shared the Toll Brothers higher today off the back of their latest quarterly results. That's Don Nesbitt, FM Investments, and Calvin Butts joining us from Shop Capital. Bill. Thank you both for being with us. And thank you for joining us today on Trading 360. You still got pressure on the S&P 500, but off just a little bit more than 0.1%. Really range-bound action happening right now. Stay with us. Download the free Schwab Network app. It's available in the Apple App Store. Tune in 24/7 on schwabnetwork.com. You got Fast Market with Kevin Haynes and Kevin Green coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your
Looks like I
accounts is
missed a
easy.
good one there.
Cash moved to your brokerage account is available in seconds.
We can do double
That
top.
means you can stop waiting and start investing in stocks.
We did hit exactly what I said it would do.
Get more with Schwab Bank Investor Checking. The checking.
So I just tried what this thing would do if it broke out from here. I said we'd run up and hit that shoulder line. And you could call that a head and shoulders, kinda. And I said it would pull back and then come up and do a double top. So you had 3 white soldiers, pull back, double top here, pull back into an inverse head and shoulders. Then it came back up and broke out and hit that double top and pulled back. So it's consolidating this last run.
and their earnings coming up after the bell.
Back to $6.
Before I bring in Kevin Green, let's take a look though
at the four major indices and see where they sit. At 11 o'clock Chicago time, 12 o'clock Eastern. The S&P 500 down about 1/8%, 8.5 points to 59.31. The Nasdaq up 0.4%, 84 points to 21,451. Google Alphabet having a strong day. The Dow Jones Industrial Average down 0.75%, 328 points to 42,348. United Healthcare weighing down the Dow Industrial Average, and the Russell 2000, we'll call it right at 1%. A little over 21 points to 2084 and some change. Now let's bring in my co-host for today's entire show. That's Kevin Green. Kev, interesting day, another kind of slow day. Some headlines starting to creep into the markets. Let's start the first thing, and something you watch a lot, which is crude oil, right? Rumors about Israel potentially bombing Iran had crude oil up this morning. Now crude oil's backed off. It's actually down about 0.5%, Kev. What are you seeing in crude oil to start the day as we look at the rest of this market?
Yeah, yesterday overnight when we had that news report coming out of CNN, we actually saw a spike to around $64 for crude if you're looking at the WTI contract. But we have not seen any type of follow-up or even acknowledgement from Israel or even the United States or any type of follow-up report from other news outlets here. So the market's starting to discount that a little bit. And you really saw the major flush to the downside after not only seeing maybe some weak API data yesterday, but also today with the EIA data, where we pretty much saw a build in pretty much every single category, from gasoline inventories, crude oil inventories, as well as distillates, greater than the street's expectations there. And you did see refining rates, for the most part, kind of leveling off. So you are seeing a little bit of selling, the fear of obviously supply hitting the market or inventory continuing to build up. Not only has that economic growth kind of scare, but just provides a little bit more of a supply glut on a global basis, which is another reason why we're seeing a sell off. But crude has actually had a pretty decent run here. It's really trying to resolve some key technical levels, especially when you're looking at the 50-day moving average on the daily. It's been rejecting that, and this candle, if you close where we're at today, may actually indicate a near-term reversal. So a lot of volatility in the crude space. We have seen it off the lows. That's why we're seeing that really volatile move over the last 24 hours, is just because of some of the headlines as well as the inventory builds.
Yeah, Tuesday night, Wednesday morning, always a great time to watch crude as you get ADP inventories, and then inventories coming out Wednesday morning as well. So always a headline-driven market there. In terms of economic data here, in stocks, not surprising with yields marching to the upside, that mortgage amps are lower. Atlanta Fed, how about this? In a shocking turn of events, Atlanta Fed inflation expectations actually down slightly to 2.5%, down from 2.8 prior. That's a good number, Kev. I'll make your job a little easier. What are you looking at today? I don't see anything really jumping out at me. Nice move by Alphabet here as we start the day, but what are you looking at from your perspective?
Well, we are hitting a little bit of an area of resistance, this 59.30-ish area here, Kev. When we started off the day, we saw pretty much every single sector in the red. But you have seen maybe some optimism when it comes to the recap tech, so information technology and communication services is really trying to get us at least off the mat right now and off the lows. We continue to bounce off that 5,900 level. That has been a key area where buyers have really stepped in. You talked about Google. That spike really kind of started maybe some of this recovery from the sell-off from overnight here. And you're also seeing NVIDIA just doing some pretty decent work here to the upside. I think it's trading at around 137 right now. Actually past 137. So seeing a lot of options flow there. You know what I'm also kind of keeping my eye out on, because you kind of saw the economic data is kind of light. I mean, mortgage apps is really not going to move markets. And even the Atlanta Fed inflation data set is really not going to move markets. We have the 20-year Treasury auction here in the next hour or so. That'll be obviously a big focus, but the 20-year is not a real big auction, and just in general, demand is usually not there. But unfortunately, it's going to be the first one after the Moody's downgrade. But when I'm looking at CoreWeave, right, let's only just take a little bit. You are seeing a massive short squeeze taking place, or a gamma squeeze. This is based on options, not so much short. of the stock here. But this move that we've seen from 4 weeks over the last couple of weeks continues to the upside here, Kev. And the SIBO and other exchanges continues to roll out new strikes, and as soon as they roll them out, people are going in there and buying those calls really aggressively to the upside, continuing this move up. Now, this kind of reminds me of the GameStop situation. Obviously, a better company, just fundamentally, they have a little bit more of a backstop here. But this type of action in this market really gives you a little bit more fuel for the bulls to say, hey, we still have speculative activity taking place. We still have risk on taking place. I'm not saying that this is a healthy move by any stretch of the imagination, but this one is actually starting to creep onto the screen for me here over the last couple of days, because it's actually remarkable to see how much of a market cap move it's taken, and just the sheer amount of volume flows going into this name.
Woo! Look at that spike. I missed it.
There's a lot of
Dadgum, $6 to 730.
Pretty aggressive puts that are obviously looking for an upside move here. So let's see how long that's going to last as well.
Kev, what do you make of Target? Here's my question.
We got a triple top.
The U.S. consumer doesn't seem real weak, yet Target, another, it's off its lows. It traded as low as $90.60. It's now back over 94.5.
Hey, Hickey. When you got a company that targets customer base of just less than 1% and doesn't give a shit about the rest of them, you're going to have problems. It's not my fault that they went woke. It's not my fault that they didn't target their market the correct way. So the earnings are going to suck when you bash 90% of your customer base for 1%.
Bottom line adjusted earnings per share number there. You have seen maybe some bright spots when it comes to e-commerce that did show some growth, over 4% growth on a year-over-year basis. That's been something that they put a lot of money into. But the foot traffic continues to be really light, and that's why you're seeing this slide to the downside here. A couple of things to note, as you talked about, it's off the lows. It's pretty much back at these levels that we saw, I would say back, 2 weeks ago or so, about a week ago or so. Yeah, about 2 weeks ago or so. So, I mean, there's buyers that have been able to step in here. It's paying a 4.6% dividend yield, give or take. That's never guaranteed. But the last thing that they do have a lot of exposure on, and it's not been really talked about, they have a white label brand as well, which is usually a little bit of a lower cost, which attracts a lot of buyers. Because their white label, guess where it comes from? China. So 60% of the white label comes from China, and there's going to be tariffs on that product. So they're kind of in a rock and a hard place here to try to find new sourcing that's going to make it economical for them to be able to try to provide some of those, I would call them generic brands, to be able to undercut maybe some of the premium brands that are out there. But it's holding up, regaining off the lows here. We'll see what actually happens over the next couple of weeks, but they have multiple problems that they're facing right now.
Yeah, a great trader once told me when I was in a slump, you're looking when you should be leaping and leaping when you should be looking. And that's what seems like Target is doing. When they go strong into something, that's the wrong way to go. When they go weak in something, that's the way they should be going. And they just always seem like they're trying to react to what the market's doing. And when they try to get ahead of the market with inventory,
good job, Richard.
They misfire on the inventories. Big miss a year or 2 years ago now with discretionary inventory.
Good job, Richard.
Essentials, that hurt margins. They were trying to get through that inventory. Inventory's getting up high again. So, boy, it's just one problem after another with Target. Kev, we're getting to the second half of earnings now. We're looking at a lot of looks at the U.S. consumer. Couple stocks, not doing that well, but the
I would have traded it with you if I wasn't hungry.
Like I said, Google Alphabet boosting up the NASDAQ today. It's up almost 0.5%. That's dragging, like I said, a pretty impressive swath of S&P 500 stocks higher. NVIDIA's higher, Broadcom's higher, AMD, of course, Google Alphabet that we already talked about. Even though, there's only two sectors of the S&P 500 higher, it's basically unchanged. It's down less than right around 0.1%. This is a pretty resilient market, led by not a lot of names, Kev.
Yeah, you're seeing the concentration here. Look, this is actually
Today's salad.
What we have seen as far as outperformers or leaders, and I'd love to get your thoughts on this, Kev. Over the last 5,
I call this the black olive special. It's got 1 radish, half a carrot, half a cucumber, romaine lettuce, and feta cheese with Italian dressing. That's why I'd love to eat at that Java place if we had one around here. I'd spend half my time there. Michelle, would you eat that? Say yes. I think I know where that is. Yeah, I know where that is.
Yeah, you go back to the 10-year yield, now currently sitting at 4.54%. The dollar now below 100, trading 99.33. Crude oil, like I said, was up, now lower on the day. Here's a stat, Kev, though, that can give some people worried about inflation, worried about tariff relief. The week of May 12th, container bookings doubled into the ports in the U.S. So people taking advantage of this little 90-day pause in some of the tariffs and really pushing, doubling the amount of ships coming into U.S. ports. So that's overall good news. If you were worried about, like a lot of the media has talked about empty shelves and things like that, that is not going to happen, as they are,
It ain't gonna happen.
Now coming into ports twice as much as they were for the previous week. So pretty good news there. Let's take our first break of the show. Kev, come back with our first name. We're going to look at Tesla. Remember, Elon Musk did a lot of media yesterday, giving in-depth interviews, talking at a conference. So he's been painting the tape. We'll look at Tesla, see how the stock's been moving. Stock is up pretty significantly off the lows, now back over $1 trillion. Take a quick break, come back in 2 minutes with more Fast Markets. See you then.
I wouldn't give up on Tesla. Look at that. Tesla enters a bullish window. Whatever that means. The SPX is at 580. Watch it real close. The question is, can it hold the 63 EMA?
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures,
And being in the now.
Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Fast Market, everyone. Kevin Hinks and Kevin Green back for our second segment. We're talking about Tesla. As you can probably notice, Elon Musk did kind of a media blitz, kind of flooding the zone yesterday with interviews throughout the day, talking a lot about Tesla in general.
Okay, we're at 5.
Robotics and autonomy and energy and robotaxi.
Didn't hold it.
And the expansion of humanoid robots. Kev, he talked about a lot of things. He filled in. I think he answered a lot of questions about doubts about things. Like, he put it in very layman's terms, like, sure, sales of our cars were down in Europe because we're retooling the factory. And the first quarter, or January, is the best time to retool the factory. So we're changing completely, but numbers are coming back up. Actually, the stock has rallied in the last month 45%, Kevin.
Woo!
Tesla's back, at least temporarily, in the favor of the markets.
45%.
So he's moving from the Trump administration back to his companies, Kev? What are you seeing in this name? Has it come too far, too fast again?
Man, that's always a good question. Tesla, it kind of trades.
Don't ask Kevin.
You know, it's hard to short the stock.
Kevin had it wrong.
And when it looks really depressed, then you can move to the downside a little bit more. That's when you see really aggressive rallies to the upside. So I think the market is trying to find an equilibrium. You're probably looking at around that 355 level as your big area of resistance to see if it can actually.
Now it's time for the stake.
But yeah, as you kind of talked about, we got a lot from Elon yesterday. We're talking about how much time he's spending with the administration, his goal, and he foresees that he's going to be the CEO of Tesla at least for the next 5 years. I think that was actually very comforting. And then talking about the internals of the company, acknowledging the fact that they are seeing maybe some slowing in sales in some respects, but maybe a little bit of a bounce back here. The retooling, I thought was we leveraged on that a lot. Let's see if that's going to be the case. I mean, if you're looking at the Model Y, it's the most popular vehicle, but it is actually a little bit dated. And so are we going to see any type of resurgence in demand for that vehicle? I think is a big question. And you talk about the humanoid robots. Obviously, he's really bullish on it. He thinks everybody
How dare
in the
you.
world is going to want one, and he does foresee maybe some very robust goals when it comes to the amount of humanoid robots that will be available or at least hit the market actually fairly soon. So he's very optimistic, and we'll see how this all pans out. I think the biggest question that a lot of investors, and I was just actually on a little bit of a Spaces panel yesterday, and one of the big questions is if we do see a slowing in EV sales just across the board globally, which is what we are seeing, how they're really going to have to hit really well and successfully when it comes to robo-taxi. It seems like that's going to be the next product offering that's going to be scalable for them. And that's still going to be a very big question mark as to the uptake rate for that. So they're in a business right now where the majority of their sales are in an industry that's not seeing a lot of demand.
Are we going to hit 59.25 like Jimmy said?
See a lot less demand when it comes to EVs, so a pretty decent run. If you actually can make that a monthly chart as we kind of go over this, what's actually very interesting now, and the reason why I say I don't know if it's gone too far too fast, because the monthly chart is actually showing a cup and handle pattern that has developed here, where we had already made the cup and we've already actually developed the handle, and this move to the upside that we've seen recently here is getting us to try to complete that pattern to the upside, where we can try to get to that neckline and break higher. So that's obviously a longer term time frame, but that's something to be mindful of here. If you're a long-term investor, the technical setup on the monthly chart does actually look pretty attractive.
Perfection.
Just to fill in our viewers, Kev, that may not follow technical analysis, cup and handle when it finishes is a bullish indicator, correct?
Technical analysis with
Washboardjim.
Washboardjim.
So basically, you have this run up for the stock to the upside. You have a consolidation, a pullback, and then it creates a little bit of a base. It goes back and tries to retest those new highs, or even makes a new high, but comes back down and consolidates. And that's that handle, that near-term consolidation that we've seen. We've made that hammer now, or that handle, and then now we're going to try to retest those highs. And if you can break that little trend line off the highs, break that up to the upside, that's actually a bullish indicator. And it's usually when you do see some buyers really trying to step in. This is a longer-term chart, so we have to. This is something that you're looking at, a couple of years here worth of trading activity for this to develop. But if you go on the longer-term time frames, the technicals usually do hold up here. And that's, once again, you're hoping that robotaxi is going to be a hit. You're hoping that humanoid robots are going to be a hit here because it seems like the EV business is obviously slowing, and then the tax credits here in the United States probably are going to be on the chopping block, and that could also kind of dampen demand. So a lot going on when it comes to Tesla. And talking about the AI expansion too, Kev. 1 million GPUs going to Memphis that they plan on actually having that ramped up, I believe, in the next 6 months. That's huge. Talking about the issues when it comes to power availability, not only just getting the power, the natural gas or the nuclear power to get them to their data center, but the transformers that I needed, which have been in a short supply for the last
Did not go down there
years right now. And unfortunately, a lot of those transformers come from China.
Dick,
so he is actually talking about some potential issues when it comes to the electric grid and power generation just in general here in the United States. He's predicting by next year it's going to be a major power problem for these hyperscalers that are trying to build out these really aggressive and ambitious data centers.
Yeah, that message within the message. when he started talking about Memphis and started talking about the need for power and how China is ahead of us in terms of developing power plants. I thought that was the more fascinating part of some of his comments, Kev, for sure. But like I said, I like the fact that he filled in a lot of the blanks, a lot of the doubts that people were having about Tesla and some of the goings on there. I thought it was pretty positive overall. So, Kev, I looked at a trade that in paper money, something that would take you all the way out to the June 13th expiration, and looking at the expected move for the next into 9 days, it's about $30. All the way up
Okay,
to
get ready for the dip.
13th, it's about $48, Kev. So I just picked one kind of in the middle there, and the 370 strike.
480.
So I bought.
This is pullback, testing.
We bought the 370 call, sold the May 30th 370 call. So basically, a 2-week call calendar, both focused on the same strike, 370 strike. The debit on that's about $7. It's trading about $7.40 as Tesla has rallied slightly in the last hour or so, Kev. So a call calendar targeting that 370 strike, Kev. Your thoughts? It's collecting theta. It is along about 11 deltas, and the risk on the trade is the debit paid. But like I said, when you trade Tesla, the premiums, not cheap.
Oh yeah, definitely. So this is a neutral bullish strategy here. What you would like to see is the time of expiration, and that gives you the ability to kind of manage the trade, either take the short off and or roll it into a call vertical or what have you. It kind of just depends on your risk tolerance there, but it's also risk defined. What I also like about this, Kev, is that it's right there at the end of the month, and so you're also kind of avoiding maybe some of the main numbers that'll be released, not only by Tesla, but from some of these countries. Monthly we get data from China and Japan and the EU for car registrations and things of that nature. And we sometimes get some data from Tesla when it comes to production numbers and things of that nature. So you're also going to be kind of avoiding that calendar period where we might see some of those releases hitting. And it gives you, once again, some upside exposure, but also reducing the cost of that long call by selling near dated premium against it.
Yeah, remember, Tesla is an expensive stock with big premiums. However, for a reasonable amount, much less than it would cost to buy the stock in Tesla, you can get upward exposure in Tesla. Remember, this is a bullish trade. It's a move in the strikes towards 370. If you are bearish Tesla, you can do the same type in a put calendar to the downside using the expected move. So remember, this is a very versatile trade.
Dang it, I missed it again. 490.
And you're just looking for a move towards the short strike, whatever it is that you choose as a short strike. That's your personal opinion and target for Tesla. Okay, Kev, there's our first trade. Let's take a break. Let's bring in Landon Swan from LikeFolio.com. He's going to talk about our second trade of the day, and that is Zoom Video. So take a quick break, come back.
Ribeye. Look how tender that baby looks. Cooked to perfection. It was cooked. Oh man, you cut me off.
Unlocking the power of Thinkorswim, the award-winning trading platforms.
$6.10.
Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless
$6.20.
and track market trends with up-to-the-minute news and insights. Trade brilliantly.
$6.40. Boom! $6.40 from 5.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experienced.
Next thing, technical difficulties.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
This is our fourth attempt at resistance. Let's do now or never.
Welcome back to Fast Market, everyone. Kevin Hinks, Kevin Green, back for now
Kevin
our
Hickey.
hashtag segment. I'd like to bring in the co-founder of Likefolio.com, Mr. Landon Swan, to the show. Landon, someone's doing better than you today. The United States just accepted the 747 from Qatar, so they've got another plane. You and I don't have another plane. By the way, I would have accepted it if they offered it to me.
I would have
But
accepted it
we're
too.
Talking about,
And then sold it.
Correction, Zoom Communications is the right name for this company, not Zoom Video like it used to be. Landon, you've got some data for us on Zoom Communications. What do you got for us? You, of course, who doesn't own a 747.
All right, not yet, right. And maybe just give that plane a thorough inspection first,
Aspirational.
right? What's that?
Aspirational, not yet.
That's right, aspirational, exactly. So, I think the name clarification is actually kind of an important point because that's the direction that they're going, right? I would have called them Zoom Video too, by the way. It's not a knock on you, but the fact that they're trying to be more than just video, they're trying to be the, Microsoft Teams or the Slack, right? They're introducing in-app document editing. They've introduced an email client, calendar integrations, Google Drive access. So they're trying to create this product, and they really should be, where you can use it for everything. It's your productivity suite for your business, and I think they were the right place at the right time for the lockdowns, and everyone jumped on board. They had a great intro offer that got you started basically for free, and then 20 minutes into a call, you had to choose if you wanted to pay or not. So they did a great job taking advantage of the situation. Now they find themselves up against Microsoft and Slack, and they've got to increase the offerings that they have, and they're trying to do that. So right now, they're on their way. We're seeing that they're making the right moves. I mean, Amazon adopted them as their in-office use case for meetings, so that's a really strong feather in your cap. But some of their new products, like their AI product, has fairly low adoption. I think it's $12 a month. They've got it up to maybe 1.2 million users out of 300 million daily active users. So still a long way to go. But they are the sort of leader when it comes to the space, even though they've got to catch up to the offerings that Teams and Slack provide. And when we look at how they're comparing just on a web visits basis, they're actually kind of falling behind a little bit. So they're dropping about 6 points on a year-over-year basis. Slack's up 7, and then Microsoft Teams is up about 12 points on a year-over-year basis for that web usage or web visits. And obviously that is interest in usage of the product. And so they're on the wrong side of this. I think that, I think they've got a little bit of a branding problem in that, like, even a pro like you is going to call them Zoom Video. I would too. That's what you think of. It's just a video tool. If you have to have a meeting, you use that, right? So to rebrand and to bring in all these tools is the right move, but I think a lot of people are going to be hesitant to think, yeah, let's just use Zoom for all of our meetings and the whiteboard and the document editing, and then we don't need anything else. When really the productivity is going to be done by Teams and Slack. And so that's the challenge for them right now. You can see that their web traffic over time has been, lower highs, lower lows. It's in the wrong direction, basically. And so that's obviously a little bit concerning. So I think that they've had a lot of success through individuals and smaller teams. Not so much with a younger generation and the larger companies, although again, Amazon is a big one. So we'll see how they do. I know that, you know, when you look at some of their earnings history and the stock and how it trades, this is a fun one, right? If you're on the right side, this one can be very volatile on earnings. So obviously you got to be risk defined. I know you guys always preach that.
Okay, we're at resistance.
Check the box there, guys.
Do her now. Number 4.
But yeah, this is a company that
we pulled back pretty good.
Everything else on the tariff, it's bounced back. It's up to 83 again. Decently up over the year, but they've got a tough challenge ahead of them in this rebranding / changing their offerings.
The 5920 put
attention through usage as opposed to
the
retention
5910.
through just the contracts that are in place. Because once those contracts are done, if another product is better, people will switch. So they're trying to play catch up and make sure that their offerings are on par.
Andy, do you think the freemium type of model that Zoom
$4.50
Communications implements is potentially a hindrance to them when it comes to top line growth? Kind of similar to Adobe. You use it enough that you probably don't have to pay for the actual services or some of these additional tools because there might be some comparable tools available in the market somewhere else. Do you think that's a problem? Would you like to see them shift that model to more being, more focus on paying to have access to any of their platforms or their products or services?
I kind of like the freemium model in that it gets your foot in the door. And to be honest, when you look at, the revenue side of things, they need big contracts. And they need as many people trying it out as possible. And the only way that a big contract is going to happen is through high usage. So they're going to get out of that freemium model extremely quickly anyway. I don't think it's hurting them on that side of things. And then for the really small teams with the individual use case, I don't
480.
see it being a huge revenue driver if they did drop.
490.
It would, they could prove me wrong if they did, but I just see it as, a good way to get people through the door. But maybe it should. Maybe the freemium side of it should be a little bit more.
Accept that course of action.
No, you will accept it.
Nothing for you.
$4.90, baby. Donald Trump, I want to thank you for making steaks reasonable again. Not cheap, just reasonable.
Thank you very much. That's really nice. Thank you.
Would anybody like to have the fat off my steak? Magnificent, would you like the fat off my steak? Sure. I'll cook it to perfection. Francisca? Oh gosh, 440. I was at 490. Francisca, would you like the last bite of my steak? Come on, man. Yum, 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 yum. No, I don't have any A1 sauce. I just have my love juices. Yeah, Michelle's going to come in on this one. I can smell it now. Well, I'm done with my last bite, so I'm going to go put this in the kitchen and wait for the knife here on my SPX call. Put. I'm not really too excited about it. 490 is what she wants. Oh, so I think I'll stop out. And when I do, it'll fly. Ooh, ouch.
Boom shakalaka! Boom shakalaka! Boom shakalaka!
And don't count your chickens for they hatch.
Nothing for you!
It's now 4:20 time. I'm going to write this down so I won't forget it. Where's the address? 2140 East Pythian. Pythian Street. Come on, drop. Oop. I'm going to put my steak up, then partake of a glass of water, and I'll be back to work.
And the risk on this trade is the debit paid on the total package. So, all right, Kev, let's take our final break of the show. Come back with a market update, and then we'll talk to George Tillis about Snowflake,
George.
the final trade of the day. Take a quick break. Come back.
He just called George a snowflake. And the Dow Jones is down 300 points. The NASDAQ is up 100, and we've made money today. Do 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 do. We're squeezing with higher lows as we build the ascending triangle. Go red. Man, you mess up with keeping that low base there. I'm down $30 on my trade. Now 40. Uh-oh. There it goes. Was it worth the risk? It broke resistance. And a new high. The 5940s are back to 810, the calls. There's George. Snowflake.
And this has really been the value proposition for Snowflake. I mean, first off, you know, looking at the stock in terms of price performance year to date, it's higher. I think about 20% over the last year, about 10%. But, you know, the last 3 years, the stock has really been stuck in a trading range. And I think that's indicative of the fundamentals. And if you consider the growth of the business, they're estimated, let's just cover the numbers now, but they're estimated to grow their EPS on an adjusted basis 50% to 22 cents versus 14 cents last year. And the sales are estimated to grow about 21% to $1 billion versus the $828 million.
Okay, hello, broke the orb.
The growth in the remaining performance obligations estimates is 31%. So that's higher than the top line sales number that's estimated. So that gives you an idea that there's a little more visibility in the revenues that are booked but not necessarily earned yet. So in terms of the customers that are
Well, it went green all right, Randy.
Total customer count is expected to grow 17%, but the $1 million plus spenders expected to grow 24%. So when you see the total customer count increase less than revenue, but also less than the RPO, the remaining performance obligation, gives you an idea that the margin expansion is expected for the quarter. And it could be quite high in terms of the expectations. Now, that makes it essentially, potentially a buy here from the standpoint of the analysts that are bullish. Now, on the other hand, if you consider just the estimates for this year in earnings, $1.16, right now the stock is trading close to 160 times this year's earnings.
God.
Now, that would be
That's a little high, ain't it?
I suggest perhaps if the stock was growing its earnings by 60 to 70%, but it's not doing that. It's growing its earnings by about 30%. And so it's trading basically at about 4 or 5 times forward growth rates. that's a kind of expensive, I guess,
Yeah, it
relative
is.
to any stock and maybe relative to its own business. So I think the valuation is still the hang-up for Snowflake. It doesn't mean it can't go higher significantly.
We're at the 200 on the weekly.
This is a stock that has a history of doing that. I do think that the internal metrics between the RPO and the customer count growth
Head and shoulders, I'd say it's overbought.
speak to margin expansion. And lastly, I'll say this too: if you consider just the number, 22 cents versus a stock that's trading, at a significantly high level above $150, let's just put it that way, those earnings numbers are quite low. So when you end up having low earnings per share numbers, going into a quarter relative to the price, that can create massive volatility in the underlying reaction post earnings. So for what it's worth, again, you may see a delayed reaction, a huge move to the upside that does move, and then a pullback based on that valuation challenge, let's put it that way, for this stock.
George, do you think the street is now comfortable with the new leadership of Snowflake? We know that last year in February we had their CEO actually stepping down. It was actually kind of out of nowhere. We saw an aggressive move to the stock. And obviously we've seen a couple of quarters where they may have had a kitchen sink quarter. But it seems like the last 2 quarters, the numbers look okay, but it looks like it's changing a little bit. And
Back to 390.
For that. Do you think that we have kind of that level playing field with new leadership moving forward?
Well, I think change is good. At the end of the day, it just takes some time to manifest to accretive positions for shareholders. So, that may be, why the price has been moving, because the market is appreciating this change. A couple of quarters where, things were quite dire for Snowflake have occurred in the past. So that, again, might be why the traders are positioning for growth. But I think the technology is really, the compelling story, obviously, because it's a tech company. The growth in the hyperscaler business for Snowflake is improving, including companies like Amazon and Meta Platforms. And then, like I said, the separation between computing and storage is a compelling technology for many of the hyperscalers that don't want to have to pay for that bundled aspect of computing and storage. And that gives them a little bit more flexibility in how they implement their technologies for their cloud computing needs, both in the public and private cloud areas. So that's why this is really mixed. It's a tough one to kind of gauge, especially going into earnings. But, I'm just going to look at the 3-year chart. And if you look at the 3-year chart, it's been in a range. But the company's been growing its sales, and that range is occurring because every time you see movement forward, you see a movement back because the valuation, compression that this company is facing. And it was trading at over 200 times earnings not too long ago. So for what it's worth, it's improving. But they just really have to hit something out of the park and guide higher and give us something else to maybe see this momentum continue, at least in the short run. I'm not saying it can't, but it certainly may be challenged because of that valuation.
All right, George Schillis, thanks for coming on, as always, spending some time with us. We got to let you go. We're about to get to the trade here. George, have a great day. All right, Kev, so the expected move for the 1 day is $17, almost right on the nose of $17. Stock trade to 183. So I looked at the dispersion between the front expiration, the May 23rd expiration of 157, and the second, the May 30th, of about 85. So just above half of that level. And so I added those two together. Kevin came up with the 1 week, 165 put calendar spread. Buying the May 30, 165 put, selling the May 23, 165 put. Doing that for we put it at about 90-cent debit, trading about 85, 83-cent debit now, so slightly lower than it was. But Kev,
there we go.
Real quick, this is a
back to even.
Relatively modest.
I should have added on there.
1 week,
but I didn't.
Calendar. Obviously, you're spending less than $1, so it's
that'd be up pretty nicely if I did.
Because of the difference between those two implied volatilities. But you're looking for a move, Kev, down to the 165.
4 minutes to 12 o'clock here in Missouri.
Yeah, modest. It's a 10% move from these current levels, Kev, but I understand what you're talking about when you're looking at the market maker move. So you are looking for a move to the downside here, hoping that the stock trades at around that 165 level before that short strike expires, which is going to be this Friday here. And it gives you an opportunity, once that expiration does occur and the stock does move in your direction, to then make the decision as to how you want to be able to manage it moving forward here. But this would actually be a pretty aggressive move for this name. Not saying it cannot happen. I mean, at the end of the day, we have seen some pretty aggressive reactions post earnings, especially when we hear the conference call here. But you are expecting a pretty decent move to the downside in order for this to really try to pay out.
Appreciate it, Kev. Have a great day. Thanks for coming on the show. As always, that's our show for today. Alex Coffey, Jenny Horn coming up next with
there we go. Magnificent.
Have a great day, everybody.
Did you have something to say? Magnificent.
You're pushing your luck, little man.
Do you have anything to say at all? You don't, do you? Do you know what 450 and 570 means?
Frankly, my dear, I don't give a
damn. I think it deserves an A+, don't you? Just yes or no? Tiny one. Thank you very much. Hello, this is Retail Traders, Washboardjim, just taking the SPX. Yes, Brendan? Yes? You want 10% of the cut? Only bought one contract. Yeah? $120. You still want 10%? $10? $20? Come on. What? If you don't get it tonight, it'll be 20%. Well, let me tell you, you son of a... Your son owes me about $5,000 for an ounce of crack. Yeah, okay. That's what I thought. Yes. Just take it off of that. Okay, thank you. Bye-bye. Okay, we're at the 200 EMA. Are we going to have another flush out like yesterday, or is this it? Randy? Are we going to come down to my 59.24.66, or should I buy it here? In the 59.40s at $4.80. He likes puts. Randy likes puts. We're at support. These are now at $4.50, the 59.40s. But I'm in a negative mood today. Oh. When the wife told you to sleep on the couch? Well, Jimmy's going for it. 59.40s at $4.50. Lotto. Oh. It could easily drop down here. Oh. How'd that 5 get in there? 5. Oh. They're now at $4.40. I'm not real confident about this one. Not at all. Made the big mistake. So I will add 3 right here. Do you understand? 3.20. And I got 4 contracts. We're at the 200 right now, so we got to hold here. Okay, the crowd's going wild at the sports arena. Okay, bounce off the 200. Show some respect for Uncle Zimmy. Ooh. 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 A little late delay right here. That's not good. Mm-hmm. The crowd wonders why Jimmy didn't hold his puts. They're now at $7 and $7. I'm even on my trade, or I was. And Nancy, would you warm the water up for Nancy? I want some chai tea, please, without any vodka. $4.20. Take some profit, please. $4.20. Anybody take that trade? Jim, you make it look so easy. I'm out, Francesca. Funky took it. Much better entry. Well, oh, look at that. 330 to 430. Yummy. That's so sexy. The crowd just doesn't know what to do anymore. Those are 5940 calls, not 940. VICTORY, that is Washboard's battle cry. Oh gosh. Do I see that right? $4.20. Oh, my phone died. Shit. Well, that means I got to charge it. How dare it. I'll be right back. Then I'm going to get my water ready. Oh.
Here we go with another flush. See if it pushes past the 1 minute. Set for 200 on the 1 minute. But I think it's going to push more. Make sure about hit 63 on the 5 on this. Get it holds here. Nope. Damn. Alright. Well, looking at the 200 SMA on the 2 minute. I could push this sucker to the top of the orb.
Ooh, knife. Another one.
Jimmy's going to be pissed. He ain't here.
Well,
hey, I hit the 200 on the 5.
I am.
On the yes, yeah. If they push past it, it's going to freaking go into the orb. Top of the orb.
Yeah, this would be a buy signal.
This is a hell of a night.
Yeah, it is. So these things are at $2.10. I'm going to go for it.
There's your 200.
I'm going for it. Go in small.
Alright, I'm in the 5940s at 210.
Yep. And we could get down to that, back down to that old hard resistance that I called this morning.
We just bounced off the top of the orb on the yes on the 5 minute.
We got more room to drop. I had 59.10.81 this morning as a hard resistance. So if we hit that, I'll add on, but if we don't, I'll just leave it alone. There's your orb right now.
Mm-hmm. $185, $190. I don't know too many traders that trade with the orb. I don't think I've ever met one but you. You're the one that showed me it. No one's worked pretty well.
Yeah, no one ever talks about it. No one's ever talked about it the time I've been trading. And I've traded with a lot of traders. That I know of. Let's put that way.
Mm-hmm.
But I've traded with a lot of rookies.
I mean, I am a rookie, actually.
Yeah.
Just past the 1 year mark.
Yep. I'd consider that a rook.
Rookie of the year.
Yeah. You and Rob. But Rob has been at it.
Badass.
Yeah, he'd been at it a little longer. But he's just now starting to get it.
Rob crushes it. Especially in the day in Tesla. That dude is on it.
Used to be my favorite trade.
Alright, so we're at the orb. 1 and 2 minute RSIs are oversold. 5 minute could come down a little bit more, but I see big bottom wicks. I think the buyers are stepping in.
And go get my tea going.
Alright, there's your orb pitch. Alright, I'm gonna get it here. 175.
$170. I'll get it here. I still think it might touch 59.10.81. I'll just wait a little bit longer. That's it right there. There it is. That's what I wanted. $1.30. There she went below my support. What a flush.
Mm-hmm.
Triple bottom. Jeez. That's the way it was yesterday too, but later in the day. So we got a triple bottom right here. This should bounce.
In a support zone.
Yep. Jeez. And 59.04, what I said this morning, and we dipped below it. Come on now, hold on. This is it. This is the final val right here. 110. Ooh. Jesus. What a sell-off. Were you able to get out or? I need a good bounce right here. $110, $130, and then got one at $210. Got a 120 average. Shit. Not counting the 210 one, not just one, but I'm worried more about these two here. That's the one I got the most of. Average 120. I'm about even right now. Actually, I got 135. Let's go. Pretty hard sell off. Back to even on my big number.
This is insanity.
Yep.
Holy. Where do you even buy it right here?
Well, I bought it 110 and 130. God. No mercy on me right here.
Mm-hmm. I feel your pain.
Well, I got a lot. I got. That's a flush. One of them puts I had, Jesus, they're at $4,200. Good. I had 12 grand on that trade. $4,500. Huh. Exchange traded funds decline. Wonder if Iran's nuking, Israel nuking Iran. That would cause this market to do that real fast. Israel reportedly planning an attack. I don't see anything in the news. They just need to blow them off the map. Get this over with. Because I had 58, 68, 85 on this thing this morning. Golly, them options. They're at $4,900. The puts I had. That's almost 15 grand. It's just 3 contracts. That's not good. There has to be some kind of news out there.
Good God.
No mercy on this here.
No, I'm gonna wait till it gets to my next support zone on ES, and then I'm gonna buy the hell out of something. It's already pushed through. This will be the 3rd support zone.
Well, it's the next one's down $60, or right around 58, 23, 22.
So my ES support zone is at 58.69.
Oh. And you're below that. I could double down right here. That'd give me 21 contracts. Equals that would be an average of 95 cents. I'm gonna wait. Well, if I can, I'll buy 20 more. Maybe even if it gets cheap enough, I'll buy 30. Right now, it don't look good. Anybody else stuck in this trade? Did you go in small, I hope? That's a little bit too much. There has to be something in the news. Let's see what CNBC says. I hate to listen to them, but...
address we did get yesterday, and so we've gotten some developments regarding AI, but we're also seeing a major slippage right now in tech, with the Nasdaq falling almost 1%. Remember, we started the show with it up 0.3%, so a rollover in a lot of these big tech names, Nvidia being one of note as well. But for now, we're focused on what is,
and it looks like we're heading. As far as the consumer's concerned, when they're more choosy, when they're somewhat under pressure, when tariffs are coming, you think that just piles the pressure on a company like Target?
Oh, it does. And the reason
This
why
here's
is
the
they're more
shopping lady.
discretionary than what a company like Walmart
Have a
is.
crush on 'em.
Walmart is
So
more
we're gonna
grocery,
see this
Target's more discretionary. You look at the choice
Looking
of
at the
discretionary,
59.8.
consumers are pulling back. They buy what they need. When you're seeing brand leaders overall, you're seeing change. Look what happened last week. We saw the earnings from Birkenstock. You saw Tapestry. They were solid. The newness and innovation is driving demand, but it's a higher price point.
By the way, how about Home Depot and
Little
Lowe's?
Bush,
I mean,
Little
again,
Bush.
putting up solid results. You and others in the space have talked about how housing-related names are
Right,
actually at a
right
positive
here.
inflection
Taking them
point.
at 125.
I'm way out of the money now.
Taking them at 120 actually.
The 59.20s.
Yep.
I'm just too freaking far out of the money now after this drop. And the same thing happened to me yesterday.
There we go. Come on back up. Give my damn money back. There you go.
This was a lot. This is worse, I think. This knife.
Oh, it was.
Well, I'm going for it.
All right. The ones I think at 120 are now at 170. So my support zone held. $190. Right on my support zone. But damn it, broke through two of my support zones first.
Yep.
That was one hell of a dip.
Trying to figure out where that other support zone I had on here was. I forget what I was looking at.
All right, you're up $70 a contract right now, and you're hitting a resistance zone, so.
Yeah, we're right at the pivot point right now. 58, 68, 85. Come on. $45 and $120.
All right, you're up $100 a contract on your 5920s.
Ain't have no mercy on that one.
That was crazy.
It knocked me way out of the money.
Protecting this zone. Or trying to.
Mm-hmm. You'd think we might have got hit with a nuke.
No kidding. The market did. Oh, God. Never mind. Hey, Sue found it.
What? Did you find the news?
Freaking look what NVIDIA did.
Oh, jeez.
Dragged the whole thing down.
I wonder if that's false information.
God, this chart is ugly.
Did anybody add on to that trade though that I was in? 40 cent 45. I love Elon. Smooch, smooch. Someone asked me the other day about the bond market. Let's break the 21. Come on. I need 83 cents. There's 80. I'd almost just go ahead and sell here and just get out of the trade. There's 85.
Definitely getting A plus for calling that bottom.
Yep.
That is the only thing that saved my ass on this. I was down big to that.
The only thing saved me was that hammer and that candle right there. I'm still down, but I mean, that's because my trade, I held it. That's it. And then it went too far out of the money, just like yesterday. So the recovery is not going to be good once it has that first initial bounce. Come on, just a little bit more. Yeah, crickets. There, I'm even now. Besides being down that first contract. There's 85. Be nice to get like $15 out of it. This is really fluctuating back and forth, and the price ain't going up. So I'm saying if it goes up, we might have a good little bounce. Little one. Come on. I don't know if it's going to do it. You can't hardly hear. I ain't saying much. Can you hear now? Yay. Imagine if I held them puts. They went to $70 from $450. That'd been $21,000 for 3 contracts. But I didn't foresee this coming. I thought a little correction, but not 21 grand. Yeah, I don't know. We got the snake breakout pullback. So if it's going to do it, it's got to do it on this next turn. There's your snake. Triple top breakout, pullback, back to the previous resistance, heading right here. right to it. So that's support. Head and shoulders. And then run up and hit the 50 and get out. Crickets. We have support, but I don't know. That's my target right there at 50. She's jumped up closer to the money, bought some others, but I focused on this one. I'm gonna make me some chai tea. I'll be right back. CRWV held up for such run it's had. They raised price target to 94, Citigroup. Oh, darn. I hate being like this again. I just hate it. You got a symmetrical flag out of a snake. So we might get back up there. But that 50 is lower now, so I'll probably get out even. Well, not really. Ugh. The 59.20s down at 135. You might take that Moody's support a little more serious. Tell you, the Fed needs to lower them interest rates real bad. So we got to pay off our natural debt, and we can't pay it off at this rate. Well, pits. These are down at $1 now, the 59.20s. $59.20 now at $150 from $1. Funk.
Mm-hmm. Yeah, I'm watching the 59.15s.
Look at the 20s.
See if we can make a triple bottom. I like that.
Shares of Google are outperforming this market. The market, by the way, throwing a fit after the 20-year auction top of the hour. But Alphabet's up 3.5% after unveiling a slew of new AI features yesterday as they try to dispel those fears that AI will hurt its core business. Deirdre Bosa has more in Tech Check. Deirdre?
Kelly, it's funny. This is what happened last year as well. Investors, they needed some time to actually digest the keynote. And so Alphabet shares, they rose in the wake of I/O 2024. This year's keynote, it was nearly 2 hours long. It included tape demos, live demos, announcement around new AR glasses, agents, chips. The list goes on and on. So slew is the right word for this. This chart in particular, though, got a lot of attention and sums up what Google's really been able to do, and particularly over the last 6 months or so, drive adoption. I think that's why you're seeing sort of this bullish move today. Let me explain it. Monthly tokens processed, that is a rough proxy for user interaction for AI across Google's products. It saw a 50x surge over the last year and a hockey stick-like inflection since just February, signaling that Google isn't just building massive and impressive models and lightweight models, but it's actually deploying them at scale across search, Gmail, Android, etc. Now, Google has never been great at winning the immediate narrative versus, say, an OpenAI with its viral demos and Studio Ghibli-like images, but behind those long keynotes and sometimes botched releases, if you remember Bard, Google's tech is starting to show its edge, an edge that has always been there, but this is a story that the market may be starting to buy into. Now, for now, there's still regulatory pressure, which isn't going away, and the bigger
Back at my support here on SPX.
AI without cannibalizing search, that wasn't entirely answered yesterday, so they're still outstanding. We'll see if this momentum can last. Kelly, finally,
Now see them
between
55,
the
them
OpenAI
5920s
devices
are
earlier
far
this
out of the
hour
money
and the
now.
arrival of Google smart glasses
Same as the
yesterday at
15s.
I/O, the AI race is quickly moving to different.
You got to get up to like 5,900.
Kovac about Apple as well. But this is another indication that Google isn't sitting back. It has all the talent, it has all the technology to compete with the likes of OpenAI, even if there's going to be different form factors, different models, different AI custom chips. Google has it all. Just needs to be appreciated by the market.
I love watching the fight unfold, and kudos to them for being up.
She loves watching the fight unfold.
Thanks very much. And that's it for us. I'll join
Well,
Brian Sullivan
let's see if we
for
bounce
powerful
here.
coverage of the bond and stock market sell-off right after this break.
I don't think I've got chance on my 5940s now. Very slight. Very slight chance. God, I wish I'd held them puts. They've been 21 grand. You only had 3, but you had 5. Come on, 55, 59 20s at $1. Yeah, these are just too far out of the money.
Thanks.
All right, markets turning south. Big tech beginning to sell off. Welcome to Power Lunch, everybody, with Kelly on Brian, Alphabet, Amazon, and NVIDIA, oh my, all in focus today as we look at Google's latest AI offering.
I'm not sure if it's in either. We still got another, this is a bad time of the day.
Start to sell off.
Yeah, we'll talk more about that. We had some big news moments ago in the corporate world. Former Apple design guru Johnny Ive will take an expansive role at OpenAI. His company being acquired there for $6.5 billion. That's leading shares of Apple to sell off. But Apple is also lower as the broad markets, Brian, react to those higher bond yields and pressure from the 20-year auction last year.
Johnny Ive, congrats to him and his team. He made more money in this deal than he ever made creating the iPhone, the iPod, the iPad.
He still has another company. This is just one of the companies.
One of his many companies. All right, there's a lot going on. Let's start, though, really at the beginning of the alphabet. R.K. Rooney is following the story of
Apple hit my
Amazon,
support
their annual meeting. Also,
that I called in the video.
the AI stuff and what is it? I heard like 18 people in my head right now. Kay Rooney, how about this? Talk about whatever you want.
We're going to pivot.
Thank you.
I love that. Brian, I'm going to choose my own adventure here. We are going to talk about OpenAI. You mentioned the deal news. That is making waves today. Apple shares, as you guys mentioned, dipped when this headline crossed. Initially, OpenAI, as far as the details, has agreed to buy Johnny Ive's AI startup. It is called IO Products. Ive, of course, is a legendary name in tech. He's best known for designing the iPhone. Basically,
That's the new Trump. That's the new Elon right there.
Or interact with. He did leave Apple back in 2019 to start his own firm, Love From. That company is still going to remain independent. So today's roughly $6.5 billion deal, it is all equity. OpenAI already owns about 23% of this device's startup IO, so they're going to be putting in roughly another $5 billion. It does signal what we're seeing in AI, this all-out race right now for AI devices. OpenAI clearly plans to go big here. They are paying billions for Johnny Ive to lead the effort. His devices company, guys, does not have a product on the market right now, so this is really paying for what is possible here. As part of the deal, Ive is going to be taking a much bigger role at OpenAI. He's going to assume what they say is deep creative and design responsibilities across both OpenAI and IO. It is a wake-up call for Apple, which, as you mentioned, shares were down. They have teamed up with OpenAI to integrate with Siri, and then Amazon as well. You mentioned the shareholder meeting. They're in the midst of rolling out Alexa Plus, so it's a bit more proof that hardware and devices are shaping up to be a major battleground in AI. It's not just chatbots. It's going to be what Sam Altman described as the future of computing, guys.
So basically, this is a big win for OpenAI, but more important, which is private, so our viewers are like, well, why do I care? But it might be a bigger hit for the publicly traded companies that are out there because Johnny Ive, I'm assuming, is kind of like the, quote, best athlete out there, right, Kate? And so now that he's going to one team, it hurts the other teams.
Yeah, exactly. You can sort of think of it as zero-sum. I mean, he had left Apple, to be clear, but doing his own consulting. But if you think about this as not just chatbots and underlying software, if this is the future of devices and you have the GOAT, you've got the Tom Brady of devices going to one of your competitors, it signals that OpenAI is not comfortable just being a software platform. They want to own everything here. They want to own the future of computing. They want to own hardware. So it makes sense that Apple investors would be a bit spooked by this. Also, Amazon. You think of Alexa as being the go-to device along with Siri. It is a major threat to a lot of those guys, and you are just seeing this hardware race really kick off. And these founders, Johnny Ive is one, but Mira Murati, who left OpenAI, there are people leaving these companies who do not have a product on the shelf. They have an idea. They're just investing in the person. So it also speaks to some of the valuations. I think you could say, yes, it's a good deal for OpenAI, but the price tag, you've got to wonder if that is going to pay off. Clearly, they think so, and a lot has gone into underwriting that number. But $6.5 billion for a company that does not have a product. I think it says a lot about where we are in the AI cycle.
Yeah, it says a lot.
Appreciate it. Kate Rooney reporting there. Shares of Apple, as mentioned, down about 2% on the news. For more, let's bring in Laura Martin, Senior Internet Analyst at Needham. Laura, it's great to have you here today. And we're seeing all of a sudden, we have shares of Alphabet, which are still rising on this halo effect from their announcements. Apple not only has to contend with whatever OpenAI might now be up to, but more reports about how it wasn't able to push forward with its own AI development. So how do you see this landscape shifting competitively?
Well, I think the most loser here is Meta, right? Because Meta got to this whole notion that they wanted to create a competitive, a computing platform with the goggles, with the Ray-Ban glasses. And Google yesterday announced they're coming hard into this race of devices. And you just got the best device guy going to the best, arguably the best software platform at OpenAI. So what it's telling you is race is on. Consumer products are going to be integrated hardware, software, and all of them are trying to displace Apple because Apple is the device in every consumer's hands, or the 50% of the wealthiest consumers' hands in America, and they are charged a 30% tithe. So everybody else wants to be that platform that charges a 30% tithe on every app that comes to it. So the race is on.
Yeah, I think that's.
I believe Apple's overpriced.
Has been a strong performer, but lately
Just the phones.
A bit of a timeout. So, for as far as Apple's concerned, a lot of people who are in the stock for a very long time say, you know what, they're going to figure it out. So a lot's unclear. Their buybacks probably trump anything else that's going on, but it is coming off kind of this now.
How about the first flat screen laptop, not laptop, but desktop that Apple put out, the very first one, and I still have it, and it works, but I don't use it that much. But I think I gave $1,700 for it back in 04. How long ago was that? I don't know exactly what year it was. When they first came out, the very first one, flat top, flat screen. Let me see, first flat screen Apple. '98. It was 1998. I think it was a little bit later than that. Sounded more like 2006. Because I don't think I brought it to... Yeah, I had my gateway in Hawaii. So was that when I got back? 2006. Pretty sure of it. ...2006 or 2007. Does anybody know when the first one came out? What year it was? My 5940s are 30 cents. Are we going to have another big climb like we did yesterday? That's the question. If we do, I should buy more. But not so far. I mean, what, 6, 9, 10, 11, 12 notches out of the money. Jesus. Does anybody know when the first flat screen came out on Apple? Sparks? Michelle, when did the first flat screen Apple come out? Not the bulb.
Here we go again.
Here we go where? Oh, down? Damn it.
Loading up 5900s. See
What?
if I hit the support zone again.
Well, you're still in the money right there.
Oh no, I'm not in a trade right now. I'm just loading them up, waiting. Let's see if we get 3 black crows on the 1 minute.
The 5900s have to hold here on my platform. 2004 or so. I think it was 2004, but it might have been the one I shipped to Hawaii, if I remember right. I still got mine. Hear it? Ding. Well, we can at least come down and have another couple big candles.
Yeah, I mean, it could always come back into my 58, 70 ES support zone that it bounced out of a while ago.
And go back to it, you mean?
Mm-hmm.
Yeah, 50. I got 58.72. Or it comes down and hits a 58.55. I thought this apple had blown up. Uh-oh. Now it's doing. And I bought a new computer. What's the password? I forgot. I think password is password. Yep. Now what's it doing? It's sticking for some reason. I'm forgetting how to use this thing. Well, if we get a big breakout starting on this, I'm going to load up. We still got about 45 more minutes before that happens. Well, anybody still holding their stupid there's my apple. Let's see if there's a number on the back. Maybe I can find out something from that. Nothing on the back. Oh, that don't look good. Oh, that's when it fell down, probably. I do have damage on it. $5,900s are at 135. So if I go to buy one here, it's going to be the 5880s.
Heading down towards my trend line.
Yep. Let's see if it holds at I got 59, 54, 34 for the double bottom. And I'm going to grab one call here at the 5880s just to see.
I'm getting it just a second so I can hit my trend line.
What's your number? Because I'm going to get ready to jump in it.
5870.38 on the S.
Oh, hell, that's 50.
We're right here at it. 5870.38.
Oh, 58. Well, we're at 58.55.
Not on the S.
Oh. Well, I'm going to grab two contracts right here.
We're there now.
$3.10. The 5880s. Double bottom off the body at 310. go. I need a couple grand.
$100 contract right here.
Yep.
$120 contract. I'm out.
I'm holding on. I'm going to see if I get the lottery here.
Oh, you will. I don't see any resistance until the 9 on the 5 minute, which is
They're at 5:30 now.
2 points ahead. I like to take profit.
Yeah, I understand.
At $100 a contract.
Yesterday I missed out on 10 grand. Today I missed out on 21 grand.
Yeah.
On the puts.
Yeah.
I ain't missing out the third time. 3 times a charm.
Yeah, but watch that trend line on the 1 minute also.
What do you got?
If I could get my freaking thing get out of my way.
I got 2 of them now. My next one's going to be the 63 at 58.74.
You're actually at the trend line right now.
Yeah. I don't see it here. I see it going higher on the SPX. Not much. At 58.68, 85. What's L?
Dead on it right here.
Yeah. What's LFG stand for?
Let's F and go.
Oh, let's fucking go. Yeah. Someone messaged me LFG, and I'm going, what the heck? That ain't my pronoun.
Randy, I think the same 58.80 calls that Jim did. Nice.
I want these to go to 1,500 today. Uh-oh. Did you hear that, Michelle? This trade tastes so good I belched it out.
J.G. Wentworth, we say get cash now for your structured settlement.
J.G. Wentworth, cash now?
It's your money. Use it when you need it.
J.G. Wentworth is right. It's my money and I need it now.
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 If you have a structured settlement and you need cash now, J.G. Wentworth can help. We'll buy all or part of your structured settlement for a lump sum cash amount, so you can pay bills that have piled up as a result of an injury or an inability to work. Call J.G. Wentworth now and speak to one of our structured settlement specialists. You'll get a no-cost appraisal and have all of your questions answered. The call is free and there's no obligation.
It's my money and I need it now.
It's your money.
Use it when you need it.
Call 866-386-3102. 866-386-3102.
You love that commercial?
Yeah. It's almost what I said.
It's my money and I need it now. Let's break. We're getting ready to squeeze either way. We got to break to 50, I think, here on the 1 minute. And on the 5 minute, we got to break to 9. And we're squeezing between the 9 and the 21 on the 2 minute. And the 3 minute, we've got a tighter squeeze on the 2 minute. And on the 1 minute, we got to break to 63. And the 9's crossing the 21. So we'll know something here in a second. Especially if we break the 5. The 1 minute on the 5. I think that's the major one right now. Because we ain't been able to do it for the last 35 minutes. Actually, longer than that. 5, 10, 15, 20, 22 minutes. No, these are 5s. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 19. Almost an hour. I think it'll be a big push if it does. Richard, I need my money and I need it now. 620, baby. Let's keep going. Let's get 1,500 on these babies. It's a double bottom on your /ES on the 5 minute.
Mm-hmm. It was.
Yep, with the bodies of the candle.
You're at the 63 and a resistance zone on the 1 minute on the ES.
Yep. So in my book, the way I traded would be this, we'd have to break that 61 on the 1 minute. But now that we broke the 9 on the 5, I feel a lot more comfortable. Richard. We're at the 63. Come on, baby. Make my money back. Well,
I kinda changed my direction. Lord, I guess I went and broke their family. Country music singers have always been a real close family. But lately, some of my kinfolks have disowned a few
Others like me.
I guess it's because I kind of changed
My tradition.
Lord, I guess I went and broke their
Family tradition. Why do you drink? Why do you smoke rope? Yeah, I'm still in them, baby. Family tradition. Family tradition. Why do you drink? Why do you smoke rope? Now the songs that you wrote. Family tradition. There's a break at 63. Come on, Fred. Getting ready to start to squeeze. Break that 63 for me and do it purty, please. I have loved Jim Beam. 1963. Break that resistance. Family tradition. Why do you smoke rope? My songs that you wrote. We're flagging out. Family tradition, yeah.
Since 1983, Nissan has been assembling award-winning vehicles for you right here in America. And now we've lowered MSRP on them.
Yeah, we lowered them too much, huh? Come on, baby, break. Oh, you're making it difficult. I was up 100% for one moment, a little more. It's all right. We're still safe. We just got to break this 63 here next. We're flagging right now. Come on, baby. Let's do it.
Do it. Come on, come on, come on. Knife in here.
Come on, Sister Liz.
You're an experienced investor or just getting started, offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Where it wants to go.
It's turned into a descending flag. I don't like that.
I'm watching the 58A.
Hey,
so
Dad.
triple bottom.
I have a question for you.
Oh,
When did
God.
Granddad first start investing?
Granddad had an account with Schwab before there were.
Thank you. The only thing I like about this commercial is when they change the music. That's pretty smart.
Come on, let's go. Get your butt down here. Oosh. You got a little more RSI ain't even red yet. Patiently waiting on my setup. Counting fingers and toes.
Right now, we're at my support line. Maybe. Let me see. Now a little lower. Not much.
Yeah, push on
It could bounce here. It'd be a higher low, and that'd give it a lot more momentum.
Come on. You're literally 1 point away. Oh,
Yep.
I'm so greedy, I'd already be him.
You're exactly 1 point away. $1 right now.
Yep.
50. Yep. And 58.80s.
Okay, well, it just hit my support zone, so. I'll definitely grab another one at this 175.
I'm at 5 minutes to power hour. Come on, dog.
And now have a 160 average. You get that 9 on the 1 minute. I'm up $70 contract.
We're excited to announce that the Falcon Pool is officially open for the season. I didn't say nothing about liquor this time.
you might want to take profit on these when you can. These EMA clouds are getting wider.
Ready, set, go says we're ready.
They look pretty on this.
$210. 135, 140. I need to go grab me some oranges tonight. About ready to have my last one. Are we going to get a run like we did yesterday? That's what I'm asking. Shall we put a poll in the room? Magnificent.
I don't see it.
We need to put one in there.
This zone we're in right now is a major pivot point.
Yep. I think we'll have one. I voted.
They could push us down to last Monday's pre-market low.
No.
I'm just saying.
Did you vote?
Going to have a AOD run.
Vote, Funky.
I'm going to. I don't think so.
You said no. We're having technical difficulties.
I don't like anything about these EMA clouds.
Well, I don't like the fact that we broke the triple bottom low.
I don't like anything about the 30.
That's the only thing. But I do like the fact that we did have a higher low till then. I got these at 210. I didn't add on. I should have added on at 140, 150. I just got lazy.
Rob says they're buying puts.
Rob.
I don't like that, say. If it loses ES 58.64.25, they will push it back down into that pre-market from last Monday at 58.36.
I want to make 500% on this trade.
I'm just gonna sit here and drink my water. I wish I could have a handful of M&Ms, but I'm doing a 24-hour fast.
God, how can you do that?
I do it once every 2 weeks, and then I do a 72-hour once a month.
Oh my God. I can barely do 18 hours.
Called Autophagy, and it's very, very good for your cells. Cleans out all your damaged cells. Here we go, boys and girls. You're at the bottom of the support zone right now. Don't lose it. Did you at least take my advice and get out when you got profit? Yeah, that's what I was thinking too. You just lost that zone. No? Ah, shit. I can get that.
Come on. I do not like being right about puts when you're in calls, but those EMA clouds were freaking terrible. Mm-hmm. Well, shoot.
The Twister bound them on the phone. Shit, it shouldn't stop here, but it might. All the RSIs are hot, so it could bounce back up into that support zone before it comes back down again. Let RSI take a breath. Might grab a call here. Grab one of the 59, 60, 58, 65s.
I'm going to take this pullback more serious than what I've been doing, that's for sure. It's just not pretty today. We've had a good bounce on this thing, but we're getting close to that gap. It's only $40 away. And if we open up there tomorrow, probably, and hold that.
Alright, I got one at 145, we'll see. Yeah, baby. Up $20 a contract. One's about to touch 9. I'll take my profit there. $25 a contract. I'm out.
We got 47 minutes left.
Damn, those contracts are up. Holy shit. If you
Yep.
look what I just called, you're up $100 a contract right now. Good God. See, I told you, I need to work on holding them. My entries are freaking flawless, but my holding them is, well, I'm not even going to get on my own ass because I got out when the 1 minute hit the 9, which is resistance.
I might go back to the triple bottom.
And the way this thing wants to push down, I do not trust it to break this new resistance zone.
If it's anything like yesterday, into close, we could. No, this pull off's a little bit different than yesterday's. This pull back.
Were you listening to me, Robert, or did you just take them separately? He's got to be talking about the 5870s.
Yeah. Yeah, I know this puts would have been worth a lot of money.
Mm-hmm. But the good thing, Jimmy, every freaking day is a new chance to be a thousandaire.
$180, $81 for them puts I was in. It'd been 24,000.
Jesus.
Can we get back to 82.92 today? That's the question. 58.92 or 58.82. Yeah, the taxes I would have saved. I didn't like how much taxes I had to pay last year. For last year, the most I've ever paid in 1 year.
What do y'all want me now? Son of a bitch. Company can't run without me. 6,000 damn employees.
You own the company?
No. No, it's a freaking financial tech company.
Oh, yeah. Most employees I ever had were 2. I had one girl, when she hired on, she showed me her tit, and I said, what the heck? For an interview. I said, you're hired. Then she ended up stealing out of my checkbook. That was definitely a weird one. She said, you sure you don't want to hire me? They're 36 Ds. I'm in the 5880s, and I took the 5865s and got out of them. But I think I'm sucked into this one here is 5880. Unless I get real lucky. Again, like yesterday. Now yesterday I called them ones out. I wasn't in for a half hour and made almost $3,000. But today's sell-off looks a little bit different. I don't know if I want to take that risk. And that was 2 slots from the money. Right now the 5850s are at 460. 450. If I was to jump in anything, it'd be them. Grab one. And I might just do it in the close here. But I think I've lost this trade too. It's 2 in a row I've lost now. Well, I got money out of that other one, but I held one. But these 58.80s, I got 3 of them, and they're at 40 cents. At 210. Sue thinks we close right around 58.50. I'm thinking 58.80. Ready? Oh gosh, ready? What the hell?
Yeah. They want it in that zone. Was it 230? I wonder if they're just going to park it in that zone.
I'm about ready to park something. $58.50s, come on. I'm going to jump in them. Get one more shot. $58.50s at 275. Yeah, Randy's delirious today. Last call for alcohol. Come on now, hold. "36 minutes left. We're at a double bottom. You dip back to my entry again. No. Jesus. There is stuff out again. There's the fallen wedge right there. Well, it puts that. I don't even want to look at them now. 59. 59.20's made it to 86. There's no way I'd have stayed him in that long. I'll fast after I had that steak today until in the morning. Then have an orange or a banana. And have an orange before I go to bed.
How many minutes left? 30?
33. Less than 33. I'm in these here 58.50s right now. I want to see if we could close at 58.77. The 200 EMA. There we go. All of a sudden they were at 290. That's 210 to 290, just like boop. And they got to 177. I didn't see that. The rain we had the other day here felt like the rain I used to get when I was in Hawaii when it rained, when it decided to rain. It's just like big old heavy drenching rain, and whenever seldom it rained in Honolulu. Now the north side, they always got a lot more. But on the south side, you get, I forgot what the average rainfall was. It wasn't much. I keep thinking 5-10 inches, but let me see. Oh, I know the north side got a lot more than the south side, and it says the average is 22 inches. There we go, 340. Were you looking at the ones you were in?
Mm-hmm. Yeah, the 5850s.
Yeah. That's what I got right now. Come on, let's go to 10. We got to break to 21 here, or this is an exit idea. You heard him say the 9 earlier? We're at the 21 now, so that's your second. I'm up 110. There we go, 420. Yeah, these can pay off good if this thing keeps going. There's 5.
You just hit the 21 on the 2-minute.
Yeah.
And you're 1 point away from a resistance zone.
Well, I think we're pretty close to it right now on mine. One of them.
I got 58.64.
Yeah, right here. We just broke it. We just hit mine. I'd love to make 2,500 on this trade. Let's break it. $520.
You're at my resistance on the S now.
Now we're at the 50. So you're at 650 here. This is a good enough chunk right here to double your money. But if we break these two resistance levels, that'd be the 58, 50, 40. Right now you hit the 50 SMA on the 1 minute. So it's kind of a hard resistance. Ready, set, go. Tradition.
A lot of people trying to get hold of me.
You're not giving me your number yet.
I'll work on that. You're at 63 on the yes on the 1 minute.
Yep. I'm at 6:30. Oh, I'm hiding my thing. Come on, break to 63. Give me 58.74. That'll be $1,500. I'm just one notch out of the money now. Are you in them?
No, I've already got out.
Yep. Let's break this. This is major resistance. It's the last one. We tried to break it here, here, and now here. So if this thing gets a big fat candle, I'm going to get my 200 EMA. So it's either, it's like Funky says, you know, you're at a resistance level, so make some kind of business decision. I'm going to hold on. I want to try 1,500. I got to make up on one of my trades here. I'm up $500 contract right now. 790, 820, 840. It's hard for me, man. Usually I'm out. But if I can double this, that'd be $3,000. There's 920. Yeah, this thing can really move if it starts to run. $10.90. It's 242. Come on, baby, break. Let's go. Come on. Yeah, I could sell here if I wanted to at 9. I just want to try it. Dang. There's 1,000. You can do it. It's 1020. Give me 1,500. Out at 10. Richard's out at 10. What? S? What you talking about, Willis? There's 1060. Oh God, that was a $100 drop right there. There's no way I could have got that 1060. We have 15 more minutes left. My time limit's about through. And right when I sold it the other day, it jumped another $500. I could be happy with this, but I'm not going to be. Lord, do you remember the time where I had two choices in a steak and I ended up giving the better half to my ex-girlfriend? And I ate the one with all the fat on it? Do you remember that sacrifice I made? I remember, Jim. You wanted to cry? Ooh, I'm still red on the day. Jeez. I don't want to hear that. Two more minutes. Got my finger on the mouse. Well, I think I'll be spending Memorial Weekend here at the pool. It'll probably be very dark come next Tuesday. They tan pretty good in the summertime. I might go weed eat an acre of land too. Buy some gravel and put a shed on it. There we go, 8:10, 8:20. I got 1 minute to my limit. There it is, 10:50 right now. I mean 2:50, 3:50. There's 9:40. Oh, there's a lot of volatility.
Here comes the volatility. Oh,
Yep.
this is about to explode.
Yep. That's what I was just getting ready to say.
She's calling.
Let's see what I get out of the market sell here.
58.65 at 110. We'll see how it works.
People are just pushing the limit right now. All these orders are different.
Let's go push. Get your lazy ass up and run. Yeah, 150, yeah. 155. I'll take that.
You got a triple top here.
$55 a contract?
Yeah, you're.
I'll take that.
Let's see if I can get this past $1,000. My time's starting to run out, though. I got 8 minutes left.
Mm-hmm. Back to support. Yeah, I'm done. I ain't trading these last 8 minutes. That's it.
If you were, this would be the place to jump in, maybe. Or the 50.
Right there. It's pushing out the bottom of a support zone. Might get ugly.
There is the 50. 3 black crows. And you got 6 minutes left. So I don't know. I wouldn't. Maybe, maybe not. If you can handle 2 minutes of hold, but where this market is.
God, what a week.
You know, Richard, a lot of volatility today. I was up a lot this morning. That last one helped, but it's still green, but I mean, jeez. It's sell
I'm
offers.
watching these 5850s go from 250 a contract to 75 a contract.
75 cents.
75 cents in
Yep.
1 week, and then that goes to 250 in a week.
In the money, out of the money. In the money, out of the money.
Mm-hmm.
And it'd be hell to pay to try to sell them and get that.
Yeah.
If you jumped in at 75 and tried to sell at 250 or 150. Now you could probably get out, maybe at 145, but if you sold it at a market, you would have a hard chance. I really wanted to get 3,000 out of that trade, but couldn't do it. Oh, God. Oh, Manny Pacquiao's got a son. His son's bigger than he is.
A minute and a half left, and it's already in an ES zone, so they love to park it in these zones. So I think they just chop it.
2 more minutes left.
Yeah, they're gonna park it right here. So what zone was this? This is last Thursday's pre-market low. Which is also last Monday's high. And is a major pivot point.
The bell's gonna ring shortly. Now these 58.50s are now 5 cents. Ding-a-ling-a-ling, round 1. Well, Funky, appreciate your help all day today.
Yeah, man. Glad I could point some stuff out.
Mm-hmm. I like how you stick to your plan.
I mean, I trust my zones. If you don't trust your zones, you can't have a plan.
Yep. I agree. Here lately I've been trusting my patterns too much. Usually
Stick with what's worked with.
What's that?
I said you stick with what's worked, and yours has worked for a long, long time.
Long time. But here in the last little bit, the sell-offs are unpredictable.
Yeah, that's why I pull up these zones and zoom way the hell out so I can see, how how many days past this next zone is coming. Like when it was nothing, I was like, okay, so what's the next zone? Oh, last Thursday's pre-market high. That's a major pivot point. It's got to stop there.
Yep. That 5-day low zone. Yep, I agree with you. Even farther than that. Sometimes you have to wait and go back 20 days. But we've had a good run. So I don't know. I'm going to get on out of here and relax and go for a little walk.
Y'all take care. I'm going to go run.
Yep. He runs, I walk. I got a little more age on him. I used to run. I just run a lot. But I don't think I can do it anymore. I played softball until I was 50. And I'd kind of tell you something. And the last time I played a triple hitter, I said, that's it. I can't do this no more. I woke up the next 3 days sore from playing a triple hitter. If you know what a triple hitter is, that's 3 games. In one day. One right after another with about a half-hour break. So I quit that. I don't even have my glove. I don't know what happened to my glove. I wish I still had it. I have no clue where it is. It's 16 years ago. So, I'm going to get out of here. It was really, got stuck in them stupid knife today. That was just something else. That sell-off was just, Yesterday's was bad, but today's was worse. It goes bad to worse. I'm gonna go on vacation here. If not in July, it'll be definitely the end of August. I might take one in July too. And then I got to go up to my mom's, and so I might spend a couple of days up there weed eating my land. I want to build a little bitty fort next to my house. A little off-grid fort. Thinking about just getting gravel and sticking a shed on it. Some solar, and hooked it up to my electricity so I can still put a desk in there and trade. And get a satellite. Elon Musk satellite. I'll probably retire from my job at the end of the year. I'm getting tired of it working. I'd love to work, but I'm getting tired of people have changed. Ever since we got more government, that last 4 years, people have changed. So I don't know if I can take it anymore. Just go up there and fish and trade stocks and take vacations about every 2 months. start enjoying change my life around a little bit. Because you never know, one day I might wake up and have a stroke. Not be able to do nothing. So we lost the end of the day run. It was a 50-50 sideways, 20. We had 2 votes going sideways, so I think that's what we'll take. We already went down. So wish everybody a good night tonight, and we'll see you in the morning. Sorry if anybody got stuck in that last trade. There's just no way out of it, I don't think. Not the last one, but the one before, a couple before that. Once you get too far out of the money and you get close to the end of the day, it's hard to rebound.